in any ways, if the longer term horizon is 3 to 5 years, then I think there will be no point of discussion here that whether one should hold this counter or not. Now, talking about the fundamentals of this counter, I believe that Narayana Hrudayalaya, their average revenue per occupied bed is also increasing now. And in fact, we believe that now their top line performance has started showing some sort of improvement. So overall, we are positive on this counter from the longer term perspective. In the shorter term, we may see some sort of hiccups, but in the longer term, yes, it is a good stock to remain invested in because we believe that in fact their revenue guidance as well as average revenue per occupied bed guidance, which is given by the management, is also looking decent to us. Although it was a single digit, but I believe in the longer term, definitely it will post some good set of numbers. So stay invested in this counter.
Got the view, Astha. The next one that's coming is actually a caller from Karnataka, and Anvesh is dialing in for a stock query. Anvesh, a very good morning to you, and welcome to Ask Profit. What's your query?
Hi, good morning. I have a Subira Shores of 25, Subros Limited.
Okay.
So it has been buyed at 1084. So today, I think suddenly it has been down after the result. I think yesterday is the result.
Yeah.
And so after the result today, suddenly it has been dropped to 10%, 10.5% might be, if I'm not wrong.
Yeah. And can you hold?
It's also not so bad. Is there any, any bad news in that, or how it is? Because I am looking for the share for 2 years.
Yeah. Got that, Anvesh. Anvesh, would you be okay with holding the stock for a long term? I know your concern is what's happening with the counter today, and we'll try and address that as well. But can you hold it for a longer term, so I can take this question with Astha as well?
2 years.
2 years. Okay. Astha, let me come to you. And Anvesh, largely the results, as you rightly said, was largely flat on a YY basis, and Astha can come in with a view as well. But it's actually the growth that's something that the market is not liking for this auto ancillary company. But Astha, would you recommend something like a Subros, because the trucks business, the revenue guidance has actually been raised to 200 crores versus 150 crores earlier. Do you have a quick view on something like a Subros, and given this fall from 1084 as a buying price for Anvesh, would you recommend buying more?
So what I believe that yes, results were down, which they have announced yesterday, and there was reason behind it. If I exclude the other income and extraordinary or the exceptional items, then what we see that there is a degrowth in the bottom line, and I think this degrowth is at around 20%, if I'm not wrong with my calculations or number. So there was a degrowth of 30%. That is what I'm saying after I'm excluding all the other income and exceptional items. So if you see the fine prints there, you may not see this sort of degrowth. But if you calculate or exclude them out, then there is a degrowth. And why I'm explaining in detail? Because here the investor is asking and he is really bothered about the results. So this is the major reason what I believe that the counter is not performing well and the markets are not liking. But this is, I think, one-time phenomena. Stay invested in this counter for the longer term, because long term, I believe still there are positive aspects in this counter which may give a good upside from here. Maybe it will take another 1 or 2 months, but again, if the time horizon is more than 3 months, then remain invested in this counter.
Okay, all right. We've got our next question from Srirangam, who's writing us from Tamil Nadu. Sorry, this is J. Srikanth, who's writing us from Srirangam, Tamil Nadu, and wants to know about GE Shipping. He's bought around 1560 shares at the levels of 1135. Wants to know if he can hold it or not. Akshay, thank you so much for, of course, waiting by patiently. What he's saying is that he's, of course, getting regular dividends because he's been holding this counter, but wants to know whether he can now maybe sell off this counter or continue to hold. What's the view like on the charts?
Yeah, first of all, good morning to all. See, the charts of GE Shipping are in a positive uptrend. The momentum has been catching up lately in the last 3 trading sessions, and looking at the prices which are trading well above the short-term moving averages, clearly the stock is trying to come out of the range-bound scenario which it has been trading for long. So I would suggest that there is a strong support building at the levels of 1000. Probably on the technical charts, 1250 and 1300 can be the positional targets from a 2 to 3 month perspective, which you can look forward to. So hold is the suggestion with a stop loss below 1000 for GE Shipping.
All right, so that's the view with regards to where charts are concerned for GE Shipping. But we've got our next caller. Rajesh is calling us from Bengaluru. Rajesh, hi, a very good morning to you. How can we help you today?
Hi, ma'am. Good morning.
Go ahead with your question,
Hello.
Rajesh. I can hear you.
Ma'am, KPIT technology 225 quantity in average price 1233.
Okay.
In a short term in 3 months, ma'am, profit in 10,000 loss, ma'am. Seller road, ma'am, face technical analysis, ma'am.
Okay, Rajesh, got your question. In fact, it did come out with its earnings also yesterday, where this is the 21st quarter where they've seen revenue growth. But Akshay, overall, your view, because he's sitting on a loss of almost 11,000 odd rupees, would you recommend him to continue to hold or book his losses?
Yeah, so what my understanding is the chart of KPIT Technologies is in the process of a possible bottom formation. Although it's too early to call it a bottom, but what the price evidence suggests that there have been multiple attempts in the past 1 year at the levels of 1100, but time and again there is a rebound attempt by the stock. So right now, as we see, 1100 lately has again proved to be a good support. The momentum is slowly catching up, and I would suggest to continue to hold with a conservative price target of 1300 to 1350, considering the broader technical price trend, which is still down. So expecting a recovery rally, 1300, 1350 can be your possible targets. But from a risk reward perspective, you need to define a stop loss, which is below 1100.
Got the view, Akshay. But the other one is also another caller coming in from Kolkata. And Kaushik is dialing in for a stock query. Kaushik, very good morning to you. And welcome to Ask Profit. What's your query? Hi,
Hello?
Kaushik. Yeah, Kaushik, you're audible. Go ahead with your query.
Sir, I have REC Limited 150 shares. Average price is 292. But the price of the share is falling down rapidly. And I have checked that the stock, the fundamental is very good. But still it is coming down rapidly. So I'm just a little worried what to do.
Okay, Kaushik. And Kaushik, can you hold it for a little while? How long have you been holding the stock already, REC?
Yeah, I'm holding almost one and a half years.
1.5 years, okay. Let's quickly pull up the 1 week and 1 month chart also for REC and see, because from Kaushik's buying price, the stock's still up and giving a profit, but we've seen roughly 4 to 5% downtick. And as Kaushik suggested, we've seen some movement on the downtick on the last couple of weeks. Astha, quick view on something like an REC. Would you suggest holding on to Kaushik, who's bought it at 292?
Yes, definitely. I would like to suggest to hold for this counter REC, and my price targets are more than right now, because it is quoting somewhere at around 357. So my price target is at around 400. Now, what I can say that yes, there was a muted loan growth which we have seen in this company, but there were reasons behind it. That the reasons were there were higher prepayments. Although what we have seen is that in fact the net interest margin is also declined. But what I believe is that their growth is a major thing which was soft, but going ahead we believe, and that was the reason that due to the elevated some sort of prepayments etc, and the NIMs have also contracted, but I believe that going ahead due to the decent valuation, now it is quoting at a decent price to book value multiple. So definitely I think there is a scope for the improvement towards the upside of this counter, and hence one should remain invested. Again, my investment horizon is more than 3 to 6 months, and price target can be set at around 400 to 410 odd levels.
All right, so that's the view with regards to where REC stands, but stock, trading at its day's low point as we speak. But as every day, it's time to take a look at the derivative space. What are the derivative markets telling us? Sharad joins us to give us a snapshot of that trade.
Well, interestingly, we see there is a divergence continues between the Sensex and Bankex. Looking at overall initial hour of trade, there has been a downtick coming in and more reds coming in. Earnings impact. Look at the Bajaj twins; they are down in the trade as well. Bharti BL, they are trying to hold up, and Trent also, after we saw an accident happening in yesterday's trade. Now let's look at how the Sensex levels are actually panning out. Currently, we'll see on the downtick almost down, you could say 0.5 odd % in the spot market, and interestingly, the action is much more happening in the put space. If you look at the contracts and the most active ones, especially ranging between these two segments. Also, Bankex numbers, that is also on a significant downtick. Most of the top trades are in the negative. Just keep IndusInd Bank in focus. That's the only outlier here, but we see no support coming from HDFC Bank as well. Let's pull up the contracts, how they are focusing on, and most of the actions are happening in the put segment between these two ranges. Also, apart from this, let's look at the important long build-up which is happening Syngene on back of strong export data. IndusInd Bank, which we spoke about, Moving ahead, short covering in Vodafone Idea after inline set of earnings, and solar industry, a good spike coming in. Stock is up almost 5%. And for long unwinding, we have Indian Bank and Davis Labs. Of course, some long unwinding is happening in other PSU banks as well. And fresh shorts for both the big names today, Bajaj Finance and of course Bajaj Finserv and Britannia also, after important CEO exit coming in. So these are the important buzz coming in the FNO space.
All right, Chad. Thank you so much for bringing us those details with regards to where the FNO space is concerned. But we've got our next question on an important counter, and we've been talking about this throughout the day. In fact, we spoke to the management also. Transformers and Rectifiers India is the one that I'm talking about. The question is, the person has around 120 odd shares bought at 495 a piece, and this is from Shahul, and he's sitting on a loss of around 24,000 odd rupees. He's saying that the day by day the share price has been falling, and how long should he continue to hold? Astha, I'll come to you on this one. Two things, right? The World Bank update that came in, putting allegations on the company saying that they are responsible for corruption, and secondly, this weak Q2 also, the revenue guidance has been cut by 25%. We also spoke to the management, of course, but what is your overall view with regards to where Tardal is concerned?
See, when such type of events happen regarding management, first of all, the guidance, lowering down of the guidance, along with certain events which took place which are not positive for the company, definitely the company share prices take a hit, and this is what we have seen right now also. Now talking about the financial performance also, so there is a set of negative news flow which happened in this counter. First of all, their financial growth was not strong. In fact, they have shown degrowth in their bottom line in the quarter Q2 of FY26. So I think that is major point. Apart from that, revision of the guidance to lower level is a second point. So right now, what my idea here is, try to exit from this counter at every higher level, because there are certain uncertainty which might be not liked by the markets, and this stock can take a more dip on the or a more downside momentum. So my idea here is to exit from this counter at higher levels in case if it happens. Yeah.
Akshay, let me get a quick view from you also on transformers and rectifiers, because we started seeing that the counter was at 10%. It's now down minus 7%. Anyone currently holding the stock, should they exit? Do the charts suggest a further downward momentum?
Yeah, absolutely. So if you're looking from a short-term momentum perspective, clearly the downside is on for transformers and rectifiers. At the levels of 291, there is a lot of liquidation which is evident, and possibly 250 to 75 can be the positional downside. So as the data continues and the trend continues, it's an exit if you're taking a position from short-term in transformers and rectifiers.
Got the view, Akshay. We have another caller now from New Delhi. Gautam dialing in for a stock query. Gautam, a very good morning to you and welcome to Ask Profit. What's your query?
Hi, I hold around 130 shares of Paradeep phosphates at a very high level of 188.
Okay.
Yeah, it's going down ever since I laid my hands on it, and I'd like to know the short-term view. I know it could be a good one for the long-term theme, but I'd like to know the short-term view. Is there any weakness left in it, or is there any resistance levels, or where I can average some?
Got it. Fair point, Gautam. Akshay, would you recommend Paradeep phosphate? Do you see any kind of upward momentum to 188 for Gautam's view?
So technically, see, the trend is down in Paradeep phosphates. What we see in this today's trading session is that the immediate support of around 165, which has been holding for the last 3-4 months, is breaching in intraday trades as of now. The 200-day moving average also has been breached in today's trade. So clearly the setup is negative. Now, possibly what can be the downside was the second question. Then, as if the trend continues as it is, 140 can be the downside for Paradeep phosphates from a short-term perspective. The trend is negative, and in case there were to be any reversals and improvement in the situations, then the minimum criteria is that the stock should regain back above 170. Then we can think about a possible reversal. As of now, the data or the price does not suggest so. So I would suggest it's better to take an exit in the stock.
Well, viewers, it's time for our first round of the rapid fire session. Astha as well as Akshay, I request you to keep your answers on buy, sell or hold so that we can take as many queries as possible. The first one's coming on Epigral. Santosh from Chennai is asking a one-year view. Astha?
Can you repeat the question again? I lost the connection in between.
No, that's all right. Epigral is what? A one-year view on Epigral.
No, hold from my side.
Okay, the next one is on DOM. Sudhir from Dubai wants to know if you can continue to hold from a 2-year perspective. Astha, your view?
Terms from the 2-year perspective is looking good to us. So definitely if the horizon is long term, stay invested in this counter.
NSDL at 1304. Akshay, your view?
It's a hold as at the current rates from a next 2 to 3 month perspective.
Apollo Microsystems is the next one. So Sheila from Bellary has bought at the levels of 197 and 741 shares is what she has. Your view on the charts, Akshay?
Apollo Micro for the short term, it continues to be a hold from a 2 to 3 month perspective.
VIP is the other counter view. Atul has bought at 512. Akshay?
VIP Industries. So VIP Industries is at the support zone of 380. Keep strict stop loss below 375 and continue to hold.
Okay, GMDC is the next one. Venkat has bought at the levels of 430. 3 to 6 months view on the charts, Akshay?
Continues to be a hold. Stop loss below 550. Possible targets around 700.
The next one's on something like Safari Industries, strong Q2 results, and a viewer is asking a long-term view. Astha?
Long-term view is positive on the back of a good quarterly numbers. Stay invested in this counter. Price target can be set at around 2300 to 2400 odd levels.
Okay, Paradeep Phosphates is the next one. Natarajan wants to know if he can continue to hold the counter for the next 45 days. Akshay on the charts?
It's an exit.
Apex Frozen, a 6-month view. Akshay?
Apex Frozen at the current rates, I think it's a hold. There's a strong resistance at 265 which I'm preempting should break, so it's a hold.
Okay, NTPC is the next one. Govind wants to know if he can invest 5 lakh right now. Astha, from a longer term perspective?
Not right now, maybe at the lower level of around 310.
Okay, alright. So that brings us to the end of first rapid fire round with Ask Profit. But viewers, we'll be answering more queries on the other side. So do stay tuned. We'll be right back.
Namaste India. As you all know, I've been traveling around the world with my music. But this one is truly special. Something that's India. From where it all began. The first city of the world, where the Ganga flows. I'm coming to Varanasi to perform at the Namo Ghat. My first raga-based band, Jala, will also perform there. So book your tickets from District app and let's create harmony by the Ganga. See you, Varanasi.
We unveil NDTV Golf Pro-Am, India's #1 golf Pro-Am, the course of champions, the conversation of leaders.
What a stellar lineup we have here on the stage of the NDTV World Summit to announce the launch of the NDTV Pro-Am. Arguably India's greatest cricketer, one of India's most distinguished bureaucrats, a top international golfer and also a top Indian pro at the moment. One administrator who is doing more to lift the profile of Indian golf than anyone has in the recent years.
All the top champions, the Tiger Woods, will all come from India in future.
It's great to be here. Golf is growing across the globe and here in India as well.
Whereas now the opportunities are increasing a lot.
Thank you very much for starting golf. We want to thank
well, that's very sweet of you. Thank you.
I think that's very, very important.
NDTV Profit has come a long ways.
You are the new schools and colleges which people are getting access to education from.
ने बढ़िया आपका काम किया, आपके तो नाम में प्रॉफिट लगा हुआ भाई.
In the world of money and markets, the real currency is clarity.
So you guys democratize information, and I think first you seeded the market, now the market is seeding you back out there.
Decisive, discerning, distinct. NDTV Profit isn't just business news.
We are like visiting faculty occasionally who come and get a chance to share what we can, but I think it's a great service.
It's the new language of markets, and the voices that move markets know it. Understand markets, decode money through the masters who shape them.
I think we are trying to get knowledge.
Welcome back to Ask Profit. We're now being joined by Osho Krishnan, the Chief Manager, Technical and Derivative Research at Angel One. We also have Astha continuing with us as well. But let's straight go into queries. Aether, in terms of the chemical company, is in focus, and Harishri from Vizag has actually invested at 926 rupees per share. Counter currently trading down at 730. And her query is largely if she should wait for a possible increase or exit right now. Osho, would you recommend a trade right now on something like an Aether?
Very good morning. Firstly, yes, no doubt the counter has been into a kind of a sloping trend line, and there has been very strong resistance on the higher end. So there is technically the counter is into a weak position. So I expect the higher momentum in this counter is not looking very close on the technical chart. So better to exit the position at current levels, because technically the counter is already into oversold terrain, and from here onwards there is very bleak chances of having a very decisive upsurge until we see a decisive move beyond the zone of 800, which is nearly 10% from current levels. So till that time, better to switch from the counter to some other chemical space counters for the time.
Okay, all right. So that's with regards to where Aether is concerned. We've got our next question from Ramesh, who's writing us from Dubai. He's purchased 100 odd shares of Happiest Minds at the levels of 722. He's sitting on a loss of over 22,000 rupees. Yes, he is, and wants to know if he can hold from a 1 year perspective or not. Astha, what's the view like?
So from 1 year perspective, definitely he can hold this counter. What we believe that this counter is well poised to move till the level of 570 to 580 odd levels. So at least for those levels, definitely he can hold this counter. Now talking about the fundamental of this counter, although what we have seen that their revenue conversion was not very strong, and there is some industry-wide slowdown which we are seeing in this counter, and that is the major reason that we are seeing that their revenue conversion is not strong, along with some discretionary spending tights were also there. But in the long term, I believe that especially the key vertical, BFSI vertical, will going to perform in the long term. So my idea here is to stay invested in this counter for a long term. Maybe in the short term, we might see not a very strong upside momentum, but long term, we can see levels still 570 to 580. So hold is a recommendation from my side.
Okay, we've got our next caller. Nishad is calling us from Mumbai. Nishad, hi, a very good morning to you. How can we help you today?
Yes, I wanted a long-term view on Ujjivan Small Finance Bank.
Okay.
I'm holding 1,000 shares at 36.
Okay, and what was the thinking behind buying this, Nishad?
I just thought with the rate cuts and the microfinance would get good and all.
Okay, got your question, Nishad. I'll take this up with Astha. And Astha, what's the view like for Ujjivan Small Finance Bank?
Long-term view is quite positive, and there are reasons behind it, because whatever management has given the guidance for FY30 is around 1.8 to 2% of ROA, with 16 to 18% of ROE, which they have given as a guidance, which looks to be very, very good or a strong guidance. So I believe long-term time horizon is definitely a good time horizon for this counter to stay invested in. Initial price target can be set at around 65 odd levels.
Got the view, Astha, and that's on Ujjivan Small Finance Bank. The other counter that's been in retail focus, actually a favorite one to say the least, has been Force Motors. Now, Raj Shekhar from Vijayawada has actually bought it at a slightly elevated level of 20,500, and we can just quickly look at the 1 year chart also, and you'll know what I'm talking about, because the key aspect is that while the stock's down today, down 3%, over the last year or so, it's up 150%. So he's bought it at elevated levels, bought 3 months back at 20,500 and currently sitting on a loss. Osho, let me come to you. Would you suggest that the charts of Force Motors could actually come back to the 20,000 odd levels, or what would you recommend Rajshekhar to do with this counter?
See, currently the counter is into a kind of a consolidation phase, or even we can say it is into a time-wise consolidation zone. So the rally from the zone of 10,000 has been very vertical in the nature, and I expect that in the short to medium term point of view, the counter might see some kind of further continued consolidation. Although there has been a decent retracement on the lower end, the counter have already tested the zone of 15,000, but from here onwards, having a similar kind of move is very difficult. But from a longer term duration, one can stay invested, but it will take some time to gain some strong momentum in the coming period. Spontaneously, it is having a very strong support around the zone of 16,000 to 16,400. On the higher end, 20,000 is the resistance. If it breaches the zone of 20,000, then we can see some kind of momentum coming back in the counter, but it will be advisable to stay invested from a longer term duration.
Okay, stay invested from a longer term duration for Force Motors. But shifting a tad bit, export trends for October are showing a mixed picture across key sectors. Pharma and chemicals see sharp contrasts while industrials stay muted. Let's go across to Varsha for a detailed breakdown. Varsha?
Well, pharma sector is actually reacting to the export data. If I were to talk about the Syngene International, if you see the stock is under pressure the stock is up in trade today because of the strong export data. So if you see exports surged 68% month on month and 263% year on year, and one of the reasons why the stock is up in trade today. While if you see Divi's Lab is under pressure because export decreased 59% month on month and 38% year on year. This is followed by Cohen's Life Sciences, wherein export for the company declined 69% month on month and 33% year on year. While for Blue Jet Healthcare, the export is down month on month but was up 25% year on year. So this was all about pharma. But let's switch back to chemical, wherein if I were to talk about XRF exports is up 0.6% month on month and 68% year on year. While for Navin Fluorine, export is down by 40% month on month and 51% year on year. Do note that Navin Fluorine came out with its number 2 days back, and the numbers were really strong for that counter. Talking about industrials, Dixon Tech export declined 6% month on month, and Cummins India export declined 9% year on year. So altogether, if I were to talk about Syngene, a very good export data, and that's shown in the stock price also. While Divi's Lab is under pressure because of the muted or rather downward export data that the company has seen. So this is overall the export data for pharma, chemicals and industrials.
Okay, Varsha, thank you so much for bringing us those details. Astha, quickly your view on some of these counters. She talked about Dixon, she talked about Divi's Lab, also talked about Syngene. Any of these counters where you think that it makes sense to make an entry right now?
See, Syngene is looking good to us, and what we have seen in this Syngene that it has shown a strong fall, barring today's and yesterday's movement. So I think Syngene has that value left, and hence we are liking Syngene at this point of the time.
Got the view, Astha, but we have another caller from Amchi Mumbai itself. Kiran is dialing in for a stock query. Kiran, very good morning to you. What's your query?
I hold Hyundai Motors around 250 shares.
Okay.
I had entered the stock at the range of around 2,200 or so. And I have a medium to long term perspective on the particular stock. So I wanted to know, should I continue holding or, change to something?
Got that, Kiran. And Kiran, any rationale that you had before choosing Hyundai in your portfolio?
I looked at it comparatively from other automotive stocks, and I also studied a couple of research reports. And given the GST changes that the government brought about in the last couple of months, and I felt that auto stocks could.
Fair point, Kiran. So do you and so in that logic, do you don't have any other auto OEM basically in your portfolio? Any other car maker, right?
We hold Tata Motors.
Tata Motors, okay, got that.
Company, but they are not doing good.
Got it. Asta, let me come to you. Your Hyundai Motors at 2,200 rupees per share. Would you recommend staying invested, adding more at this counter, and your quick view on the stock?
Yes, I would like to recommend add more this on this counter, maybe at the lower levels, and stay invested definitely for the price target of 2,800 to 2,900. Now, talking about the fundamentals of this counter, first of all, they are making strategic investments of around 45,000 crore till FY30. So that will really help in increasing their revenue by 1.5x. In fact, for these companies, new product launches always holds importance. So I believe, if I'm not wrong with my number, 26 new product launches they are planning in the coming years. So that is also, very positive for this company, and they want to make India as a, second place for their global region, because they are a global company. So in fact, their whole focus is towards making India as their, global market, second largest global market. So looking after all these, points, I believe that this counter has potential to move more from here, and hence one can accumulate this counter at the lower level along with stay invested in this counter. Price target can be set at around 2,800 to 2,900.
Okay, all right. So that's with regards to where Hyundai Motors is concerned. The next one is on DAM Capital. This is from Piyusha Kanodia. She intends to invest around 1 lakh rupees in DAM Capital at the current levels of around 236. Yes, the stock is currently trading at the same levels, and wants to know if this is a good time to make an entry or wait for further correction. Osho, what's the view like on the charts?
See, overall in the last 3 trading sessions, the counter has been into a strong correction zone from the zone of 280 towards 235 odd levels. So I expect on the lower end, the momentum to continue near about the zone of 215 to 220, which historically has also provided some kind of consolidation and cushioning to the counter. That can be seen as the support zone, and where one can look for buying opportunity in DAM Capital, but again in a staggered manner. I will advise to start investing in this counter around the zone of 215 in a staggered manner, that if in future there will be any kind of further dip towards the zone of 200, then even one can look to add position. If not, then it is having a kind of a resistance around 260. Any breakout above 260 can provide very strong momentum. So better to look for higher or aggressive investment opportunities above the zone of 260 kind of a zone.
Okay, all right. So that's with regards to where DAM Capital is concerned. We've got our next caller. Venkatesh is calling us from Bengaluru. Venkatesh, hi, a very good morning to you. How can we help you today?
Very good morning, Mahima. First of all, congratulations to your NDTV Profit. You have been doing an excellent job, and I have been following your channel for a long time now.
Thank you so much,
Venkatesh. My query is regarding Indian Oil Corporation.
Okay.
And which I am holding about 250 shares.
Okay.
At the rate of 144.69.
Okay.
It's slightly more than about 1 year now that I have been holding it. And what is the outlook of, the Indian Oil Corporation now? Now I can hold for another about a year or so. Or should I book my profit and go for something else like, maybe on the oil side, HPCL or BPCL.
Okay.
Anything. I would like to have your opinion on that.
Sure, Venkatesh. First of all, thank you so much for your kind words. You've certainly made our day. I'll take this up with Asta then. Asta, he's sitting on profits of around 6,000 rupees, wants to know whether he can book his profits or shift to something like an HPCL or BPCL, or continue to hold for further momentum. What's the view like?
So my idea here is to invest in this counter and continue to hold this counter, because we have seen exceptionally strong performance in the financials. If we see the financials, then the performance was really strong. So on the back of a strong financial performance, we believe that this counter is well poised to move, above the levels of around 190, 180 to 190. These are short-term targets, but it can cross 200 also.
Got the view, Astha, and that's a view on IOC. But the other counter that we have is on Power Grid, and a 7 to 8 month view is what Arjun from Kolkata is asking. And he's not mentioned if he's bought into it, but he's asking if it's the right time to invest in the short term. So let me go back to Osho on this one. Osho, Power Grid, quick view.
See, again, this counter is into a corrective phase, but overall there has been some kind of a strong consolidation in the short term period. So I expect that from here onwards, there is a possibility of some kind of resurgence in the counter. So one can look for buying opportunity, but again in a staggered manner on the higher end 290 to 300 still poses a very strong resistance for the counter. So once it breaches the zone of 300, then from there onwards, one can look for aggressively buying in the counter. For now, 250 or 255 is a very strong support levels. On the higher end, 295 to 300 will be the higher target on immediate basis. So accordingly, one should plan to accumulate further on the dips and try to book or lighten up positions near 295 to 300 zone.
Got the view, Osho. But we have another caller now dialing in from Mumbai again. Veer has a stock query. Veer, very good morning to you. And thanks so much for dialing into Ask Profit this morning. What's your query?
Yeah, I want to know about Rategain Technologies. I wanted to know a long-term view, and also can you give me some price targets?
Sure, Veer. And you bought into this counter some time ago. It's a very recent purchase, given the price is quite close to your buying price as well.
No, I had bought it around December.
Okay, December.
I bought it at 715, then I bought more at 450 and averaged it out at
Averaged it out. And any rationale for specifically entering into Rategain? I know it's a recent company over the last few years has been dominating that space. Any quick view which could help our other viewers as well?
Just a travel thing.
Okay, got it. Astha, on Rategain, it's been a volatile stock down from the highs, but done well for its IPO investors. Do you have a view on Rategain Technologies?
Yes, I do have a view on this because here the viewer or the investor has asked for the price targets also. So first of all, I would like to give the target, and target is somewhere he can set at around 740 odd levels. Now, talking about the fundamentals of this counter, we all know that this company is a global provider of AI powered SaaS, that is SaaS solutions, and that is for travel and hospitality industry. Now, they have got a very strong set of customers with the 3,200 plus customers. And recently they were in the news because they have complete one acquisition of Surya Limited. And now what this Surya is doing, it is a, again, it is a marketing platform for the, travel industry. And with this acquisition, we believe that definitely they will see some strong momentum in their financials going ahead. So this counter is looking good to us. Maybe in the short term we can see some sort of downside momentum, but if the horizon is medium to long term, one can set the price target of 740 and remain invested in this counter.
All right, so that's in regards to where Rategain is concerned. We've got our next question from Siva, who's a senior citizen who's writing us from Bhubaneswar, asking about Bata India. He's bought 200 odd shares at the levels of 1200 and saying that in the last 2 years he's incurred losses after averaging, of course, and wants to know if he can continue to hold or sell. 30,000 is the kind of loss that he's sitting at. Osho, with regards to where charts are concerned for Bata, I mean Q2 itself, has been kind of disappointing despite of the kind of GST update that's come in. But overall, I think Q3 is going to be a better quarter for them. But considering the charts, would you recommend him to continue to hold?
At current levels, the counter has already seen a very strong correction. So at current levels, I won't advise to exit from the counter because now the risk reward is quite favorable for a short-term trader. But again, as the client is an investor, so I will advise to stay invested in the counter because now it is at a very strong oversold position, and from here onwards, some kind of resurgence or recovery can be seen in Bata India. Although I am not having any kind of bullish approach, but expecting that 1300 can be seen as the immediate target in Bata India. And if it breaches the zone of 1300, then again we need to review that whether the strength remains intact or not. But if yes, then from there onwards we can see some kind of bullish traction coming back. But at current levels, it's better to stay invested for a target price of nearly 1300 from short to medium term point of view.
Okay, all right. We've got our next caller. Gopi is calling us from Hyderabad. Gopi, hi, a very good morning to you. How can we help you today?
Hi, madam. Actually, I purchased Sectoral SAGILITY company. That is like it's related to waste recycling company. Yeah, I purchased 22,000 and I purchased around the price is 55.26. Now the price is 50.91. So and should I like hold for a long time or like?
Okay, got your question. Sure, got your question, Gopi. I'll take this up with Astha. Astha, what's your view like on Sagility India?
although they are a healthcare, focused technology service provider to the US health insurers. But what we are liking about this company is that, first of all, their revenue outlook, the growth outlook is very, very strong because they have got a very strong order pipeline. And we believe that this counter is well set to move till the levels of around 60 to 65 in the long term. So these are our long-term targets, not the short-term. Yes, one should remain invested, and even buying is recommended at the lower levels also.
Got the view, Astha. We have another caller actually coming from Mumbai. Vivek has a stock query for us. Vivek, welcome to Ask Profit. What's your query?
Yeah, Astha ji, very good morning to you and to the NDTV team. My question is on Vishal Mega Mart.
Okay.
I am holding this script, and my current price at the holding price is 111. And I wanted to understand the long-term view which Astha ji has on this script, and also what is the kind of price at which I can buy more shares. So there is recent news which was there that this company is going to have an OFS, and also the results are expected today. So I wanted her viewpoint on this.
Sure, Vivek. And congratulations on the profits. You bought it at a very good level, which has given you this profits as well. But Astha, it's a question for you, Vishal Mega Mart. Your view on the stock?
View is positive on.
Yeah, Astha, go ahead.
Yes, view is positive on this counter. Although today, as I think the result date is, we are very near to the result announcement. So I think it's better to wait for the results, but we believe that definitely their result should be a better one. And we are thinking of a stronger same-store sales growth. So idea here is to stay invested in this counter. Now he is talking to add more at the lower level also and at the right levels. So just wait for the results first of all. Then again, dial in and ask your query. Because right now, whatever strategy will be there, we will be giving it after seeing the results. So just hold this counter. Don't make any fresh purchase. And after results, just give a call again.
So that's with regards to where Vishal Mega Mart is concerned. We've got our next question on Chalet Hotels. This is from Jose, who's writing us from Kochi. He's bought 35 odd shares at the levels of 900. Wants to know if he can add more or exit. Osho, what's the view like on the charts for Chalet?
Currently, the counter is below the 200-day exponential moving average, so it will be better not to add at current levels. If the counter gains some kind of stability around the levels of 860 to 870 kind of a zone, then one can look for buying opportunity in the counter. Or if it breaches the zone of 920 on a decisive manner, then one can look to add a position from a short-term perspective. But overall, the counter is into a bullish trend from a broader term time frame, so there is no sign of caution. Any dip towards 870, 860 can be seen as a buying opportunity, and one can stay invested from medium to long-term point of view.
Got the view, Osho. We have another caller coming in from Kerala now. Gigi has a stock query for us. Gigi, very good morning and welcome to Ask Profit. What's your query?
Hi, good morning. I would like to know the medium and long-term perspective of Jupiter wagons. I currently hold some.
Okay. And you bought it at 400 rupees, is that correct, Gigi?
Yes, correct.
And you can hold it for some more time because there is some recovery that will be needing because I can see that you're currently sitting on a loss. So you can hold it for a little while?
Yeah, sure. I can hold it for more than at least a year.
Got it. Astha, do you expect that for Jupiter wagons, the share price can come back to Gigi's buying price of roughly around 400 rupees per share versus the current at 311?
I think so, because today being the result date, because the company is set to announce its numbers today itself, that is of 11th of November. So I think it's better to wait for the numbers and stay invested in this counter. If I talk about the fundamentals seems to be okay for this counter. Now they are just, have a nationwide dealership network also, and whatever they are doing definitely will help the company in expanding. So right now, just wait for the numbers because this is what I can say. Let's wait for the results and then make any sort of move in this counter.
Well, it's time for our second round of the rapid fire session for the Ask Profit, and Osho as well as Astha, you know the drill. Let me first start with Uniparts India. Our viewer Prabhu from Mumbai has bought at 549. Osho, your quick view?
Pardon me, the stock name is?
Uniparts India, Osho. Our viewer has bought at 549. holding roughly 400 shares.
Stay invested. The counter have seen a decent traction and it is into a kind of consolidation. Stay invested. 540 on the higher end is the resistance, and on the downside 470 is a very strong support for the counter.
The next one's something like a Tata Elxsi 7211. Gayatri is bought for a long-term view. Astha.
Long-term view is positive, but the cost price is higher, so try to exit at the higher levels right now, because 7,000 is the cost price and we are setting the price target of 5,500 to 5,800 at the initial level. So just hold it till those levels arrive.
Ashok Leyland, our viewer, has bought at roughly about 120 rupees per share, so definitely sitting on a profit. He's asking if he should book profits right now. Astha?
I think Ashok Leyland is set to move till the levels of 150 to 155. Fundamental seems to be okay. Hold is a recommendation from my side.
JSW Cement, 270 shares at 154. Osho, what would you recommend?
At current levels, the counter is into a steep correction, so better to avoid the counter or exit the counter at current levels. Any breakthrough above 130 can see some kind of momentum, so one can look for buying opportunity again if it breaches the zone of 130, 132.
And the next one, something like a Sonata Software, bought at 410 and a target he wants for next week. Sachin is writing in. Osho, a quick view if you have any.
It is into a very strong consolidation only if it breaches the zone of 385 on a decisive manner, that too on volume base. Then we can see some kind of traction coming back. Immediately 400 to 405 is the resistance, so that will be the immediate target for a time frame of one week.
Got it. Osho as well as Astha, thanks so much for joining us today and giving us your perspective across a whole bunch of stocks, sectors as well as spaces to watch out for. But viewers, that's all the time we have on this edition of Ask Profit. We've managed to answer 40 queries today, but stay tuned. KYC comes up next and we'll see you tomorrow at 10:30. Thanks so much for joining in.
Namaste India. As you all know, I've been traveling around the world with my music. But this one is truly special. Something that's India. From where it all began. The first city of the world, where the Ganga flows. I'm coming to Varanasi to perform at the Namo Ghat. My first raga-based band, Jala, will also perform there. So book your tickets from District app and let's create harmony by the Ganga. See you, Varanasi.
We unveil NDTV Golf Pro-Am, India's #1 golf Pro-Am, the course of champions, the conversation of leaders.
What a stellar lineup we have here on the stage of the NDTV World Summit to announce the launch of the NDTV Pro-Am. Arguably India's greatest cricketer, one of India's most distinguished bureaucrats, a top international golfer and also a top Indian pro at the moment. One administrator who is doing more to lift the profile of Indian golf than anyone has in the recent years.
All the top champions, the Tiger Woods, will all come from India in future.
It's great to be here. Golf is growing across the globe and here in India as well.
Whereas now the opportunities are increasing a lot.
Thank you very much for starting golf. We want to thank
Well, that's very sweet of you. Thank you.
I think that's very, very important.
The NDTV Profit has come a long ways.
You are the new schools and colleges which people are getting access to education from.
ने बढ़िया आपका काम किया, आपके तो नाम में प्रॉफिट लगा हुआ भाई.
In the world of money and markets, the real currency is clarity.
So you guys have democratized information, and I think first you seeded the market, now the market is seeding you back out there.
Decisive, discerning, distinct. NDTV Profit isn't just business news.
We are like visiting faculty occasionally who come and get a chance to share what we can, but I think it's a great service.
It's the new language of markets, and the voices that move markets know it. Understand markets, decode money through the masters who shape them.
I think you're trying to get knowledge to smaller cities and towns, making it simple for retail investors. I think what you're doing is also contributing to the Indian capital markets and Indian economy.
When leaders speak of markets, they speak to NDTV Profit.
The NDTV Profit has come a long way since it was relaunched.
I hope you're watching NDTV Profit a lot.
Absolutely, you can come to my office and you can see.
Neeraj, Tamanna and the entire Profit team is also working super hard on building a world-class financial news product, and therefore it's good that you're watching, and I hope you can see some churn and improvement as well.
No, absolutely. I think the NDTV Profit has come a long way since it was relaunched, and so I'm pretty pleased that what we require for the investor is the correct advice, correct information, and in a right.
Hello and welcome to KYC. I am Sharad Dubey and you are watching KYC at NDTV Profit, and today the company which would be in focus would be Protean Egov, and likely to actually give you a heads up about this company, why we have actually got this company in our special segment, and there are certain questions which we need to ask. The first one being is, will this depressed margins which we are seeing, there will be a turnaround in the coming quarters, or the pressure will still remain there? The second question would be, is the diversification very important going ahead for the company, and will AI help the public stack overall, the digital infra stack which the company claims it is it going to help in the long run? What would be the opportunities for the digital transformation going ahead, especially in emerging economies? When I speak about emerging economies, it's the Asian markets or the African markets, and even the more expansions and acquisitions, since they have a high cash reserve as well. So this is the important questions which we'll be asking. But just to give you a flavor about the company, the overall details. First of all, the company was incorporated in December 1995, an old company, IT-enabled solution companies and e-governance related solutions which the company was offering. Also, let's see what the company actually does. It's the largest issuer of identity, the digital tax identity we call PAN. Interestingly, they have developed citizen-centric e-governance numbers, the solutions coming in, and 21 nationally critical e-governance stacks are there. So we keep on getting newer stacks. Main categories, of course, let's pull up the foundational identity, tax systems and pension systems is something which the company operates in. Digital identity, e-KYC is very important, followed by digital authentication and the e-signature. This is where the company focuses on. But if you look at the PAN business, that is giving the majority of its revenue, you see the company issues fresh PAN cards, also reissues them, and also runs tax information network as well. So you see it's a flywheel coming in the taxation space, and overall they have a market share of 64%. And look at the numbers, that is something to look at, the PAN card numbers, the online PAN verifications, and interestingly they issue 7 to 8 crore PAN card in a year. Let's just see the tax services revenue, how that has panned out, and you see the numbers are humongous for the company's size. It has been on the higher tick, and of course these are the H1 numbers which you are looking at, the slight numbers coming down as well. But let's look at the PAN issuance, how they have panned out. Overall, if you see, that has been on a rising trend, and now you see some kind of a slight degrowth coming in from FY24 to FY25. But the pension services, that is also something to look at. The revenues are been doing well. The social security and the welfare numbers, that has also been on the stronger side. It's a leading market share of almost 97% coming in. Interestingly, if you look at the identity service, overall we had already discussed, it's basically coming on the online PAN segment. And see this, these are the 4 important services coming in. And lastly, the revenue stream wise, where does the company actually get its revenue from? Most importantly, tax services, followed by pension services, lower names coming in this space. But let's go back to the show. There are important rating parameters which we give for our segment, and based on that we give the overall rating. It includes income statement, balance sheet, cash flow, return ratios, and also shareholding, street trade valuation and street coverage. And the first, we could say the first parameter I have picked up is the income statement. Company is also in focus because of its quarterly earnings in the month of September. Those numbers were kind of a decent, kind of a mixed, but let's look at the overall numbers, how they have panned out. They have been doing well. for FY 24-25, the growth did stagnate, and the margins, there was a dip coming in each year itself. So that of course raised concerns in my analysis, and the margin trajectory on the lower side. But the Q2 numbers, at least the revenue front, has been decent. So I have given a neutral rating going ahead for Protean Egov. The second parameter is balance sheet. It's very important to track this parameters, and if you see the cash and bank balance, that is something which I have been watching out for. It has been decent. Not so much of deployment has happened. 130 odd crore of balance is still there, and it's a stable balance sheet. Largely it's a debt free company also. From my side, this will be again a neutral. Nothing very great to see in this balance sheet, but important is the cash flow segment. Cash flow also has 2-3 important components which we track, and this is an asset light business. You could say a tech business. The operating cash flows have been on the upper side. If you compare the FY25 numbers, if you could just show the cash flow numbers, the PAT numbers, that itself has also done well. That's around roughly 93 odd crore rupees. It's stable, but there's a margin which we generally analysts have, that is called a cash flow conversion to PAT, and that is back on the higher side. That's almost 209 odd %. So net, I would give a thumbs up when it comes to the cash flows. The fourth trigger is the return ratios. Return ratios is a cause of concern for me. FY29 to FY22, we saw a significant jump in ROC, which is called return on capital employed. But after that, it has been a downhill for the stock. FY23, the number was 13%, then it came to 11%, and now currently it has come down, you could say, almost below the 10% mark. So that becomes a concern for our analysis, and same thing goes for the ROE numbers also, which is called the return on equity numbers. There was a jump till FY20, but after that it has been on the downtick. So it will be a thumbs down for Protean Egov when it comes to the return ratios when we calculate both ROCE and ROE. Shareholding is very important to track this. Shareholding, if you see the FIs and DIs, they have been actually on a reduction spree. FIs, they held at most 10% stake in March 24, but then see September 25, the recent exchange filing, it's down 8 to below 8% mark, and DIs, that's also significant downtick. Almost 20% of the DI holding has been sold out as well. So the institutions are not giving a thumbs up, and the public shareholders, that has actually increased a lot. It's almost 70% float is held by the public, that is the retail audience. And after that, what happens is the stock, a lot of distribution happens in these stocks if larger hands are not holding these counters, and because of that we of course saw a downtick coming in the stock prices as well. So from shareholding pattern point of view also, I'm giving a thumbs down. Street cred, not much to happen, because we see large hands are leaving the counter, and you could say retail hand is taking in. A 1 month performance, not much, 3% down. 6 month, 32% downtick, and there's a massive share underperformance coming in because of a huge loss of contracts which was earlier announced by the company. So that is something which the street was spooked by. 5-year performance is also nothing much has happened. If you're holding this stock right now also, most likely you are in loss. So it will be very important to actually understand what's the long-term view coming in, and because of that, in our show later on, we will be talking to the management as well as where does this company stand, what happens to the investors or the shareholders or even our viewers going ahead for this counter. So for the street cred segment, I will be giving a big thumbs down in this segment also. Valuations are 7th parameter. So once the prices fall down, valuations do become attractive, provided a company has a good growth trajectory going ahead, and this is something which is a rule of thumb we follow as analysts here. And the EPS numbers, look at that, that's well below the 30 times in FY26. The P also 31 times, 27 times. So largely earlier these trades were between 40 to 45 multiple they used to trade with. Now that significant correction has happened, it is, you could say, in line with some large IT companies as well, but we cannot call this company an IT company. It is somewhat like a platform company, but it has a digital public infra angle to it. So that is something which is important. But yes, the government exposure is on a very high basis as well. So for valuations front, since they have become attractive on stock fall, I will give a thumbs up. Let's give the street coverage. Not much coverage, just 5 analysts are there. but none of them surprisingly have a sell rating. I checked the numbers. The buy, there are 4 calls coming in from analysts, while hold, it's only 1 analyst giving that call. So net, there is an average upside, and the Bloomberg average which we took is 36% for the next 12 odd months. That means there is a good chance that the stock might bounce back. That's what the analyst community is feeling. But from my side also, it will be a strong thumbs up. But before going into the entire setup of Protean Egov, let's ask the management also how things pan out. Let's just revise with you the KYC ratings, how things have panned out for Protean Egov. Their numbers had come, of course, a week ago. And we see largely nothing happening in terms of income statement. The Q2 numbers were decent, but on the bottom line, there was some kind of mix. We've given a neutral to it. Same thing follows for balance sheet, but cash flow, that conversion ratio was good. So I've given a thumbs up for it. But then again, the return ratios, that's the main culprit here. Over the last 4 odd years, we are seeing it's continuously falling. ROCs, ROEs getting impacted. So these are the important ratings which we had given. But the same thing goes for shareholding. Institutional participation is down in this counter. Street cred, nothing much returns coming for the shareholders. So the patience is being tested for this counter. That's why this makes the valuations attractive. And even analysts are bullish because of this. So we have given you the entire criteria how this move has happened. And KYC rating, the final rating, not much to offer right now. Company still needs to prove itself to the markets. 4 out of 10 I have given, 4 out of 8 I have given for the KYC segment. Now, of course, there are some positive points, there are some negative points, but we would like to know directly from the horse's mouth, from the management, where does the company stand and how things move ahead. Of course, the first question we will be wondering, we will be actually joined by the MD and CEO, Mr. Suresh Sethi, for Protean Egov. And sir, a strong growth has been seen in the revenue sequentially. What led to this, and what would be the growth guidance for the tax services and central record keeping services going ahead?
So it has been a good quarter for us. We've shown good growth. So there has been a 19% growth quarter on quarter and a 14% growth year on year sequentially. What has really contributed to this has been, strong performance across some of our businesses. CRA clearly again is showing growth. We have a 12% year-on-year growth clocking in that business. There have been a lot of underlying, tailwinds also with the pension regulator taking up a lot of initiatives and reforms to open up the ecosystem for better pension penetration. In spite of a healthy growth, we still have a huge headroom in that business. What has been especially strong for us also is the fact that our new businesses, for the first time this quarter, have contributed 12% to our overall top line. And this is the first time we've hit a double digit over there, and we expect this to continue, a long time focus of the company to diversify into new areas. The new areas have been strongly led by our, investment into building multiple digital public infrastructure rails across different sectors of the economy, be it insurance and be it, other areas like health, agriculture, digital commerce. And that has contributed. Happy to share that we almost have now an order book of 1,600 CR, which is almost double our annual, revenue top line. And that is contributing well. And there has been good contribution again this quarter from our new businesses.
That's pretty interesting. Suresh mentioned these points, but there are some concerns also which the street has regarding your company. The first question is, of course, the margins. However, they have seen a dip and now in higher teens. What led to this margin pressure, and what would we be looking going ahead?
So see, margin pressures are coming, one, from the fact that there has been a slight change in the revenue mix for this quarter because of the project-led businesses kicking in, which naturally have more project-related margins as compared to the other core businesses. Naturally, we've also set up a subsidiary this last quarter in Dubai. So there have been some expenses to that extent. So there has been a little bit of impact of margin because of these couple of events. But otherwise, we will see better margins as some of the products and SaaS related revenues also start picking in. which is basically the app layer in which we were, contributing and building above the digital layer. To just give the background, as we move into unlocking multiple sectors of the economy, the idea is to again see what can be done in the app layer, where you are talking about consumer and enterprise consumption of those services. And the company has again put investments behind people, teams, technology in building the app layer.
Interesting. Suresh mentioned about the margin growth levers, and this also includes your product and SaaS segments, you could say consumption as well. But company still has sufficient cash balance of around 800 odd crore rupees. Suresh, any kind of deployment or acquisition plans on the anvil?
The share works both ways. One, naturally, it gives us the strength to participate in large projects. And even as I called out the order book earlier, part of the cash gets deployed into funding for these projects, because when you're working in project-led business, there's always a mismatch between investment and return. The other area clearly we've been calling out is looking out at interesting emerging tech opportunities, any businesses which give us either tech edge or they give us market access. So we are looking always on the lookout for those inorganic growth opportunities. And that is where the balance sheet gets used. And last but not the least also is the fact that we've clearly shown intent and have got a few wins in the international markets, which again are largely turnkey projects and which again consume some of these funds. So that's where we are putting the money to good use. And the company continues to remain debt-free with a strong, cash balance with us.
Well, we spoke about international order wins also, but there's a landmark mandate you have won in the domestic markets also. That is the UIDAI landmark mandate coming in, and that's worth 1,370 crore rupees. Now give us some details, give us the flavor. What are the suggested timelines going ahead, and will there be incremental revenue contribution coming from this segment? Please quantify that.
So that's an amazing deal, because first of all, it gives us or places us in a position where Protean becomes the only company today to provide two foundational IDs, be it PAN and now it is Aadhaar. So we are really contributing at the foundational level in building our digital nation. And this mandate, again, is something we've already started working on. We should start seeing our, quarterly revenues coming in the third quarter of this year. But clearly on complete deployment, we see a revenue of 200 crores per annum coming annually in a recurring manner once we have completely, deployed across the mandate we've got for deploying in 188 districts.
That's pretty interesting. The third quarter is something which you'll be looking out for. The bump up will happen from the UIDA order. That's a 1,370 crore order win. And to put in perspective, 1,600 crore is the order book of the company and the revenue is just half of it. So these are the three numbers you should know when you're hearing what the management is stating. But of course, apart from that, speaking of diversification, what's the growth outlook looking like for the new business? What kind of revenue contribution we can expect from this segment going into the future, Suresh?
So definitely, Share, it's a good trajectory for us, and we see this consistently growing, because as we go beyond our core of PAN, pension, and digital identity at the foundational level, we clearly see our diversification into multiple DPIs, playing out. And these are either largely project-led revenues which come in. As we are unlocking this value, we are also building a very strong suite of BFSI products, which are, be it on the API marketplace front, could be products like enabling CKYC filing for financial institutions, and there are other areas which come in as you unlock value across multiple sectors. And other than that, clearly international remains a focus, and our investment in also powering enterprises with infra using our sovereign Protean cloud, be it for our own large scale projects or to enable the industry, are the other areas we see coming in and starting to contribute. So we see this consistent growth and diversification coming through. And we are clearly very glad with the double-digit contribution which has come from these businesses in this quarter itself.
That's pretty interesting. Suresh, AIs have also been the talk of the town, especially with a company which is your digital public stack, as you say. So how will this company benefit from this? Will we see some incremental gains coming in the financials going ahead?
So definitely the answer is yes. If you look at AI, I would say it's become pretty embedded in a lot of our, businesses now. So there is an external, sort of application of AI, because as we look at the various projects we are working on today, one is in building the core tech itself, whether we take our, Sarsai, CKYC revamp, we are looking at Bima Sugam of building the insurance DPI. All these areas today have some element of AI coming in, be it from a deduplication perspective, from a fraud risk management perspective. So these technologies are, AI today is a pretty ambient sort of, technology getting embedded into various workflows and streams. Clearly, the other application of AI is naturally making ourselves more efficient, because as we even, whether it is managing large scale projects, managing CRM, doing internal digitization of services and driving efficiency over there. So AI for us naturally means that we have to make ourselves digital first internally, and we also have to leverage it for the various businesses that we are bidding for. And otherwise, if we look at the application layer, clearly AI does bring the differentiation factor into a lot of the build we do over there.
Interesting, Suresh. AI is the future, but the present is also there, which is important, especially for the global expansion front. So what are the plans for this segment? Any kind of strategic outlook coming in?
So global markets, Sharad, the focus has always been to look at our core, strength and competence in building digital public infrastructure. So we are clearly looking at economies and countries where, the digital rails are at various stage of early evolution. And even if we see the, the government of India and PM's push for, supporting the digital infrastructure for the global south, the focus has been clearly looking at Africa, Southeast Asia, Middle East as of now. We have multiple engagements going. I would like to also share that, out of all the exposure and experience we've had in building digital public infrastructure, we are also taking a DPI in a box approach, which technically means that you are looking at a modular playbook of various digital public goods. And to just, explain it further, you're looking at identity as a DPG, you're looking at payments as a DPG, you're looking at verifiable credentials. When you bring all these together, you are able to put together a workflow or a stream where you are able to create enablement for an entire ecosystem, be it from a discovery perspective, fulfillment perspective. And we are actually using this playbook to create faster implementation, which moves into months rather than years, and you can do quick POCs and you can show value on the ground at a very early stage. Currently, as we reported earlier, we've had 2 wins. So in Morocco, we set up an education DPI. We've had a engagement again working in Ethiopia, and we are currently involved in multiple countries at this stage. And in some cases, there are advanced discussions for getting the mandates.
Interesting, Suresh, but my last question would be on the order book front. You had mentioned earlier 1,600 crores is the number, but I want to dig deep into that. Which sectors, this demand is coming in from, and how the inquiry is coming?
So see, when we look at the entire bouquet of services, we see the focus still coming very closely on identity and BFSI-led infrastructure, which is getting generated. So when we look at our, clearly the large components of this order book, there is the Sarsai KYC, which is again a KYC initiative to make the KYC processes more efficient, and therefore again power the entire BFSI sector using that, be it the capital markets or the regulated entities in the financial services sector. The other area is clearly building the insurance DPI. Insurance, I think if we look at it, the 4 verticals of financial services, insurance, capital markets, pension, and banking. So that is going to be a great initiative because it will connect the insurance sector in a very meaningful way and create efficiencies and unlock value by bringing all intermediaries and the customer at the heart of it. And lastly, Aadhaar again is a project which is a very foundational in nature. So a lot of identity and BFSI-led expansion is happening as we see it.
Well, that's pretty interesting, a BFSI-led expansion coming in. But thank you very much, Suresh, for taking out your time and sharing the growth plans for Protean Egov. And interestingly, it's a KYC-related business and coming to a show which is known as KYC. But if you're tuning in, to give you the entire gist of the conversation over the last half an hour, the three important management takeaways we have taken. The new business revenue, that contribution is expected to go up. It's already jumped from 4% to 12%. Going ahead, the margins might be, on the higher side, especially with the product and the SaaS segments. These segments, when they get their launch in, a higher margin accretion might take place as well. And lastly, the 1370 crore order coming from UIDAI. Now this revenue accretion, that will start kicking in from the third quarter as well, and that's pretty much very much important if we look at the company's growth trajectory, as the stock is already beaten down as well. But that's enough for our show at KYC. Stay tuned to NDTV Profit.
Namaste India. As you all know, I've been traveling around the world with my music. But this one is truly special. Something that's India. From where it all began. The first city of the world, where the Ganga flows. I'm coming to Varanasi to perform at the Namo Ghat. My first raga-based band, Jala, will also perform there. So book your tickets from District app and let's create harmony by the Ganga. See you, Varanasi.
We unveil NDTV Golf Pro-Am, India's #1 golf Pro-Am, the course of champions, the conversation of leaders.
What a stellar lineup we have here on the stage of the NDTV World Summit to announce the launch of the NDTV Pro-Am. Arguably India's greatest cricketer, one of India's most distinguished bureaucrats, a top international golfer and also a top Indian pro at the moment, one administrator who is doing more to lift the profile of Indian golf than anyone has in the recent years.
All the top champions, the Tiger Woods, will all come from India in future.
It's great to be here. Golf is growing across the globe and here in India as well.
Whereas now the opportunities are increasing a lot.
Thank you very much. You're starting golf. We want to thank you.
That's very sweet of you. Thank you.
I think that's very, very important.
The NDTV Profit has come a long way.
You are the new schools and colleges which people are getting access to education from.
ने बढ़िया आपका काम किया, आपके तो नाम में प्रॉफिट लगा हुआ भाई.
In the world of money and markets, the real currency is clarity.
So you guys have democratized information, and I think first you seeded the market, now the market is seeding you back out there.
Decisive, discerning, distinct. NDTV Profit isn't just business news.
We are like visiting faculty occasionally who come and get a chance to share what we can, but I think it's a great service.
It's the new language of markets, and the voices that move markets know it. Understand markets, decode money through the masters who shape them.
I think you're trying to get knowledge to smaller cities and towns, making it simple for retail investors. I think what you're doing is also contributing to the Indian capital markets and Indian economy.
When leaders speak of markets, they speak to NDTV Profit.
The NDTV Profit has come a long way since it was relaunched.
I hope you're watching NDTV Profit a lot.
Absolutely, you can come to my office and you can see.
Neeraj, Tamanna and the entire Profit team is also working super hard on building a world-class financial news product. And therefore, it's good that you're watching, and I hope you can see some churn and improvement as well.
No, absolutely. I think the NDTV Profit has come a long way since it was relaunched. And so I'm pretty pleased that what we require for the investor is a correct advice, correct information, and in a right way.
Home Minister chairs a high-level meeting after a blast in a parked car in Delhi, claims 9 lives. High alert is sounded in the capital. Several states step up surveillance. Benchmarks under pressure today. Nifty falls below 25,500 level. Sensex sheds nearly 300 points. Nifty, PSU Bank, Finance and Realty top laggards, while defense and IT remain resilient. SoftBank defends Lenskart's listing. Managing partner Sumer Juneja tells NDTV Profit that the debut was good given the market uncertainty in India and globally. Says that the new shareholders must see competitive edge of Lenskart. Bajaj Finance second quarter numbers come largely in line with the estimates. Credit costs remain elevated while the NIMs continue to be flat due to passage of GST benefits to the customers. Shares of transformers and rectifiers continue to slide after World Bank debars the company over alleged fraud. Management tells NDTV Profit that the company expects the issue to be sorted out in 6 months to a year. Hello and welcome. You've joined us on Markets at 12. I'm Nisha Poddar and straight to the markets. Looks like Nifty 50 is getting comfortable at 25,500 odd levels. Yesterday was a good day of trade still, but it has given up the 25,600 levels on the flat line with a negative bias. But there is clear weakness in the market. There is red on the screen, except for a few portions that we are really looking at, like IT, defense. These are the resilient areas. When we talk about the Nifty 50 contributors, well, Bharti Airtel, M&M are some of the big gainers. Even some of the PSUs are doing well in trade today, but nothing much to talk about when we talk about the kind of resilience that is shown. Only small pockets are really showing it. But let's take a look at some of the stock specific action that we have been tracking. Lenskart is one of them, holding above 1.5% gain, and it's a flat line there when it comes to a stable gain. Remember that after a weakish listing, this is the line that is getting maintained by Lenskart. So holding in the green is good news for this big new debut. And when we talk about the earnings reaction, Bajaj Finance, that is not seeing any respite in trade at the moment. So keep an eye out on these particular counters. But when we are talking about the big boy debut, that is of Lenskart, this eyewear maker, there was a lot of concern on the valuation. So we spoke exclusively to SoftBank, the largest shareholder investor in Lenskart, and so SoftBank really defends its portfolio company Lenskart's listing. In fact, in an exclusive chat with me, SoftBank's Sumer Juneja has said that first of all, the listing is good according to the large investor on the count of the uncertainty and weakness that is being seen in the markets globally as well as in India. While defending the valuations, argument that has been going on and the social media outrage, Sumer did clarify that there was a good process that was run to really discover these valuations, and it was not Lenskart or Piyush Bansal or the investors who had really imposed this kind of a valuation. While talking about the disconnect in the social media outrage, he did mention that the anchor book and the QIB play placement in the IPO and the subscription and the kind of response that is seen from a large part of investors, that has been a quality book and therefore a disconnect when it comes to the social media narrative. But the learning here, he also said, is that while more IPOs come into the picture from SoftBank's portfolio, now to have social media understanding also in sync with the large investors who fill the book for the subscription, that sync has to be maintained by the companies and that needs to be ensured. Well, we also pose the question of the several companies that have been listed from SoftBank's portfolio in the last few years, and that particular bit again, Sumer had really defended by saying that some of the companies may be trading below their IPO price, but that doesn't mean that they will stay there forever. So these are the words really coming in, clearly defending the valuation argument that has been on in social media. But I would also like to take your attention on the counters and the companies which have come out of SoftBank's portfolio and listed since the year 2021. It's Paytm, Delivery, Policy Bazaar, Ola Electric, First Cry and Swiggy, where majority of them have been trading now in the last 2 to 3 years of listing. They are trading either at par or below the IPO price or the issue price, and that is one thing to be looked out for. Of course, Lenskart showing 1.5% gains from their issue price. So that's the synopsis of where the SoftBank-led IPOs really are performing at the moment, and also looking out for the Lenskart listing, and also the results would be announced. That will be the most important event to watch out for. All right, moving on then, another stocks in news and an important one at that. Bajaj Finance has reported steady growth in its second quarter earnings, though slightly below the street estimates. Now, for the quarter, net interest income came in at 10,785 crore rupees, a 22% jump year on year. And my colleague Sharad joins in with all the details and the research on these numbers. Sharad, looking at the stock, looks like the street is bothered.
Well, it's pretty interesting. The numbers were largely in line, but if you go into the operational numbers, that's where the details lie. And looking at the credit cost, they have been impacting the numbers, and you could see that in the stock price as well. NIMS largely, we see it's largely remaining sequentially flat, and this is because of the passing of the benefit of the GST benefits to the customers as well. A healthy growth coming in from gold loans, car loans and LAP, which is nothing but loan against properties, but the captive two-wheeler and the MSME segment, that has spooked the street because that has weighed in on the asset quality. Company also has revised its AUM guidance downwards. Earlier it was 24 to 25%, now it's down 22 to 23% for FY26, and cost of funds, they have stated that they will remain range bound as well. But the street, of course, is spooked, especially on the asset quality front on the MSME, and that's why there is a negative impact coming in the NBFC and some banking names as well, because a very large player has come out with its numbers and the commentary has been weak on the MSME front.
Right. Thanks, Sharad, for taking us through all those details. Of course, this is one stock on our radar for the day. But of course, AMFI has come out with the mutual fund data. And of course, Alex is joining us to take us through more of that. Alex, we have seen a huge dip in the large cap mutual fund inflow. In fact, all the pockets have seen a dip on a month-on-month basis. But the flexi cap uptake really stands out. Because that's where people have put in their money. But overall, the equity inflow has been lower on a month-on-month basis.
Yeah, you said it. Let's get into some of those numbers, actually. The headline for you is that this is a steady state, and I'll get into why I'm saying that. But first, the overarching number for the mutual fund industry as a whole, you've seen inflows of over 2 lakh crore rupees. A large part of that coming through in the fixed income segment. Now, this is really something that is normal. You have inflows of about 1.6 lakh crore rupees into fixed income mutual funds. And this normally happens at the start of a quarter, October. You had outflows in this month of September of as much as 1.01 lakh crore rupees from fixed income mutual funds. This is a large number of institutional investors that pull money out at the end of the quarter and put money back in at the start of the new quarter. What else? What Nisha was just speaking about with regard to equity inflows, and you look at that in two parts. One is the active equity category, which has seen inflows of about 24,000 crore rupees, 24,700 crore rupees. That compares with 30,420 crore rupees. And so it's absolutely right. You are seeing lower inflows across the board. Something like a multi-cap fund has gotten inflows about 2,500 crore rupees. Large and mid-cap fund, reasonable inflows of about 3,000 crore rupees or thereabouts. Mid-cap as well as small-cap, robust. You can say they are still robust at about 3,800 or 3,400 or thereabouts crore rupees. It's not terrible, especially in a month when you've had new fund offers accounting for about 4,200 crore rupees or thereabouts, compared with the previous month where you've had not too much in the way of inflows, as much as 730 crore rupees coming through in the previous month. So yes, there has been a bit of a deceleration. What the positive is, however, is that gold ETFs have gotten a tremendous inflow, and it's good that people are not going for the digital gold schemes that a lot of people are going out for, and more people are gravitating towards the gold ETFs, because you've had inflows of about 7,740 crore rupees into gold ETFs, and that's more or less comparable with the previous month of about 8,400 crore rupees. And index funds, which is equity index funds primarily, have gotten inflows of close to 2,000 crore rupees. But we've got Mr. R. Shivakumar joining in and to talk about this. He's with Access EMC, of course. He's the head of product and corporate strategy. Mr. Shivakumar, thanks so much for taking the time, and I hope that I've laid the context for the conversation with you. What did you make of the numbers? Because there seems to be a little bit of deceleration in inflows. It still remains more or less steady state. Would you agree?
Absolutely. I think it's holding steady. The flows continue to be very, very strong. We must remember that month of October has fewer working days because of Diwali-related holidays, etc. And people do take a break during these days. So it's not very surprising that you see some amount of deceleration in flow simply because of just the fact that people are off on holiday during a significant part of this month. Having said that, you raised some very important points in the opening remarks. I think while we have seen an overall deceleration in flow, certain subcategories are very, very strong, including categories such as flexi-cap equity. And I think this has been the case for several months now, where we have seen this category being very, very strong, and just shows that investors are not just buying large cap equity, but rather looking to diversify across the portfolio.
It's an important point. The SIP flows data coming through at the gross level at a new record high, 29,530 crore rupees or thereabouts. It seems like what you're saying could well be right, where lump sums are not coming through as they would normally do so, because it was also the festive season. But those SIPs are going strong. Do you take heart from that?
Absolutely. I think the fact that SIP numbers, as you just talked, it's higher than the net inflows. So it just kind of tells you how strong the systematic flows are for the industry. That on a gross, of course, we're looking gross to net, and so there's that caveat to be kept in mind. But just tells you the strength of flows that's coming from retail investors into the equity markets. The other point, of course, of note, again related to the holiday, is I think the fact that on ETF flows, there's a slight deceleration in gold. There's a deceleration that you see in other ETFs. I think all of that relates to the holidays rather than anything else. But yeah, underlying flows trend seems to be very strong.
Right. I mean, you're talking about 7,740 odd crore compared with 8,400 or thereabouts, which is, in the larger scheme of things, Siva, not very much. So therefore, the question to you, are you still seeing buying interest in things like silver and probably you can speak for the industry, but gold and silver? You have had that clarification that was sent out by the Securities and Exchange Board of India about gold schemes. And so therefore, do you anticipate that could move the needle a little further in your favor, gold ETFs?
I think investors who are investing in gold ETFs, I think it's obviously, at the margin, you are seeing new products like these unregulated products. It's good that the regulator is pointing out the risks over there. I'm not sure whether that's going to necessarily move the needle. I think the fact that there is, the prices have gone up a lot, there is, some amount of consolidation, that is more likely to cause some, changes in flows, if anything. Underlying flows trend, as you yourself pointed out, I mean, it's a 5-7% down from the previous month, but that was a record high. So in that sense, those flows remain strong.
Yeah.
The non-gold ETF is where I was saying there's some deceleration, right, from on a month-on-month basis. So the point there is that, yes, I think that is more impacted by the trading days. I think gold has been very strong during the festive season.
Okay. So a couple of things. One, do you anticipate that November will be much stronger if the market remains buoyant? And we saw quite a deceleration in the month of October as well. Actually, no, you saw an increase in the month of October, didn't we? We saw a significant increase in the month of October, and towards the end of the month, you saw a little bit of a deceleration. But having said that, the point that I want to ask you about is the net SIP number. How much attention do you pay to that, Shiva? Because the gross number, a lot of people pay attention to, but cancellations take place as well.
Yeah, cancellations, normal stoppages, that is if you put on an SIP and it stops after, let's say, 12 months or 36 months or whatever the case is, and then redemptions eventually. So while we do obviously care about new SIPs and gross SIP flow, etc., obviously from a industry net flow perspective, it's net that matters, and net SIPs still continue to be very, very strong. So I don't see any deceleration there from an industry perspective. I think the trend that you have seen is that the overall SIP share in the flow, whether that is gross SIP share to gross flow or the net SIP share to net flow, has been rising on average. So that it just leads credence to this whole conversation that it's not just tactical flows which are dominating, lump sum tactical flows which are driving the market, but rather the systematic retail flows which are driving the market. So I think from a market structure perspective, this is very, very welcome. And I think that is something we're still seeing. We don't see any change in that trend, even in the first few days of this month.
Durability of flows is heartening to hear. Mr. Shivakumar, thanks so much for taking the time. Pleasure speaking with you on NDTV Profit. All right, so there you have it. Nisha, for me, the takeaway is that there were new fund offer flows to the extent of about 4,000 crore rupees. So if you remove that from the active equity category, then you're talking about net inflows of about 20,000 crore rupees. And compare that with the last month, which would have been about 29,000 crore rupees. So there has been a deceleration, but with Mr. Shivakumar clearly pointing out that the festive season might have had a bearing on that.
Yes, but Alex, adding to that, there were a lot of IPOs and people may have considered applying for IPO and not put in mutual funds. And the secondary market also looked sluggish with a lot of uncertainty. These two factors could have also played a role.
Just on the point of equity markets, I think we've seen such a sharp deceleration in the month of November so far that I kind of forgot what a month of October was, because it was actually, despite that slide towards the end of October, the second best month in 2025 for the equity market. So bear that in mind.
Right. Thank you so much, Alex, for that. All right. So that was about the AMFI data and mutual fund inflows. On to an important update coming in when it comes to the Delhi blast. That's a top national news for the day. Now, the Prime Minister has vowed to punish those responsible for the conspiracy in the Delhi blast. Listen in to what else he had to say on this particular matter.
आज का दिन भूटान के लिए, भूटान के राज परिवार के लिए और विश्व शांति में विश्वास रखने वाले सभी लोगों के लिए बहुत अहम है। सदियों से भारत और भूटान का संबंध बहुत ही गहन, आत्मीय और सांस्कृतिक नाता रहा है और इसलिए इस महत्वपूर्ण अवसर पर शामिल होना भारत का और मेरा कमिटमेंट था। लेकिन आज मैं यहाँ बहुत भारी मन से आया हूँ। कल शाम दिल्ली में हुई भयावह घटना ने सभी के मन को व्यथित कर दिया है। मैं पीड़ित परिवारों का दुख समझता हूं। आज पूरा देश उनके साथ खड़ा है। मैं कल रात भर इस घटना की जांच में जुटी सभी एजेंसियों के साथ, सभी महत्वपूर्ण लोगों के साथ संपर्क में था, विचार विमर्श चलता था, जानकारियों के तार जोड़े जा रहे थे। हमारी एजेंसियां इस षड्यंत्र की तह तक जाएगी। इसके पीछे के षड्यंत्रकारियों को बख्शा नहीं जाएगा।
All right, a very stern and a clear message coming in from Prime Minister of the country. Narendra Modi stated that the culprits of the Delhi blast will not be spared. All right, moving on then to another important development of the day. BofA has initiated with an overweight rating on Adani Group bonds, and the brokerage has highlighted strong fundamentals and also resilient operations. In fact, our colleague Anushi joins in with all the details of this report. Tell us, Anushi.
Right, Nisha. So strong fundamentals as well as resilient operations is the key takeaway of this note that we are looking at. Now, BofA has initiated an overweight trading on these Adani Group bonds that we are seeing, and this is backed by the kind of operations that the company has had in the last 3 years or so. This funding is intact. This funding access is intact despite the short seller report seen in 2023 and the 2024 US DOJ indictment as well. The report cites that there have been no downgrades across 3 years, and it shows operational strength for the business and a practice of conservative leverage management as well. Even if you look at the systematic risk, they have majorly been contained. So this gives them robust access to both domestic as well as international bonding funding. Active bond buybacks also has shown balance sheet maturity over the course of years that we are looking at. If you just take a look at the Adani bonds, they're still priced at a governance premium despite the rating stability that we have seen. So operating cash flows also would support the kind of trajectory and expansion going forward, along with deleveraging underway. So that is something that we are watching out for. The strong assets and robust cash flows also for Adani issuers is another positive that they have cited in this note. Hence, an overweight trading on these bonds is what we are looking at.
Thanks, Anushi, for getting us all those details. Now on to a stock which is again impacted more because of the top brass mismanagement and the churn. We are talking about Britannia down 4%, and the street is really punishing this particular counter because of the change in the guard. So as the story suggests, CEO Varun Berry has abruptly resigned from the company, ending a 13-year tenure that we have seen. And we are also joined by our colleague Mahima to tell us more about the leadership shake-up at Britannia and what do the markets make of it. Mahima, tell us.
Considering that he'd already mentioned in the recent Q2 con call, indicating that he will be helping Rakshit Hargave with a smooth transition going ahead, it most certainly has come in as a surprise. Now, just to give viewers a brief, like you mentioned, he's been with Britannia for the past 13 years and he's resigned with immediate effect. That is also, the press release did mention that his notice period has been waived off. So with immediate effect, he has resigned as the MD, CEO and Executive Vice Chairman. They've appointed Natarajan Venkatramanan, who's going to take charge as an interim CEO till 15th of December, till Rakshit Hargave actually takes over as MD and CEO. In terms of the recent statement that Varun Berry made in the con call, he did mention that when he was asked, in fact, that how will the role be different for him once Rakshit Hargave takes over, he said that he will not be handling anything directly, but he did say that my job will be to run him in and make sure that he settles down well in his role. So he did mention that he will ensure that there is a smooth transition for Britannia. In terms of what brokerages are kind of making of this news update. Morgan Stanley has maintained equal weight with a target price of 5469. They've said that he's also resigned from another Wadia Group entity of Bombay Dyeing, but board remains confident that the company can attain new heights under the new management team. Investec has also maintained buy with a target price of 6702. One very sudden exit just 5 days after the call has come in as a surprise is what they mentioned in the report, and they said that they would have ideally expected a smoother transition, but overall fundamentals for Britannia remain intact according to them. In fact, for viewers' reference, what he exactly mentioned in the con call, we've tried to cut that, so listen into a slice of that conversation.
All right, thanks so much, Mahima, for joining us. And yes, the leadership gap that is created in Britannia and the sudden exit of Varun Berry having a bearing on that particular counter. Completely out of time on this edition of Markets at 12, but do keep it with NDTV Profit. Thanks so much.
Namaste India. As you all know, I've been traveling around the world with my music. But this one is truly special. Something that's India. From where it all began. The first city of the world, where the Ganga flows. I'm coming to Varanasi to perform at the Namo Ghat. My first raga-based band, Jala, will also perform there. So book your tickets from District app and let's create harmony by the Ganga. See you, Varanasi.
We unveil NDTV Golf Pro-Am, India's #1 Golf Pro-Am, the course of champions, the conversation of leaders.
What a stellar lineup we have here on the stage of the NDTV World Summit to announce the launch of the NDTV Pro-Am. Arguably India's greatest cricketer, one of India's most distinguished bureaucrats, a top international golfer and also a top Indian pro at the moment. One administrator who is doing more to lift the profile of Indian golf than anyone has in the recent years.
All the top champions, the Tiger Woods, will all come from India in future.
It's great to be here. Golf is growing across the globe and here in India as well.
Whereas now the opportunities are increasing a lot.
Thank you very much. You're starting golf. We want to thank you.
That's very sweet of you. Thank you.
I think that's very, very important.
The NDTV Profit has come a long way.
You are the new schools and colleges which people are getting access to education from.
नहीं बढ़िया आपका काम क्या आपके तो नाम में प्रॉफिट लगा हुआ भाई.
In the world of money and markets, the real currency is clarity.
So you guys democratize information, and I think first you seeded the market, now the market is seeding you back out there.
Decisive, discerning, distinct. NDTV Profit isn't just business news.
We are like visiting faculty occasionally who come and get a chance to share what we can, but I think it's a great service.
It's the new language of markets, and the voices that move markets know it. Understand markets, decode money through the masters who shape them.
I think you're trying to get knowledge to smaller cities and towns, making it simple for retail investors. I think what you're doing is also contributing to the Indian capital markets and Indian economy.
When leaders speak of markets, they speak to NDTV Profit.
The NDTV Profit has come a long way since it was relaunched.
I hope you're watching NDTV Profit a lot.
Absolutely, you can come to my office and you can see.
Neeraj, Tamanna and the entire Profit team is also working super hard on building a world-class financial news product. And therefore, it's good that you're watching, and I hope you can see some churn and improvement as well.
No, absolutely. I think the NDTV Profit has come a long way since it was relaunched. And so I'm pretty pleased that what we require for the investor is the correct advice, correct information, and in a right way.
NDTV Good Times is something that we're supreme.
Hello and welcome. You're watching Profit Buzzers right here on NDTV Profit. My name is Puneet Zaveri. With me is Anushi Vakharia. And over the next hour or so, we'll give you each company, each stock, as well as each story that you need to now have on your radar. Before we go and deep dive into all of those, also guest view as well on all of those stocks and queries. We'll go across and look at first how the markets are doing, because it's been a day where we've been choppy and changey to say the least in a way, because again, we are back above the 25,576 markets, bang on the number essentially that we closed in yesterday's trading session, and it becomes a very interesting session over the next 3 hours or so, because while we closed above the 25,500 mark yesterday, we gave up almost 70 to 80 points in terms of gains. So it'll be very, very interesting as to what happens on the ending of today's trading session. If you look at quickly the Nifty heat map, you will see that Bajaj Finance is definitely the one that's dragging the Nifty down today. On the back of their quarterly earnings, they have reported a cut essentially in the AUM growth targets, and that's having an impact on that stock, along with something like a Bajaj Finserv as well, which has a 62% holding in Bajaj Finance. So you are seeing that impact on that stock. The OMCs have been in focus today. We've discussed about it in the morning, seeing a negative impact as well. Something like an Interglobe Aviation has actually quietly become the top Nifty gainer for today, up almost 2.3%. Something like BEL is continuing the positive momentum from yesterday as well that it got from HAL in terms of getting those engines from GE as well. So that's a key positive. When you look at the advanced decline ratio, you'll see the story, and essentially in one plate you'll get to know what's happening with the markets, because while we did start off very close to each other, the declines have comfortably taken the lead, while there are some key stocks which are buzzing on the back of quarterly results amongst others. That's given a positive momentum. When you look at the mid cap and the small cap, mid cap has been performing very well for the markets, giving some comfort, but today seeing some sell off, and now it's back in the green, so that's a key positive. We'll continue to monitor that, while the small cap continues to be on the downtick as well. And finally, the BSE 500, that's the other last plate I want to just quickly talk about, because a lot of individual movers that are in focus. Polymed is one of the biggest gains today. Graphite India as well as HEG also you see in that list in the top of gains. Something like an ESAB is also up almost 9.9%. Craftsman Automation, not so good numbers, but better commentary is what's driving the positive momentum. While on the other side, the Bajaj Twins, HLE Glasgow taking a beating in trade today, down 16% in trade. Krishna Institute of Medical Science has been continuing its downtrend post quarterly results. But let's put the focus back on Bajaj Finance. It has reported a steady growth in its Q2 earnings, though the guidance cut essentially is having a straight hamper on the expenses stock, to say the least. And to talk more and discuss about this, my colleague Vansh is now joining in to give us all of those details and more. Vansh, over to you.
Thank you for that, Puneet. So if we talk about the Q2 numbers, they were largely in line, but what's disappointing the street is the management commentary. If you look at the guidance, they have revised the AUM growth guidance from that 24 to 25% mark to that 22 to 23% mark for FY26. In terms of, if you look at the credit cost, they have also guided that the credit cost is expected to remain at the upper end of the guidance of 1.85 to 1.95% as well. And also, if you look at the MSME, they have guided that they will be reducing the exposure of MSMEs by 25%. So we can expect a miss on that high margin segment as well. Also, if we look at the MSME growth, they have guided for a 10 to 12% modest growth in the MSME segment for FY26 as well. If we look at the key takeaways from the earnings, what we saw that the gold loan against property saw healthy growth in the Q2, but in terms of asset quality, now the pressure was coming in from the captive two-wheeler segment, and that captive two-wheeler segment that has continued to weigh on the asset quality for Bajaj Finance as well. Also, if you look at the financials now, NII net profit was up by 22%. AUM growth was healthy at 24% at 4.62 lakh crores as well. Also, if you look at the asset quality, it has inched up sequentially, both in terms of gross NPAs and NPAs. But all in all, inline set of numbers, but it's the management committee that is disappointing the street for Bajaj Finance as well.
Okay, so well, thank you for that, Vansh. So that's the overall take that we have for Bajaj Finance. But let me welcome our guest for today, Prashant Tapse, Senior Vice President of Research Analyst of Mehta Equities, joins us. Hello, and thank you so much for taking out your time once again, Prashant. So let me start off with, the overall summary that Vansh was giving on Bajaj Finance. What is your take on this particular counter? We are seeing both Bajaj Finance as well as Bajaj Finserv down about 6% in trade today.
I think the markets are already sensing some kind of pressure in the NBFC as a sector. Obviously, the leader who is having almost 6 lakh crore as a market cap will see some kind of pressure. Again, the guidance from the management, which was almost like a 100-200 bips lower guidance from the last quarter, did disappoint the market or the investors, that is keeping the stock very much in the pressure. Again, if you see the gross NPA as well as the net NPA, it has been almost like 10 quarters high. Gross NPA is about 1.24%, and last quarter it was 1.08. So there is some kind of asset quality concern also, which is keeping investors, long-term investors, a concern on that. So I think the stock is clearly showing that kind of weaknesses. So obviously the trend will continue, being the leader in the industry, and even the industry is seeking some kind of pressure. So overall the target would be around 950 levels on technical levels.
Okay, well, so that's the view for Bajaj Finance that we have for you. But another stock in focus is Car Trade Tech now. And here it's in focus on the back of confirmation of news that it is in discussion with Car Dekho for consolidation. But Puneet, you track this space closely. What does this mean for the company? And even in terms of, the outlook that they've given, what do you make of this?
Well, it's, as you rightly said, it's just confirmation of discussions right now. But it's, two big brands that are currently talking to each other in terms of the automotive classified space. So when I talk about Car Trade, it's very well known in terms of the brands they operate. Carwale as well as BikeWale.com is what they operate. And they are in discussions with Car Dekho, which is a private company, operates Car Dekho as well as BikeDekho.com. So there are multiple synergies as well as an opportunity to consolidate in the industry for both of these peers. Now, for Car Trade, you did see a positive reaction earlier, and then you started to see that downtick, probably given in terms of what the valuations could be for Car Dekho. Now, Girna Software is, of course, the parent company of Car Dekho, which houses both of these entities. And what's interesting is that Car Trade actually has continuously said in their exchange filing that they continually evaluate multiple strategic opportunities for consolidation, and mentioned that what's also interesting that they highlighted that for Car Dekho specifically, they are only in talks for the automotive classified business, which essentially will be Car Dekho as well as BikeDekho.com. It won't involve the insurance amongst other verticals that Girnar essentially houses as well. So that's a key clarification coming in. At this stage, there's no binding agreement that has been signed between both those companies. But another key aspect to look is how would Car Trade actually fund this acquisition, because they have 1,000 odd crores in terms of cash balance as of September. Overall market cap is 14,000 crores for the company, but for Car Dekho specifically, the last round was at $1.2 billion in 2021. So we will be continuing to monitor this key aspect, but definitely a stock to watch on your radar. Prashant, any quick view that you have on something like a Car Trade? It's a stock that's done very well for its investors in the last 1 year. Would you recommend, if someone's already holding the stock, to book some profits or wait for some better news flows as well? Because the results have been quite strong for the company.
I think one should consider quarter-on-quarter reporting numbers, which is very strong to say. So that is why stock is performing well from last at least by 2-3 quarters. So I think I will advise the investors to continue to hold this stock for at least for next 1 year with a good, decent upside from the current levels. When the news comes out about car wale, I think it's a good synergy for car trade. But again, the valuation when we see car wale, I think there is a huge loss in the books of that business in the retail carwale.com. So I think that would be a concern for the investors. If that acts a concern, I think there will be a good selling pressure seen in the stock. So long-term investors continue to hold. If there is a risk of this carwale, I think they should have a good profit booking attempt very soon.
Let's talk about transformers and rectifiers now. If you just pull up that stock right now, we are looking at cuts of over 8%. Yesterday, we saw that the stock was locked in an lower circuit of 20% as well. And this was an account of World Bank debarring it from any of its financing projects that we are looking at. Apart from that, the company also posted its second quarter numbers, which were on the weaker side. Now, firstly, the main concern, however, remained on World Bank debarring the company from any of its financing related projects. So just commenting on the same, the company came out with a note as well. In fact, we had a chat with the management as well, wherein they have said that, current order pipeline, or which is of roughly around 18,700 crore or so, or even the current order book of around 5,500 crore, none of these orders are linked to World Bank in any manner. So there would be no material impact as such, even in terms of the allegations which are there in terms of fraudulent practices carried out in Nigeria related to this. Do note that they had about $24 million worth of order from there, which was completed 4 years ago, and the final delivery was in FY25 end is what we saw. They say that they had no material impact or any of such, and they are strongly contesting to it is what we are looking at. Apart from that, so that was on the World Bank piece that we are looking at. But coming to the second quarter results also, it was a bumpy quarter to say the least. We did see about a revenue downtick of around 0.3% or odd. So also even there was a margin contraction. This was on account of prolonged monsoons. Along with that, even deliveries, there were a couple of delays on that front also because of shortage of raw materials. So a lot of headwinds that we've seen in this particular counter. In fact, we spoke to Transformers and Rectifiers Group CFO Chanchal Rajura earlier as well about the World Bank allegations. Listen into what all he had to say.
We were also surprised when we got this letter on 4th of November from World Bank. Basically, in 2020, we had done a project with Nigeria, right? And we were part of basically a bigger project which was funded by the World Bank, and our contribution was around $24 million, right? And we had supplied all the transformers, and we have received the payment also, right? And we were actually taken aback with this, why this has come up into to us, right? There were some issues with this order on a border level. And then World Bank has last wrote us in 2023 that there are certain changes we wanted to see that is happening in the company or not regarding the corporate practice and us. And we told them anytime you are welcome if you want to see anything. They did it this as per our information, they did it with all the companies which were involved in this particular project. And after that we never heard anything about from them. So suddenly this has come up. So we are taking up with the World Bank very strongly that why this has come up to us.
No, but the allegation is alleged corruption and fraud. So corporate governance is a different thing. It's not about issues with the order. The allegation of corruption and fraud. Where do you think that would have come from?
No, we don't know, because we were not at all involved in any kind of these things, and we are very, very clear from corporate practices in our side that we don't tolerate these kind of things if anything comes up.
What is the mechanism you have to challenge this?
We have already mechanisms in place, and we are taking it up on that, and at every level there are the controls in our companies in place. Look, understand, if the processes and the governance is not in the company, we cannot be the first company in this country to declare the results in 8 days time, which takes a great amount of energy and great amount of work involved into that.
But specifically on this Nigeria project, you said that it's from 2020. When was it completed?
Look, this project was completed in 2022. Okay. Right, we got the 90% payments of the entire transactions in 2022, and last 3 transformers which we sent them, they were toppled in the port. So we have to basically make the new transformers and send them, which we did in 2023-24, right? And the payment of the balance 10% we received in this year in April itself. So, understand one thing, had anything was there related to us or our practices or ethics, World Bank would have not released this payment to us.
Okay, so that was the management of Transformers and Rectifiers India. They continue to maintain their stance that they had no such wrong practices as alleged by the World Bank is what we are looking at. But Prashant, let me come to you on this particular counter. While the impact on business operations is minimal as per what the management had to say, the question arises in terms of future order inflows going forward. Plus, with a 30% dip that we've seen in the last 2 sessions, is it a good opportunity to buy this particular counter now? What is your view?
I think with the fundamental view of transformer and rectifier, with a correction of 30% would be a great opportunity for an investor as a long-term view. But whenever a company gets a allegation letter with respect to fraud and governance issue, I think there will be a lot of pressure on the company's governance, and a lot of other funds will also rethink about this case. So there will be more selling pressure going forward. I think we have to wait and watch for more corrections. I think another 15-20% correction can be a sort of risky start to accumulate the stock. But overall, if you see, there is no meaningful impact of the notice which they have got it from the World Bank for a new order. So that will be a great opportunity. But I will be waiting and watching.
The numbers that were flashing on the bottom of the screen just a couple of minutes before was Bharat Forge. It's a key one that we are marking out right now. In terms of consolidated business, the revenue is up 9.3% for the counter. Roughly margins have increased 12%, subsequently 18% is what they've reported in Q2. What's also interesting is on the standalone basis, it seems to be a miss. That is the forging business. So we are flashing, of course, the consolidated numbers 18% versus 17.5%, and that's largely in terms of the defense business amongst others that's get consolidated with the company. But in terms of the forging business, they reported a profit of 1,900 crores versus 2,200 crores, and hence it seems to be a miss. The conference call is scheduled at 3:30 today, so we'll get you a lot more perspective on this as well as what brokerages make out of it. But largely, it has been a tough quarter for the company. US tariffs as well as the weaker demand for Class 8 truck orders are the 2 key reasons that's been hampering the business in terms of forging as well as castings. Europe as a area has been one of the growth ones for the company. So we'll try and get more perspective on this, and of course a management conversation scheduled tomorrow as well. So stay tuned to NDTV Profit for that. But Prashant, a quick view that you have on something like a Bharat Forge, something like a Ramakrishna Forging. Is there anything you like in that space?
I think both spaces are very much in action, but again, Bharat Forge will be under pressure. I think you rightly pointed out with respect to the tariff, which will be a concern for the new order books, which is going to come in very soon. So I think we have to wait and watch for a clarity on the tariff rather than the numbers. The numbers are very much neutral. I will see it from a quarter-on-quarter basis. The numbers are very much flat, but again, margins are also intact. So wait and watch for more clarity on the tariff. Then only we can take a good call on this forging business.
So that's Bharat Forge. Currently, we're looking at an uptick of around 0.8% or odd. So, but let's talk about an interesting brokerage note that came out, and this is BofA, which has initiated overweight tradings on Adani Group bonds as we speak. Now, they have cited strong fundamentals amongst resilient operations is what we are looking at. And this is on the back of the funding access, which has remained on the strongest side, despite the 2023 report, which had come out along with the US 2024 indictment as well. They have cited that there have been no downgrades across 3 years, which shows operational strength for the business. Along with that, even the leverage management practice that has remained on the conservative side. Along with that, if you just look at what the company has done, they have been active in terms of where the bond buybacks have been concerned. So that continues to show balance sheet strength as well. Even in terms of cash flows, that has continued to be on a positive side for the company. They say that strong assets will anchor these robust cash flows as we speak for Adani issuers going forward. So that's the overall take on Adani Group bonds also that we have for you, right, Puneet?
Well, and that's largely one of the key positive, right? In a couple of points that they mentioned, that the operational cash flows is continuing to support the expansion as well as the deleveraging of the group and continuous bond buybacks. I think those are the two key highlights that's coming out from this report, amongst others mentioned by BofA as well. But let's quickly pull up something like a Syrma SGS as well. That's another key counter. And you will see, a stellar reaction post earnings. We also had a chance to speak to the management today. Let's quickly pull up the stock first, very quickly, see if it's continuing the momentum. Seen some sell-off from the 8 to 9% that we saw roughly around at 11 to 12 p.m. But stellar quarterly results for the company. Margins have actually beaten estimates by more than almost 10%. And what they anticipate in terms of performance going forward is $1 billion in revenue by FY28, and that's coming straight from Jasbir Singh Gujral. He's the company's managing director and spoke to us and NDTV Profit exclusively on this key comment. Listen into what he had to say.
FY26, we stick to about 30% of growth, but the orders which we have in hand, we have tied up some onboarded major global customers which have a potential of giving us $100 million of revenue next year. There are 8 major customers cutting across verticals: industrial, automotive, communication, power management. We have also signed what you call framework contracts with a couple of our existing global customers, which have a potential of giving 250 million revenue over the next 2 to 3 years. So based on this, we are very confident next year would be much better than this year in terms of all the parameters. I think FY28, we should be closer to $1 billion. FY28-29, we should be closer to $1 billion.
Prashant, very quickly, do you have a quick view in the EMS space? Any top picks, and is Syrma one of them?
Syrma would be a one stock. One should focus more on the EMS segment. Very positive on that, and the way how management has guided us for a $1 billion revenue for next 2 to 3 years. So I think that is giving a lot of visibility for investors to have a long-term outlook. Again, in the results, obviously, yes, the results were really uptick in terms of EBITDA margin improvement as well as on the cost optimization as well as on the bottom line improvement. So overall, very positive on this thing and then for the long-term investment.
And the other counter that's actually in focus, a retail favorite to say the least, is Vodafone Idea. Now, Q2 numbers largely in line with the expectations. Stocks almost up 7.5%. Since there was a modest improvement in revenue as well as net loss, but challenges around debt as well as subscriber retention continue to weigh down on the stock, at least not for today, but in the longer term. But let's get in Somit to get us all of this perspective and more. Somit, over to you.
If you look at the second quarter numbers for Vodafone Idea, they were pretty much in line with what the street was estimating. Revenue was up around 1.5%. EBITDA was also up by similar percentage. Margins came in at close to 41.9%, while the net loss for the company on a quarter-on-quarter basis did come down from around 6,600 crore to close to 5,500 crore rupees. ARPU that increased by, blended ARPU that increased by 2 rupees per user per month to around 167 rupees, while the total subscriber base that has declined yet again, and that number has come in at close to 19.67 crore as against 19.77 crore that we had seen in the previous quarter. Now ARPU growth, sequential ARPU growth was largely on the back of one extra day in the second quarter. If you remove that, then ARPUs were largely flat on a sequential basis. If you look at the net debt, that increased to close to 1.96 lakh crore rupees, and this is for the 31st consecutive quarter where the company has reported a net loss, and the total cumulative net loss over the last 31 consecutive quarters is close to 2.15 lakh crore rupees for Vodafone Idea. If you compare Vodafone Idea performance with that of Bharti Airtel and Reliance Jio, the performance was a bit muted compared to what peer companies have reported on a sequential basis in the second quarter. But the company will be holding a conference call today at around 2:30, and that is the most important thing to track, because the street is expecting some positive commentary to come in from the management side on the AGR due. So that is the most important thing to track from Vodafone Idea conference call today, that what is the amount that they're expecting could be waived off by the government side on AGR dues, what is the potential timeline regarding the same, and what is the fundraise plan, be it equity or debt. What are their plans going forward would be important to track from Vodafone Idea conference call today at 2:30.
Well, thanks so much for that, Somit, and we'll of course await some key updates coming from you at that time from the conference call as well. But stocks definitely flying in trade today. Prashant, it's definitely one that all retail investors keep a track of. Between something like an Airtel, would you continue to prefer the latter? Any view that you have, and what should we watch out for actually in terms of Vodafone Idea, because there's been multiple key updates coming in terms of a hearing from the Supreme Court itself. So is there a bet that you would want to take right now?
Obviously, yes, a decent risky investors can have a decent bet on this company. We have seen last 2-3 months, there have been a lot of Supreme Court updates with respect to their AGR waiving of mechanisms. So I think that will keep. And there are some news also saying that the government is trying to help Vodafone to sustain its business at these levels and then continue to live for longer term. So I think with this sound positive, optimistic view from the government support, I think the stock is doing really great. And even if you see the numbers, I think after a long time, after 10-15 quarters, there have been a downtick in terms of losses. So they have reduced their losses by at least 1,000 crores. So that is a good positive thing. That is why the prices are getting rewarded today. But overall, I think there is a slight downside in terms of losing customers. But I think the investments in the 5G is getting some kind of reward to the consumers right now. But overall, very strong. Little bit of risk because obviously we have seen the Supreme Court orders by delaying the dates of settlement. So I think that will keep on keeping the pressure on the prices. But again, very positive. Investors should have a positive session for at least for next 6 months from the current levels.
Got that view, and that's Prashant's view on Vodafone Idea. But another counter, and it's earnings season galore to say the least, is Garden Reach. Let's put up the stock, see how that counter is doing. Momentum has continued throughout the day, up 4% almost right now. And that's largely on the back of the quarterly earnings. We had a conversation with the management, listen into what they had to say actually about the company's expansion plans, and then we'll get you Prashant's view as well. Listen in.
Our shipbuilding capacity initially was 20, which we increased to 24 during 2023-24. Currently, our shipbuilding capacity is for concurrent construction of 28 platforms. With the ongoing modernization, we intend increasing this capacity to 32 ships by 2026. But still, this will not be enough. So we are going for brownfield expansion as well as greenfield expansion. Brownfield expansion within West Bengal at 3 locations. The DPR is already ready, and we are moving ahead in a fashion so that the capacity gets augmented to 40 ships in the next 4 years. In addition to the brownfield expansion, we are also looking at a greenfield facility in the West Coast. So all put together, we have been systematically increasing our capacity, and we will be ready in another 4 years to take on platforms which currently we are not able to take on. That means platforms above 300 meters length.
Prashant, in the shipbuilding space, and it's come back in focus after a little while. Something like a Garden Reach, something like a Cochin Shipyard. Anything you like in that space?
Hexagon would be a right pick for me, but when we talk about the Garden Reach, again, they have successfully maintained to increase their EBITDA margins by 100 basis points on a year-on-year basis, and even they have maintained a 9% EBITDA margin on a quarter-on-quarter basis, which is actually rewarding the shareholders, because there was some concerns with respect to execution and all, and concerns about new order books. So the way how government is focusing more on the shipbuilding and even thinking of export opportunity for these companies. So Garden Reach obviously is a right candidate, but I prefer a Mazagon Dock would be a great opportunity for an investor.
And viewers, you are seeing those flashes coming on the bottom of the screen. We spoke about Bharat Forge, the consolidated results, but standalone was a miss. And there's some key commentary coming in from the management as well that largely inventory destocking in North America, Class 8 trucks has been one of the key aspects. And because of that, they've seen a sharp deceleration in the traditional standalone business, which includes forging amongst others. So that has been a hamper, while the India business has continued to do well in terms of defense as well as aerospace amongst others. So there's a lot of key aspects you need to watch out for Bharat Forge. While the results on a consolidated did look good, you're seeing the stocks now back in red, probably because of this reason which we highlighted as well. On a standalone basis, the decline of almost 16% in revenues will have a hamper on the stock. But we'll take a very, very short break. A lot more stocks as well as stories on the other side to discuss. Stay tuned to NDTV Profit.
Namaste India. As you all know, I've been traveling around the world with my music. But this one is truly special. Something that's India. From where it all began. The first city of the world, where the Ganga flows. I'm coming to Varanasi to perform at the Namo Ghat. My first raga-based band, Jala, will also perform there. So book your tickets from District app and let's create harmony by the Ganga. See you, Varanasi.
We unveil NDTV Golf Pro-Am, India's #1 Golf Pro-Am, the course of champions, the conversation of leaders.
What a stellar lineup we have here on the stage of the NDTV World Summit to announce the launch of the NDTV Pro-Am. Arguably India's greatest cricketer, one of India's most distinguished bureaucrats, a top international golfer and also a top Indian pro at the moment. One administrator who is doing more to lift the profile of Indian golf than anyone has in recent years.
All the top champions, the Tiger Woods, will all come from India in future.
It's great to be here. Golf is growing across the globe and here in India as well.
Whereas now the opportunities are increasing a lot.
Thank you very much. You're starting golf. We want to thank you.
That's very sweet of you. Thank you.
I think that's very, very important.
The NDTV Profit has come a long way.
You are the new schools and colleges which people are getting access to education from.
नहीं बढ़िया आपका काम किया आपके तो नाम में प्रॉफिट लगा हुआ भाई.
In the world of money and markets, the real currency is clarity.
So you guys have democratized information, and I think first you seeded the market, now the market is seeding you back out there.
Decisive, discerning, distinct. NDTV Profit isn't just business news.
We are like visiting faculty occasionally who come and get a chance to share what we can, but I think it's a great service.
It's the new language of markets, and the voices that move markets know it. Understand markets, decode money through the masters who shape them.
I think we are trying to get knowledge to smaller cities and towns, making it simple for retail investors. I think what you are doing is also contributing to the Indian capital markets and Indian economy.
When leaders speak of markets, they speak to NDTV Profit.
The NDTV Profit has come a long way since it was relaunched.
I hope you are watching NDTV Profit a lot.
Absolutely, you can come to my office and you can see.
Meeraj, Tamanna and the entire Profit team is also working super hard on building a world-class financial news product. And therefore, it's good that you're watching, and I hope you can see some churn and improvement as well.
No, absolutely. I think the NDTV Profit has come a long way since it was relaunched. And so I'm pretty pleased that what we require for the investor is a correct advice, correct information, and in a right way.
Welcome back. You're watching Profit Buzzers with me, Shreyansi Singh and Puneet Javeri. And on to an important update then when it comes to the Delhi blast. The Prime Minister has vowed to punish those responsible for the conspiracy in the Delhi blast. Let's go across and listen in to what else he had to say.
दिल्ली में हुई भयावह घटना ने सभी के मन को व्यथित कर दिया है। मैं पीड़ित परिवारों का दुख समझता हूं। आज पूरा देश उनके साथ खड़ा है। मैं कल रात भर इस घटना की जांच में जुटी सभी एजेंसियों के साथ, सभी महत्वपूर्ण लोगों के साथ संपर्क में था। विचार विमर्श चलता था, जानकारियों के तार जोड़े जा रहे थे, हमारी एजेंसियां इस षड्यंत्र की तह तक जाएगी। इसके पीछे के षड्यंत्रकारियों को बख्शा नहीं जाएगा।
Well, that was the Prime Minister speaking in Bhutan about the Delhi blast as well. But let's go across to Varsha now. She is back with us in terms of some key stocks as well as sectors actually in terms of surprises which have actually given on both ends of the spectrum, from Greenlam as well as something like a BHEL has been posting solid EBITDA beats. But there are some others like Indigo as well as Bata slipping below. Varsha gets us a lowdown of all of this. Varsha, take it away.
Yeah, thank you so much for that. Let's talk about 10 stocks, top 5 stocks wherein earnings have surprised us, and the next 5 where earnings have disappointed us. Let me start with the surprises first, wherein Greenlam Industries, wherein EBITDA, if you see, there was an EBITDA beat after 5 quarters. Now this was on the back of volume growth and value growth, and of course the product mix, superior product mix, and company is expecting 18 to 20% of CAGR revenue growth in the next 3 to 4 years. Then you have Phenolics Industries, wherein EBITDA beat was by 36%. Now this was on the back of non-agri volume growth of 7%. So ratio of non-agri segment has increased to 44% versus 39%, and better realization in non-agri segment has led to this. Company has an outlook wherein they are targeting 50% contribution from non-agri segment. Then you have Navin Fluorine International, fantastic set of numbers company has posted, and the beat was led by the strong growth when it comes to the CDMO and specialty chemical business. And of course, they have raised their EBITDA guidance to EBITDA margin guidance to 28 to 30% from 25% earlier. Then you have Bharat Heavy Electricals, wherein EBITDA beat was by 35%. This was on the back of better execution, favorable cost dynamics. You have Laurus Lab, wherein again EBITDA beat, strong set of numbers company has been posting since last few quarters. The product mix gains and operating leverage are some of the key drivers of EBITDA beat. Management is expecting margin improvement over the next few quarters as well on the back of better mix and utilization. Then let's talk about top 5 stocks or top 5 companies which has disappointed the market when it comes to their Q2 earnings, especially on EBITDA. You have Indigo, wherein EBITDA was below estimates by 72% because of the large forex losses. Q3 capacity growth is expected in high teens. Then you have Bata India, they broke 4-quarter inline streak, and the high markdown on festive inventory and increased marketing spends were some of the reasons why there was an EBITDA miss. They're targeting 800 plus stores by December 2026. Then you have United Breweries, wherein they've missed their EBITDA estimates by 2 straight quarters. Negative mix and brand investment cost are some of the reasons for that, and the outlook for this company remain mixed, and ongoing investment and slow category growth are some of the reasons why the mixed outlook is there. Now then you have Whirlpool of India, wherein they missed their EBITDA because of refrigerator industry decline, loss of share due to high discounting. They're expecting gradual recovery as prices normalize. Lastly, you have PCBL. They've missed their EBITDA after 5 inline quarters which they've given. Higher OPEX and slower Aqua Pharma ramp up are some of the reasons, but long-term story for these companies remain intact. So these are top 5 companies wherein you have top 10 companies, I would say, wherein you have EBITDA surprises and EBITDA miss overall.
Alright, and thanks Varsha for getting us that check going. So there you go, that's the top 10 companies that made it to Varsha's list on the back of EBITDA surprises and misses. Tell you what, let's also take the conversation forward with our guests. We do have Prashant Tapsi, who's been with us, and other than that we also have Vinay Rajani, CMT Senior Technical and Derivative Analyst at HDFC Securities, joining us on the show. Mr. Rajani, I wanted to quickly get a chart check going for something like a Whirlpool of India. In terms of the charts, what are you looking at for this particular counter?
Yeah, so zigzag kind of pattern is there. In the mid of October, the stock was trading around 1150. It went then up towards 1450, so 300 points upside, and then from that level, it has again come down to 1250. So 200 points fall after a 300 points rise. So kind of a zigzag pattern is there. There is no directional movement as such, and now the stock is trading below its 50 and 200 days moving average. So going by the moving average setup, it looks like that it is going weak and fizzling out whatever recovery which was registered in the mid of the October. So right now we can say that the stock is trading weak, and the next support for the stock is seen around 1150, which happens to be the previous swing low which is seen registered in the month of October. So going weak with the volume, so better to avoid this stock as of now, and very zigzag kind of pattern. Volatility is very high, but overall going by the moving average setup and oscillator indicator setup, it looks like that it is into a continuation of a downtrend, and this downtrend can extend from here.
Got the view, Vinay, and that's the other one to watch as well. But Whirlpool actually has been one of the other ones. Let's quickly look at the 1 month chart, and you'll see the stock, because it had a agreement with its parent as well for a licensing technology, and you saw the stock had a sharp run up post in the first week of October. Since then has seen a sideways consolidation, to say the least. But Adani Group has now entered into a new foray as they announce its entry into the battery energy storage sector. Now, my colleague Varsha has been tracking the space very closely, brings us all those details yet again. Varsha, what do you?
Yeah, so yes, Adani Group has announced its entry into, battery energy storage system, which is currently the high growth sector where every company is going into. The project will have power capacity of 1126 megawatt and energy capacity of 3530 megawatt hour. This will be one of the world's largest single location, BESS deployments, and the commissioning is expected by March 2026. This will strengthen India's energy security, and the project will ease peak load, reduce transmission consumption, and improve grid reliability. And this will mark a major leap when it comes to India's energy independence. Onto the scaling up of ambitions, if I were to talk about, the group targets 15 gigawatt hour of BESS capacity by FY27. And the long-term plan is to reach 50 gigawatt hour within next 5 years. And this position Adani Group as a global leader in large energy storage system, and which will support India's net zero goal. So overall, group is actually entering into a high growth segment, that is BESS.
All right, and that's the view coming in on Adani Group as well when it comes to BOFA as well, and in terms of the foray as well. But let's also move on. And Varsha, it's a busy day for you, of course. Export trends for October is also something that we should be looking at, showing a mixed picture at this point in time across key sectors. So you're looking at pharma and chemicals seeing sharp contrasts, industrials as well staying muted. Tell us a little more about the detailed breakdown when it comes to the export snapshot.
Yeah, so let me start with export data when it comes to pharma, because all the companies have been reacting to the export data, starting with Syngene International, wherein a strong export data is what we are seeing. So exports surged by 68% month on month and 263% year on year, while for Divi's Lab, if you see, the counter was under pressure because export decreased 59% month on month and 38% year on year. Talking about the Cohance Life Sciences, which follows Divi's, export decline for the company by 69% month on month and 33% year on year, while for Blue Jet Healthcare, if you see, exports were down 5% month on month but was up 25% year on year. So this is all about pharma. Talking about chemicals, let's talk about SRF, where exports was up 0.6% month on month and 68% year on year, while for Navin Fluorine, export was down 40% month on month and 51% year on year. Well, just for the viewers, Navin Fluorine gave a fantastic set of results backed by the CDMO in specialty chemicals. On the industrial segment, Dixon exports declined 6% month on month, while Cummins India exports declined 9% year on year.
All right, then thank you so much for getting us that snapshot as far as exports are concerned for the month of October 2025. Then let's also move on. Prashant, I wanted to get your take coming in as far as Divi's Labs is concerned.
In terms of the export data, of course, Varsha has told us a little bit about that. You did have the numbers also last week when it comes to DV slabs. I wanted to get a sense of what you think about this particular counter.
So overall, whenever we talk about exports in the pharma and chemical sector, I think now the tariff headlines will make a lot of difference. See, last few months or few quarters, there will be a very much concern for anybody who is going to export to the Western countries. Obviously, pharma as a sector has a good big chunk of export towards the Western countries that will be highly watched. But the fall in the export numbers in the month of October almost anticipated, and I think that has been seen in the stock underperformance from the last 1 month. So overall, I'm very much negative still on the pharma as a sector. There is some kind of a big dip still being expected in terms of exports. So Q3 will see some kind of again a numbers on the downtick. So that will be a bottom for the overall export market in the pharma sector.
Got that view, Prashant. But there are a couple of counters in the auto space specifically which are having contrasting days in the market. The first one, something like a Subros. Let's pull up that stock, and while the results, you would see that it's a 9% downtick on the stock today. Largely flat numbers, 6% growth in terms of revenue. That's in line with the industry of the auto OEM space. And they do provide air conditioning units to auto vehicles essentially. So it's a lot related to what's happened in the end user. But EBITDA was down 10% because of higher commodity costs as mentioned by the management. Net profit subsequently was boosted by some key aspects that they mentioned as well. But overall, when you look at the industry performance, it saw a 1.5% decline on a YOY basis in Q2. That's largely led by purchases that were deferred essentially because of the GST rate cut from September 22nd. So you did have from August 15th to September 22nd a lack of purchases of vehicles, and hence while October has done well, we've seen in this particular quarter that impact coming in from the management as well. But what's also interesting is that in this quarter there was some key positive to note. 13 crores incentives is what they've got from the Gujarat government. A growth in hybrid cars further strengthens Subros' position as a leading role in that as a manufacturing space. So that's something that they've highlighted. They've also mentioned that the contribution of hybrid, electric as well as CNG, so all alternate fuels, are now according to almost 1/4 of the company's revenue, which is the higher margin business. So watch out for that. And finally, the trucks business, they've actually gone ahead and increased the revenue estimate or essentially guidance, as you can say. Roughly about 125 crores is what they did in FY25. They guided for 150 crores. But now anticipating that to 200 crores because of regulation. So definitely a key benefit. Aether has largely been a strong quarter for the company. They highlighted continuous improvement essentially in cash flows that's boosted the company's profits. Cost efficiency has been the other one. They've opened stores in non-south markets, highlighted majorly in the conference call as well in terms of losses narrowing because of the operational stores having higher essentially profits because of the maturity. The new stores also not having an impact on the average selling prices, and commencement of course of the new plan that's expected sometime next year in Sambhaji Nagar. So multiple positive aspects for Aether. But let me go across to Prashant real quickly on and we'll get a view from Vinay as well. Prashant, do you like something like Aether Energy? I know it's a loss-making company, but the growth in the EV space has been phenomenal for the counter, almost up 20% in market share in October. What's your view?
Obviously, yes, you rightly pointed. The market share of Aether has grown very faster when we compare Aether and Ola. Ola has been continuously been under some trouble, and the loss in the market share is indirectly positive for Aether. Two reasons again, the products have been very much stable and a very strong product when we compare with the other EV vehicles in the market. So that is the reason why customers are buying Aether for their EV expansion. Second, again, if you see the loss-making companies from last 3 to 4 quarters, the losses have been narrowing down at least by 20 crores every quarter. So that is giving some kind of comfort level for investors where the company is looking to have some kind of visibility in terms of a decent profit at least for next 12 months to 18 months. So that is giving some kind of very much a good positive trigger, and the stock has actually outperformed in the EV sector. Very positive on the stock and continue to hold for long term.
Vinay, very quickly, your view on something like Aether, because it has seen some pullback from those higher levels of above 750, 800. Would you consider buying the stock? And something like a Subros as well on the charts? I spoke about the fundamental quarterly earnings. Any view that you have on Subros on the charts as well?
Yeah, so talking about the Aether Energy first, so yes, there has been a pullback from the level of 790. The stock has come down to 582, now trading at 650. But stock more looks like a stable counter. The stock is still finding support on its 50 days exponential average and has been holding its primary uptrend. So looking at the primary trend and the positional chart, it looks like that the stock should do well. Technical setup is quite convincing, though there has been some profit booking at higher level, but sooner than later we can see a good movement on the upside in the stock. It looks like that because trend has been quite supportive and it is one of the resilient stock going by the mid cap and small cap space as of now. So Aether Energy stock looks good on the charts. As far as Subros is concerned, Subros has fallen 10% today, and the kind of pattern it has formed on the monthly chart, it seems that most of the positive things have discounted on the charts, and after that stock has started falling. So previously there was a good momentum and good outperformance from this particular counter, but the way it is for forming the charts right now, the candlestick patterns are suggesting that this stock may consolidate or correct further from this particular level. So the outperformance which we saw previously could not, I am not expecting it to continue. The strong support is around 850, which is the 200 days moving average for the stock. So compared to the comparatively as compared to Subros, I find Aether Energy quite stable on the charts, and that can relatively outperform the overall mid cap small cap space.
Alright, and that's the view coming in as far as Subros and Aether are concerned, but let's also move on. In fact, there's a smart move by JK Tyre. The stock, of course, not doing all that much at this point in time. The company has embedded sensors inside its tyres for the first time in the country, promising better fuel efficiency, safer drives as well. You do have Rishabh Bhatnagar, who's caught up with the MD of the company, that is Anshuman Singhani, who explains how these smart tyres could also change the way that we drive as well as monitor performance. Let's go across and listen into a slice of that conversation.
Right, I'm joined here by Anshuman Singhania of JK Tyre. Thank you so much, sir, for taking the time out. We're at the launch of the new smart tyre by JK Tyre. Talk to us about how this is different from a potential TPMS that one can install in their current tyres, and what sort of uptake do you expect in the passenger vehicle segment with this?
Sure. This TPMS, we've been doing it for almost about 4 years, and we've been doing this as a kit, and we've been promoting this as a smart tires. And today it is a next level, which we have imbibed the sensor in the tire, so it is more easier, and we don't have to worry about the vagaries of the fitment. And this will definitely serve the customer as to the safety and sustainability. And we have seen that 4 to 5% will be in terms of fuel efficiency coming in the way. And we are the only tire manufacturer in India to have this embedded sensor technology imbibed in the tire.
Mr. Singhania, this is a very, very interesting technology. I think this is the first time we're seeing sensors in the tire. Talk to us about what this brings to a customer who might be paying a premium for this, some sort of a 10%, 15% premium over a regular tire. What does this bring for a consumer who is willing to spend that extra buck?
Yeah, sure. Well, this is a price differential from a normal tire 14% higher. And this is ease of the customer in terms of, because tire is a low involving product. So in this, the customer gets to know the low inflation and when to sort of put the pressure right in the tire, so it can perform well, it can give better fuel efficiency. And these are the various areas in which a customer can definitely benefit. And moreover, safety is a very important feature. In this, the customer could benefit.
Alright, and there you go. That's the word coming in from Anshuman Singhania, the MD of JK Tyre as well. But let's also move on. That is something that he had to say when it comes to the customer who's willing to spend the extra buck. But let's also, before we let you go on the show, get a quick chart check going when it comes to this particular company. What are you looking at in terms of the charts as well?
You're talking about JK Tyre, right?
That's correct, yes.
Yeah, so JK Tyre has been into a quite strong momentum, and still it is holding its momentum. Now, not only JK Tyre, but if we go by the Apollo Tyre and C8 Tyre, both these all tyre companies have been into an uptrend, and after the quarterly results also, fall of buying can be seen. So I think this particular space is entirely looking good, and JK Tyre is holding its uptrend. And I think those investors who are still holding the stock can continue to hold, because this is one of the resilient stock and looks very strong on the chart. So likely to outperform, likely to extend the trend, and 501 is the next resistance for the stock. As far as support is concerned, the short-term support I can see is around 420 odd levels. So 420 is the support and 500 is the next resistance.
Alright, and those are some of the levels to keep in mind when it comes to JK Tyre. Thank you so much, Vinay, as well as Prashant, for joining us on the show this afternoon. But tell you what, with that, that's all the time that we have on the show. Thank you so much for tuning in. Stay tuned to NDTV Profit.
Namaste India. As you all know, I've been traveling around the world with my music. But this one is truly special. Something that's India. From where it all began. The first city of the world, where the Ganga flows. I'm coming to Varanasi to perform at the Namo Ghat. My first raga-based band Jala will also perform there. So book your tickets from District app and let's create harmony by the Ganga. See you Varanasi.
The NDTV Profit has come a long ways.
You are the new schools and colleges which people are getting access to education from.
ने बढ़िया आपका काम किया, आपके तो नाम में प्रॉफिट लगा हुआ भाई.
In the world of money and markets, the real currency is clarity.
So you guys democratize information, and I think first you seeded the market, now the market is seeding you back out there.
Decisive, discerning, distinct. NDTV Profit isn't just business news.
We are like visiting faculty occasionally who come and get a chance to share what we can, but I think it's a great service.
It's the new language of markets, and the voices that move markets know it. Understand markets, decode money through the masters who shape them.
I think we are trying to get knowledge to smaller cities and towns, making it simple for retail investors. I think what you are doing is also contributing to the Indian capital markets and Indian economy.
When leaders speak of markets, they speak to NDTV Profit.
We unveil NDTV Golf Pro-Am, India's #1 Golf Pro-Am, the course of champions, the conversation of leaders.
What a stellar lineup we have here on the stage of the NDTV World Summit to announce the launch of the NDTV Pro-Am. Arguably India's greatest cricketer, one of India's most distinguished bureaucrats, a top international golfer and also a top Indian pro at the moment. One administrator who is doing more to lift the profile of Indian golf than anyone has in the recent years.
All the top champions, the Tiger Woods, will all come from India in future.
It's great to be here. Golf is growing across the globe and here in India as well.
Whereas now the opportunities are increasing a lot.
Thank you very much. You're starting golf. We want to thank you.
That's very sweet of you. Thank you.
I think that's very, very important.
The NDTV Profit has come a long ways.
You are the new schools and colleges which people are getting access to education from.
ने बढ़िया आपका काम किया, आपके तो नाम में प्रॉफिट लगा हुआ भाई.
In the world of money and markets, the real currency is clarity.
So you guys democratize information, and I think first you seeded the market, now the market is seeding you back out there.
Decisive, discerning, distinct. NDTV Profit isn't just business news.
We are like visiting faculty occasionally who come and get a chance to share what we can, but I think it's a great service.
It's the new language of markets, and the voices that move markets know it. Understand markets, decode money through the masters who shape them.
I think we are trying to get knowledge to smaller citizen towns, making it simple for retail investors. I think what you are doing is also contributing to the Indian capital markets and Indian economy.
When leaders speak of markets, they speak to NDTV Profit.
NDTV Good Times is something that we're supremely excited about.
We just don't want to do live entertainment. We want to create experience for you.
NDTV Good Times is one of the most marquee and iconic ideas that NDTV came up with.
मेरा जो रिश्ता है एनडीटीवी के साथ वो बहुत बहुत पुराना है और रहमान
Hello and welcome to NDTV Profit. You're watching Small Cap Buzzers. Now, in the IPO space, a company that you should be focusing on is Capillary Technologies. Now, this is a Bengaluru-based software ASS service player that we are looking at, which has opened its IPO for about consideration of 877 crore. This comprises both a fresh issue along with an offer for sale. We are now joined in by Anish Reddy, Voodoo, MD and CEO of the company, along with Mr. Chaube, CFO and the CEO at Capillary Tech. Now, coming to the first question, Anish, can you just give us a brief in terms of how the business model functions?
We run loyalty programs for large enterprises globally. So loyalty programs are typically you earn points, you burn points, you get rewards. That kind of software to run that. We work with some of the largest brands globally. So 19 of the Fortune 500 are customers for us. Now typically these customers sign up with us for a 3, 5, 7 year long duration contract. They pay us a subscription fee, either quarterly or half yearly or annually, for using our product. So about 85 to 90% of our revenues come from these recurring subscriptions that these large enterprises globally pay us. It's, in other words, it's a software as a service type business. Right? So that's the basic business model there for you.
Okay, so that's in terms of, how the business model is. But Anand, how will the proceeds from this IPO will be used specifically?
So a part of these proceeds are going towards the R&D and for developing AI products. And the reason why we win is because we have a superior product in the market, and we want to continue to build on top of that and remain best in class. We are top rated in our product by independent analysts like Forrester and others, and that's where and that's the pole position that we want to continue, and hence a lot more investment towards R&D and product development. A part of the investment would also go towards acquisition of other loyalty companies. Some of those would be identified and done over the next few years. So the next 3 to 5 years is when we plan to use these proceeds for both developing our product better and growing business.
And I also want to touch upon the financials. Now, with EBIT margins in FY25, what's the kind of target that we are seeing for FY26, and if we can even give a near-term outlook for FY27 as well?
So if you look at, say, our business for H1 this year, H1 FY26 versus H1 FY25, and these data points are in the RHP. We've seen a top line growth of about 25% and bottom line growth of about 400 basis points. Now, if you look at the business has started seeing economies of scale. A lot of new growth is now flowing into the bottom line, and that's the leverage that we are seeing on our cost structures, whether it is towards sales and marketing or towards our product development. So we expect that the bottom line growth will continue to happen at this pace going forward. In terms of growth as well, I think there is a lot of growth available in the market, both in terms of acquisition of new logos. We today work with about 19,500 Fortune 500 customers. When we filed the RHP, this number was actually 16. So we are winning more and more Fortune 500 customers. That's bringing in bulk of growth, and our existing customers grow by about 15%. So that's a more predictable and profitable means of growth for us. A part of our growth also comes from acquisition of competitors. So we have done 4 acquisitions in the last 4 years, and that continues to be one of the core strategies for future growth. So net we expect to continue on our similar trajectory of performance versus the past.
Okay, and just on that, want to also understand, Anish, what's the kind of strategy that we should be looking forward?
In terms of business, there are 3 proven growth strategies that have worked for us in terms of existing customers growing, new customer acquisition, and acquiring smaller loyalty companies. So even for the next 2-3 years, you would see us do the same. In terms of products, we continue to invest in product. We're building more AI products as well as verticalizing our solutions. So that's one area where we feel there is significant growth possibilities in the near future. But for the next 2-3 years, our existing strategy should more than be sufficient to drive the same performance, whether it's in terms of revenue growth of what you saw in the last half of 25% plus, or margin expansion of 400 basis points. I think the existing strategy should be able to support that.
Okay, so along with this already there in the picture, just also want to understand the growth opportunities in terms of geographic areas, in terms of new markets as well. What are you eyeing at?
Right. So, US is about 4 years old as a market for us and has grown significantly. Today, it's about 55% of our revenues. Now, if you look at enterprise software globally, roughly about half or more comes from US for all enterprise software companies. So in that sense, I think we've kind of now come to what the global average on software is roughly. We also opened Europe as a market a couple of years ago. Asia also continues to grow very well for us, right? So if you look at our last 3 years CAGR between all of these markets, we've roughly grown at about 70%. Going forward, I do think we'll stay at a similar mix of US being half the business and Europe and Asia being the other half. We continue to win good large customers both in the US, in Europe, as well as in Asia, right? So that momentum in each of the geographies should continue.
Okay, well, that was the new IPO that you should be watching out for, Capital Tech in focus for you. But with that, let me welcome in our guest for today, Tapan Doshi, research analyst at CATapan.in, joins us. Hello, Tapan. Welcome to the show. A quick market view is what I'll just like to take from you before we talk about all that is buzzing in trade today.
Yeah, see, overall the market is little bit consolidated more on, if it is, you see the results are okay, somewhat this quarter two results are, it's not that they are wrong, too bad, but it's a okay one. And overall, if you see that now the Trump statement is actually, keeping the Nifty up little bit. But no, the major triggers will be November end, that what the US and India deal will be there. And again, no, this third quarter, that is the October to December quarter result, which will come on the first week or second week of January. From that on, I think there will be more trigger. Otherwise, I think it will be it will be there in the range around 25,400 to 26,000. And I think as a investor, you should pick up the stock based on the result, whichever going down, and wherever the valuation comfort is there, that is when one can invest.
Okay, so that's the overall view in terms of how the markets are doing currently. But let's talk about an interesting company in focus, and Roselle Technics is the counter that I'm talking about. Currently, if we pull out the stock, it's in pressure today, about 6% of a downtick is what we are seeing. But it's an overall strong set of numbers that we are looking at. We are looking at a revenue growth of around 144% or odd. So margins mainly in the range of 11% is what we are seeing compared to last year as well. While net profits stood at about 6 crore in comparison with a flattish loss seen last year. But let me welcome in Rishabh Gupta, the Managing Director of the company, to share the outlook on the numbers as well as the strategy forward. Hello and welcome to the show, Mr. Gupta. I just want to start off this conversation by understanding the quarter gone by and the overall outlook for FY26.
Yeah, so it's very positive. The quarter's gone by. We've seen a significant uptake in both our revenue and our profit. We've more than doubled from the previous year. And that momentum should continue in the third and fourth quarter of this year. The trend suggests that the third and fourth quarter for the company has always been the best. And that's what's going to continue this year as well.
Okay, so that's in terms of the second quarter that we are seeing, but overall this 144% is kind of a very strong growth that we are looking at. So given that, just want to understand the overall guidance for FY26, as well as if you can share a picture for FY27 also, which would be the key segments to drive this growth that we are looking at, and would this be at 11% margins? Okay, I think there seems to be some audio issue with this, but we have Mr. Gupta right there with us. Mr. Gupta, I hope that you heard the question. It was about the overall trajectory in terms of guidance for FY26 along with the near-term outlook also, if you can share that with us with the margin profile in mind.
Yeah, sure. So the margins will keep going up. We've onboarded a lot more new customers in the recent times, and that goes through a lot of FAIs, which is a first article inspection, where you have to qualify a particular product. So there's a lot of learning curve that goes into the first bills. So the numbers will get better after these products are being qualified. So the margins will keep getting better. And from a revenue standpoint, it's been a great start to the year. The momentum will keep continuing for this year and for the years to come. So all the investments that we've done all these years are starting to pay off, and the focus is to keep increasing our revenue moving forward.
Can you just quantify that for us from this 11% of margins now with this new capacity additions also that you're looking at? What's the kind of uptick that we'll see in margins?
The margin should be anywhere in the range from 15 to 22% moving forward.
Right, sir. Sir, if you could give us some understanding on how has been the order inflows for you in the first half of this financial year, how are you looking that to pan out in the second half and for FY27 as well?
Yeah, sure. So we've been able to diversify quite a bit over the last 12 months. We've onboarded some new customers in a different field. Now we're focusing a lot in the semiconductor field and the space technology field as well. So with these new customers coming on board, our order book has increased significantly, and that's why we're seeing an increase in our revenue. So it's a two-pronged strategy. We're increasing our business with our existing customers, and also with the new customers, our order book is increasing significantly, which should give the company significant revenues for this financial year and moving forward as well.
Current order book is around 700 crore or so. How does execution shape up? How much will be executed this year?
So we have two separate orders. One is confirmed POs of 700 crores. That should in the range of 2 to 3 years. And we have strategic agreements for 2,500 crores as well, which should be executed over the next 3 to 5 years.
Okay, understood. Also, you're also considering a 300 crore of fundraise. This is via the QIP route that we are looking at. This is again in check with your capex as well as working capital requirements. If you just take a check at what's happening with the working capital days, now that has increased to about 362 days. So just want to understand what would be the eventual improvement that we'll see in this number, and if you can give us more details as to the other usage also for these funds that you're seeing.
Yeah, sure. So the fundraise has already been announced and disclosed to SEBI. The purpose is basically to fuel our growth, and the money is going to be used primarily for capex and working capital. So the margins will keep getting better moving forward, and the inventory holdings will also keep coming down over time.
And so over a longer period of time, how are you looking at the growth to pan out for the company? Say for the next 3 years, what is the kind of net profit growth or revenue growth one should expect?
See, unfortunately, I can't give you a forward outlook, but the momentum we've had this year, we've grown our top line more than 100%. And that's the momentum, and that's the goal of the company, to keep that up moving forward, not only for this year, but for the years to come as well. When we're looking at it from a profit margin standpoint, it should be in the range of 15 to 22% moving forward.
Well, thank you so much, Mr. Gupta, for joining and sharing that perspective on Rosal Technis. So that's a counter that you should be seeing in aerospace and defense sector. But with that, let's take a deep dive into the derivative markets. And as usual, Sharad Dubey joins us to give us a snapshot for the trade today.
Well, it's very interesting. Anushi, you see a strong recovery coming in after October's SIP record data, helping most of the indices. If you look at Sensex as well as BankX, a significant improvement coming in. BL, Eternal, that's where the amount of top gainers are sitting on. But of course, the top losers still Bajaj Twins are there. But we see HDFC Bank and ICICI Bank, both of these counters recovering as well. Also, let's move and see how the contracts are actually playing out. Overall, Sensex has seen a good move above the 83,600 mark. It's currently trading at. Open interest has also gone up. Interestingly, looking at the numbers, the call options have started, showing a strong congestion zones, especially going ahead that 83,700 to 83,900 mark as well. Also moving on to the BankX, that has also seen a good up move coming in. Earlier it was all red, which we had seen at 10:45 at the BSE's FNO snapshot segment. But now you see SBI is also in the green, Axis Bank is also in the green. And interestingly, IndusInd Bank is holding on to its gain. That's up almost 3% and the contracts also are significantly moving towards a bullish trend. Also, let's move on and see the important longs which are building here, and we see from BSE and FNO, BHL and NALCO. These are the stocks which come in, and we see the longs building up. Apart from that, short covering stocks also in focus. Vodafone Idea stock is up 7% and Amber Enterprises, after a weak downfall in the last trading session, see the short covering which is happening. It's up 3%. Long unwinding, two more stocks to focus on. These includes Divis Labs, Export Data Impact, and now in this list is AU Small Finance Bank also coming in. Of course, the street is spooked for the MFI stress because of the earnings which had come of Bajaj Finance as well, and that's where the short build-up is also there, and Britannia also makes it to the list. So this is the entire action which is happening. Earnings specific and sector specific moves are there in the FNO segment, but overall the trend is on a recovery basis.
Right, shifting focus from FNO to Bliss GVS Pharma, that stock has been gaining for quite a few sessions now. In fact, today if you look at the trading volumes, it's nearly 13 times its 30-day average volume. What could be the potential reason behind this move in Bliss GVS Pharma? Let's get in Varsha to give us more details.
Well, thank you so much for that. So yes, the stock is buzzing. This is on the back of volumes, as you rightly said, which is trading at 12.83 times of its 30-day average. Now, about this company, they manufacture pharma formulation in capsule tablets form, and they are also contract manufacturer, by the way, for Sun Pharma, Mankind, Sanofi and Alkem. The key triggers for this company would be, of course, for the long term. One is, they have established market position when it comes to Africa. They are focusing on diversification from African market to expand into other markets. Talking about their product portfolio, 2 production facilities have secured EU GMP certifications, and the approvals enhance credibility, and they also open new markets when it comes to the regulated ones, wherein you have a high margin wherein you can sell products at a very high margin. The state-of-the-art semi-solid plant was launched recently, and this new plant expands dermatology and topical product offerings, and also they have strategic agreements when it comes to US, Canada and Europe, which will strengthen the global reach. But onto the Q2 FY26, how were the numbers? The major spike in the net profit was aided by other income. Margin impact was led by increase in other expenses because EBITDA margin was at 13% versus 19%, and one of the reasons when the earnings had come, the stock was under pressure. Onto the risk for this company, 65% of revenue come from Africa, high exposure to regional policies, though company is trying to diversify into other markets as well, as I recently and they're also vulnerable when it comes to fluctuation in forex rates. So these are some of the risks that the company faces, but overall, diversification and into the regulated markets is one of the key triggers for this company.
Right, Varsha. Tapan, have you tracked this counter Bliss GVS Pharma?
See, the result is overall okay, and if you see, they are focusing much more on the margin improvement currently, and but through cost control, of course, the growth is expected from the export and niche formulation. I think what the management's target is the double-digit revenue growth for the next 24 months. So the main key is that the gross margin improvement indicates somewhere they are making a good cost saving also, and on the selling a product which is having a high margin. So I think improving exports is quite good. Export market showing revenue growth overall, if you see, and the way the African market is also expanding. So yes, I think the stock is okay. The only problem is that the revenue growth is not so much, and the stock has already gone up. So still, one has to enter. Then should wait for 10-15% correction. Then they can enter into this stock for the long term.
Right. We also spoke to the Rosal Tech management. You might have heard that conversation, Tapan. Have you tracked that counter? Seems like the management is quite optimistic on a good growth going forward.
Yeah, of course. The overall, if you see that their sector is a defense and space sector, and there the demand is quite good. Even though they have been now profitable, much more, almost 3.3 in Q1, and even the second quarter is okay. So strong revenue growth is there in this space, and especially in aerospace and defense. So EBITDA margin, if you see, it's going up. Even the sales growth is almost, I think, 144% something. So that shows that the company is working on that. And I heard the management, they are quite positive, and they're going to have a good run rate for the future also. So yes, I'm positive in this stock, but I think the stock is gone up a lot, already trading at 120p. So here also one should wait for entry, but the prospects look good. I think if it comes around 10-15% down, I think one can start in a SIP manner in investing in this company.
Okay, let's talk about CMEC now. Now, this is an offshore and marine services player that we are looking at, which posted a weak set of second quarter numbers, with revenue seeing dip as much as 10%. Even if you look in terms of margins, there was contraction there as well. However, despite that, we're looking at a 6% of an uptick in terms of where the stock price is concerned. Vansh joins us to give us a deeper perspective on what's happening with this.
Well, thank you for that, Anushi. As you rightly mentioned, a muted set of numbers is what you are looking at for a CMEC. If you look at some of the key takeaways from the earnings, now the revenue has been impacted due to a dry dock and a forex loss that the company has incurred. If we look at the EBITDA, now this has been dragged due to the increase in the manpower cost for the company. If we look at the financials, the revenue was down by 10%, EBITDA down by 75%, and EBITDA margins stand at 10% versus 35.9% on a YY basis. If we look at the business, now the company operates in offshore and marine services. They provide a range of operations through its fleet of diving support vessels as well. If we look at the business divisions for the company, they operate in offshore shipping, bulk carrier division, and tunnel construction as well. If we look at the financials look quite disappointing. 3-year revenue CAGR stands at 1%, 3-year PAT CAGR still stands at 22% as well. So this is how the overall picture is panning out for this particular counter.
Okay, well, thank you for that, Vansh. Tapan, let me come straight to you on this one. So in the last 3 years or so, as Vansh was speaking about, muted set of growth is what we are looking at. Even in terms of the second quarter performance, it's the same story that we are still seeing playing out. But today's reaction particularly strong. Just want to get your perspective on this.
Yes, this business is overall quite cyclical. No, offshore service is always tied with the oil prices, and the growth driven is mostly on the offshore service only. That's why one has to be careful on that part. Of course, fleet into no, they are going to into lot many other segments, so that is a positive. And their main focus on Middle East and international contract. But if you see, the problem lies is that no, the overall the EBITDA was on a lower side, and even the ROE is almost 8.6% over last 3 years. So still, I think the way the management is telling and the way the management's promise still not delivering. So I think one has to be a little bit careful here. Should wait for 1 or 2 quarter more, let the revenue come up and profit will come up, then they can dive into it. So currently it is an avoid.
Thank you, Tapan. Thank you for joining us and giving us your perspectives on the stocks that we discussed. Well, with that, it's an end on this edition of Small Cap Bazaars. Stay tuned and keep watching NDTV Profit.
Namaste India. As you all know, I've been traveling around the world with my music. But this one is truly special. Something that's India. From where it all began. The first city of the world, where the Ganga flows. I'm coming to Varanasi to perform at the Namo Ghat. My first raga-based band, Jala, will also perform there. So book your tickets from District app and let's create harmony by the Ganga. See you, Varanasi.
The NDTV Profit has come a long way.
You are the new schools and colleges which people are getting access to education from.
ने बढ़िया आपका काम किया, आपके तो नाम में ही प्रॉफिट लगा हुआ भाई.
In the world of money and markets, the real currency is clarity.
So you guys democratize information, and I think first you seeded the market, now the market is seeding you back out there.
Decisive, discerning, distinct. NDTV Profit isn't just business news.
We are like visiting faculty occasionally who come and get a chance to share what we can, but I think it's a great service.
It's the new language of markets, and the voices that move markets know it. Understand markets, decode money through the masters who shape them.
I think you're trying to get knowledge to smaller cities and towns, making it simple for retail investors. I think what you're doing is also contributing to the Indian capital markets and Indian economy.
When leaders speak of markets, they speak to NDTV Profit.
We unveil NDTV Golf Pro-Am, India's #1 golf Pro-Am, the course of champions, the conversation of leaders.
What a stellar lineup we have here on the stage of the NDTV World Summit to announce the launch of the NDTV Pro-Am. Arguably India's greatest cricketer, one of India's most distinguished bureaucrats, a top international golfer and also a top Indian pro at the moment. One administrator who is doing more to lift the profile of Indian golf than anyone has in the recent years.
All the top champions, the Tiger Woods will all come from India in future.
It's great to be here. Golf is growing across the globe and here in India as well.
Whereas now the opportunities are increasing a lot.
Thank you very much. You're starting golf. We want to thank you.
That's very sweet of you. Thank you.
I think that's very, very important.
The NDTV Profit has come a long way.
You are the new schools and colleges which people are getting access to education from.
ने बढ़िया आपका काम किया, आपके तो नाम में ही प्रॉफिट लगा हुआ भाई.
In the world of money and markets, the real currency is clarity.
So you guys democratize information, and I think first you seeded the market, now the market is seeding you back out there.
Decisive, discerning, distinct. NDTV Profit isn't just business news.
We are like visiting faculty occasionally who come and get a chance to share what we can, but I think it's a great service.
It's the new language of markets, and the voices that move markets know it. Understand markets, decode money through the masters who shape them.
I think you're trying to get knowledge to smaller cities and towns, making it simple for retail investors. I think what you're doing is also contributing to the Indian capital markets and Indian economy.
When leaders speak of markets, they speak to NDTV Profit.
NDTV Good Times is something that we're supremely excited about.
We just don't want to do live entertainment. We want to create experience for you.
And NDTV Good Times is one of the most marquee and iconic ideas that NDTV came up with.
मेरा जो रिश्ता है एनडीटीवी के साथ वो बहुत बहुत पुराना है।
सोनू निगम के लिए जोरदार तालियां।
The NDTV Profit has come a long way since it was relaunched.
I hope you're watching NDTV Profit a lot.
Absolutely, you can come to my office and you can see.
Neeraj, Tamanna and the entire Profit team is also working super hard on building a world-class financial news product, and therefore it's good that you're watching, and I hope you can see some churn and improvement as well.
No, absolutely. I think the NDTV Profit has come a long way since it was relaunched, and so I'm pretty pleased that what we require for the investor is the correct advice, correct information, and in a right way.
Presenting the all-knowing, all-powerful
You're watching India Market Close here at NDTV Profit. I am Mahima Vacharjani, and with me is Sharad Dubey. Let's take a quick look as to how the markets are doing. The Nifty 50, the kind of recovery that we've seen, throughout the day. Let's try to pull up the chart, in fact, and see as to how that chart is looking like. Because there you go. This is the recovery that I'm talking about from that day's low point to now, almost 66 points up. Up around 0.3%, and this is largely on account of the kind of amphi data that has come out. And let's try to pull up the Nifty Bank also, because that has also seen some recovery where the trade is concerned. There you go, up 0.23% and around 130 points up as we speak right now. But let's try to pull up the Nifty 50 heat map and see as to what counters have seen some recovery. There you go, Bajaj Finance and Bajaj Finserv both still losing ground right now on account of Bajaj Finance cutting its AUM guidance overall. Tata Motors is something that is down 1% as well. ONGC also down by about 1%. But now tides have turned, right? You have more greens on the chart than you are seeing reds right now. Interglobe Aviation up 2.7%, BEL up 2%, Bajaj Auto, Eternal, HDFC Life, Adani Ports, M&M, Tata Consumer, HCL Tech, Dr. Reddy's, as well as Jio Finance, Bharti Airtel and Shriram Finance, all seeing gains of about 1%. And that's probably something that's leading to this recovery in Nifty 50 that we're seeing. Let's try to pull up the sectoral heat map and see as to how sectors are doing right now. More greens here as well, because Nifty Defence, of course, still leading that pack, largely led by Garden Reach, up 2%, Nifty IT also up almost 1%, Nifty Auto also up 0.8%. But something that's not doing well is your PSU banks, down by about 0.4%, your healthcare down 4.4% as well, and Nifty Media also seeing some amount of profit booking. Nifty Pharma, Nifty Realty also in the red, but very slightly. Let's try to pull up the mid cap 150 and the small cap 250, and of course also see the advanced decline ratio post that and see as to how that's looking like. The mid cap 150 almost in tandem with where the benchmarks are, up 0.2 odd %. However, the small cap 250 for the second day in a row is seeing a bit of pressure, down by about 0.3 odd %. Let's quickly pull up the advanced decline ratio. There you go. 1316 odd declines versus that of 1000 odd advances. That gap has narrowed here, but still in the favor of bears right now. Lastly, the BSE 500. A lot of stock specific action yet again on the back of earnings, your news flow coming in. Vodafone Idea up 7%, ESAB up 10% as well. Polymedicure, Craftsman Auto, Graphite India is seeing recovery today after the kind of downtick we saw yesterday in trade. HLE Glasscoat though taking a beat down about 13 odd %, and Aarti Drugs also down by about 8 odd %. We talked about the Bajaj twins, Balaji Amines and Gujarat Ambuja Exports down by about 4% each. So this is with regards to some specific names that are under pressure. But Sharad, what's the market telling you right now?
Well, Mahima, there is a lot of volatility still. There is a recovery, but remember today is Nifty expiry as well. So whether these numbers stay put at the closing levels, that's something to look out for. And speaking of closing levels, November 7th in numbers you see 25,492. Now this is coming at the higher side, 25,574. We are expecting this number to be on the higher side. So we'll have 3 days of higher closings coming in. Nifty support range is small, but more importantly the Nifty resistance range, that I have kept a very narrow range because I have kept an element of volatility also in the last 90 odd minutes if that can come in. Nifty Bank reclaiming its 58,000 mark, an important support and resistance levels and much better chart positioning than Nifty. But European markets, let's have a look at them there. That's also opened in green. Markets are in recovery mode, and as Mahima pointed out, small caps have again missed out the party for the last 2 trading sessions. October SIP record levels almost touching the 30,000 crore mark, and HDFC and ICICI Bank are holding up very nicely when it comes to recovery. That's why the Nifty Bank is also holding up. IT index strong buying for 2 sessions, profit booking in certain PSU banking names, but market is looking positive for the Trump's commentary on US-India trade, and global cues are also positive because of an expected reversal of US government shutdown as well. So a lot of moving factors, domestic as well as global, coming in the favor of the markets. And now joining us is Kush Bora, founder at kushbora.com. A very good afternoon to you, Kush, and a very strong recovery. Also we saw, from the day's low in the midway, and October SIP data was also buoying the sentiments. Nifty Bank, right now, which chart setup looks good and any positionings we can have?
Hey, hi, Shiv. First, a very good afternoon to you and to all the viewers. To answer that question in a very short way, Bank Nifty looks better. Now, just to drill it down, Nifty has, as you rightly pointed out, made higher high formations for the last 2 sessions. But equally important is to note that the highs of the day, yesterday and today so far, has been pinpoint at the 20-day moving average. So clearly suggesting that, the 20-day moving average has acted as a bit of a resistance. Yesterday, also in the morning show, we spoke that the 20-day moving average is something that you need to watch carefully. If the Nifty is able to cross above this and close above this, then the last couple of sessions, the last few sessions of downtick that we've seen could be less sinister and just a profit booking dip. But if it doesn't, then it might just continue to consolidate with a mild negative bias. So still a little cautious on the Nifty till the 20-day moving average is taken out. And we're not too far, 25,665, that's where the 20-day moving average is. So that's the view on Nifty. As far as Bank Nifty goes, like I said at the beginning, more constructive on Bank Nifty for sure. This one also has been consolidating, but above the 20-day moving average, hasn't really closed below it, regained the ground very quickly. I think if you want to create a long position, then Bank Nifty is still your index to go for a retest of higher levels at 58,600. And support zones come in at about 57,700, 57,600 zone. So yes, still prefer Bank Nifty over Nifty.
All right, so Nifty Bank will be preferred for a trade if you compare it with Nifty right now. But Kush, stock specific, what would be your picks?
Yeah, like I have been doing for a while. I'm still going with a mix of a long and a short. Right. On the long side, I've got GE Shipping. Very, very sharp moves on this one. We've discussed this one in the past. Had done well. Profit booking came about and the stock dipped 20-day moving average. Now there, the stock's taken support and rebounding. Again, the volumes today are actually more encouraging than the price setup. So yes, once again, GE Shipping for levels of 1140, 1170 with a stop loss at the 1080 mark. On the sell side, SBI Cards continues to slip lower. It has been flirting with a 20-day moving average, but not really able to reconquer it in a meaningful way. And today it's slipping on the back of fairly healthy volumes. So yes, on the downside, you could continue a short position on SBI Cards. 855, 845 are your targets. 875 is where you place that stop loss.
Okay, all right. Now, moving on, of course, to our stock of the day segment, and it's not probably the stock of the day, it's the casualty of the day, right? Britannia is the counter that we've chosen today, and this is on the back of the news update that came in yesterday, citing that Varun Berry, who's the MD and CEO, and of course the executive chairman as well, has decided to step down and has resigned with immediate effect. He's worked with Britannia for 13 years, and post that, he decided to resign from immediate effect. He did not serve the notice period. That's something that was mentioned in the press release as well. His notice period was waived off. To replace him on an interim basis, Natarajan Venkatramanan has been appointed as the interim CEO effective immediately, which will be for around 35 odd days, because from 15 December onwards, there is a new management that has been appointed, and we've been talking about this. Rakshit Hargave, who recently resigned from Birla Opus, has joined as MD and CEO, but his position will be with effect from December 15. Now, why is Street actually not liking this? Of course, Venkat Raman will continue as interim CEO till Rakshit takes over. But why is the Street not liking this? The question is, and the reason as to why it's not liked by the Street is because Varun Berry, in his recent con call in Q2, mentioned that he will be handling anything, he will not be handling anything directly. When he was asked about his role post Rakshit taking over as MD and CEO, he said he'll not be handling anything directly, but his job will be to run him in and make sure that he settles down well in his role. So that transition between Varun Berry to Rakshit Hargave was supposed to be a smooth one, but that has not happened. And that is the reason as to why the Street has not liked it, and we've seen the kind of pressure the stock has seen. It's recovered, of course, from its day's low point, but still continues to be under pressure. Now, if you take a look at the overall view that brokerages have on this particular development, Morgan Stanley has maintained equal weight with a target price of 5469. They've said that he's also resigned from another Wadia group, that is Bombay Dyeing. The board is confident, however, that no matter what, the company is going to achieve new heights under the new management, that is Rakshit Hargave. Investec also did come out with a note. They've maintained buy with a target price of 6702, a tall target price to say the least. Very sudden exit in 5 days after the call is something that was surprising to them, and they've mentioned that in their report as well. They've also said that they would have expected a smoother transition, but that's not happened. But having said that, overall Britannia's fundamentals remain positive, and that is why they've not changed any anything where the target price is concerned. So this is the overall view of what's not worked with Britannia today. Kush, I'll quickly come to you on this one. What are the charts indicating right now? Of course, today is one of is of course on the back of a fundamental trigger, but overall our charts looking constructive enough?
Even now they're starting to appear a little constructive. I have been constructive on Britannia for some time because, along with Tata Consumer, this was the only stock which actually outperformed in the FMCG space, but went into consolidation for the last 2 months with a mild negative bias. Now, the medium-term support zone for Britannia comes in at 5,800. I'm rounding it off. It's a little lower, but 5,800 to round off. As long as the stock holds above that or comes close to those levels, it should be a good buying opportunity from a medium-term perspective. And if 5,800 is broken, then I think the structure could be disturbed. So yes, around these levels in that 5,800 zone, if it dips again, then you should consider buying Britannia from a medium-term perspective. Momentum perhaps is missing, but the risk-reward ratio turns out to be favorable here.
That's pretty interesting on that. Kush, the IT space, there's nothing happening fundamentally on the long-term basis, but the last 2 trading sessions I've seen a significant positioning coming in. Just it shows the last 2 days chart, Nifty IT index is up more than 2.5% almost, and strong longs are coming in the stocks such as in the mid-cap names such as Persistence, Coforge. How are you looking like these stocks? You really prefer large-cap IT stocks or anything good in mid-cap IT where you can see just a short-term trade bet, because fundamentally nothing is happening. Of course, the global sentiment has improved, and because of that, the budgets might also help out the IT companies. But we want to know that technically, which stock would be sound right now to take positions.
Yeah, and let's not forget sector rotation as well, right, Sharad? This sector's not really gone anywhere in the last about 5.5, 6 months, right? Even the IT index, if you see, and I'm giving a very broad range here, 36,300 on the upside and about 34,300 on the downside. That's the range play that you could well take. So if you're looking at a very broad view, if the index crosses 36,600, is able to sustain above it, that's when the IT sector gets into a bit of an uptick. Otherwise, this range play would continue. You're right. There is a lot of traction in the last couple of sessions, but I think that is largely owing to the the sector rotation. Because if the FIIs are considering long positions, the data doesn't show that yet. But if they do, then IT and banking's already run up quite a bit. But all of that said, the two names that I continue to like in the IT space from the mid-cap space are Coforge and Persistent. Coforge has today broken out of a downward sloping channel, and Persistent has broken out of that 6,000, about 59.50 range, which was the resistance for the last 7 to 10 sessions. So if someone wants to consider a quick trade, I would suggest Coforge and Persistent, but a small quantity and a tight stop loss.
Okay, all right. So that's with regards to where Coforge is concerned. But moving on, Superjit Engineering is what we're going to put spotlight on. It came with its Q2 numbers yesterday. The stock is doing well in trade today, up 3.7%. Overall, if you take a look at the numbers, revenue was up 13%, EBITDA up 58%. Margins have significantly improved at that 10.6% versus that of 7.6%. And the company has gone and done a net profit of almost 51 crores versus that of 48 lakhs earlier. To take a look and to discuss further as to how the quarter has gone by and how things are shaping up, we're joined by Ajit Rai, who's the promoter and chairman at Superjit Group, joining us now. Mr. Rai, a very good afternoon to you, and thank you so much for taking out the time. My first question to you is with regards to the entire quarter gone by. Things have improved so much as compared to Q2 FY25, especially if you take a look at the Superjit Controls division, right? You've said that second half is going to be better. Even the growth this time and margins largely have improved in this segment. What's the outlook like?
Good afternoon, and thank you for having me on your channel. You are right, we had a very good quarter and half year. Business has grown very well, and the margins have improved significantly, as you said. The main reason has been the significant restructuring that we have been doing at the Controls division, which is our overseas division. And Superjit Controls division has done exceptionally well during this quarter, where some of those restructuring and regrouping of our businesses has led to significant improvement in margin. Actually, Superjit Controls division has been consistently doing double-digit margins in the last 2 quarters due to all these restructuring efforts. So business has been good, and as we have said, in the second half we expect to do better than the first half. Also, very importantly, in the last quarter, third quarter, that is the current quarter, all the restructuring that we have announced earlier will be completed. Because of that, I think the performance will even likely to be better going forward. Not only the top line will grow, because we expect also some of these new contracts to hit the production. We also expect margin consolidation as we go forward.
I have a question on the margins front, especially because you're speaking about consolidation, and third quarter there will be some restructuring as well. So the margins which you have given is almost 10.6%. Mahima had mentioned this higher number as well. Interestingly, will you sustain these margins in Q3, or there will be some adjustments going ahead? So there might be, volatility in the margins, or will you maintain that?
I think there will be some restructuring costs that will be impacted in the Q3. But there is an ongoing process. I think the last 2 quarters and also even the previous quarters, there have been some restructuring costs. It's difficult to quantify that at this moment, but I think all of them would be in place this time. Will it change the margin profile? Even if it is, it's going to be marginal, because I think we have a fairly large operations, and these restructuring costs are not that high. So I don't really see it is changing the margin profile for this quarter. But having said that, we are really long-term, in this business, so 1 quarter numbers don't really matter. But I don't really see any change in the margins.
Okay, all right. Mr. Rai, with regards to, the Phoenix Lamps division, I was just taking a look at the numbers, and overall this quarter has seen a downtick, even in terms of margins and even in terms of top line growth. Just want to get a sense as to why has that happened. Here also you're expecting second half to be better. What's the outlook like in the second half, and what will be the levers that will cause growth in this particular segment? Because largely I think your margins, overall blended margins, could have been better if margins were not would not have taken a hit in this division.
Agree with you. I think the margin profile we have sort of guided for Phoenix Lamps historically, as it was undergoing its own changes and restructuring, was that it will be between 12 or 13 to 15%. So in the last, this quarter, we have been at about 13.5 or 13.7%, whereas maybe the previous couple of quarters, we are more towards 15%. So we are actually still within the range that we have guided, but it's probably slightly on the lower side of that guidance. Now, in terms of the business, I think as we have announced that some of our exports got hit. That's why the top line didn't grow. And because of that, obviously the margins had some minor impacts. The loss of business has been largely because of the Middle East tensions, and we have fairly good business in the Middle East from Luxlight. That was affected. So that has had some impact. Having said that, again, we feel that in the second half, some of these things will recover and margins will probably also will recover. So we are within the range, but, some, fluctuations within the range is always happens for various reasons. But we do expect second half to be slightly better than the first half.
Understood. Mr. Rai, another question is the US tariff scene. There is an important commentary which came from Donald Trump that India-US trade deal is nearing its, end, you could say, and announcement would be coming in on the lower tariff side. But already the company has seen that impact coming in, and some pass-through was also there. But almost you can see Q3, we can see most one half of the Q3 is almost over. So will we see this tariff related pressure coming in Q3 also, because already half of the quarter is gone almost?
We do hope that, this quarter the two governments sign a trade deal, but it's not in our hands, and I don't know, and I don't want to expect a guess also on this. Having said that, I think, we do not have a tariff impact on our numbers. I think we have made very clear that most of the tariffs have been passed on to customers, and that we do not expect any margin issues because of those tariff-related issues. So obviously that will also not affect in this quarter also, whether the trade deal has been signed or otherwise. So we feel that, yes, it's a big challenge to convince customers. It's a lot of work for our people to, provide lots of data, because please understand, tariff is not only between India and the US. We operate in multiple geographies. All of them are supplying to US, China, Mexico, Morocco, Europe, Canada. All of them have different kinds of tariffs. So it's been a big task for our team, but they have done a phenomenal job in making sure that the company has not been impacted in the process. So we don't really see a tariff impact on our margins in this quarter as well.
Mr. Rai, with regards to the acquisition of SCS Germany, it's been 4 or more quarters now. Your losses have significantly narrowed. The EBITDA losses have significantly narrowed at 67 crores this quarter. Does this mean that you will be EBITDA positive by the end of this year and PAT positive by the end of FY27? Is that a possibility?
I do not want to make a second guess on the PAT for the next year. We have only discussed for this year. By end of this March, we expect to be EBITDA positive. You are right, the EBITDA losses have come down significantly. We have done significant amount of restructuring in Europe, including a warehouse transfer to Hungary from Germany, the tool room transfer from Germany to Morocco, significant restructuring in Morocco, downsizing of our German operation, or to meet the current requirements of ours as a group. Many such initiatives have done. In Canada, we relocated our facility. In China, a lot of issues were there when we took over the company. So multiple issues have led to this significant downtrend in the losses. I think that is continuing. And as I said, then as you rightly said, by end of this financial year, we will be EBITDA positive. And I think the entire exercise will lead certainly to a much better year for the coming year.
Just one last question. Last time you did mention, in fact even this presentation mentions that the global competitor which went bankrupt, you've seen significant new inquiries because of that. Can you help us quantify as to how much of a benefit will you be able to garner from that? And secondly, post the US-EU trade deal that has happened, you will be a big beneficiary. How much of a benefit are you expecting from both of these aspects, if you can help us quantify that?
In terms of, I think the first question is regarding Phoenix lamps, if I'm not mistaken.
Phoenix lamps, yes.
So what is happening in this business is that halogen lamps business is that high cost competitors are finding it hard to survive. And those cost efficient and operationally more efficient companies like ours are able to win larger contracts. And those, loss-making companies are getting into insolvency procedures and difficulties to sustain their operations. I think that's where the green shoots are there for us. We're in the aftermarket, and one of these big competitors have some difficulties at the moment. They may come out of the insolvency, I do not know. But I think the point here is that, the customers gets panicky, and they have been asking for multiple inquiries and multiple quotes for many things. In the next 6 months, we'll get to know clearly whether these things will translate into business. Some of them have been translating into business. In fact, we recently won a couple of good contracts thanks to this. So we expect that to continue. So we do expect that we will have a good, traction, and will continue to consolidate in the Phoenix Lamps division as a standalone, solid global manufacturer, giving the best options to all customers. So I think that is our position on that.
Right. Okay, Mr. Rai, thank you so much for giving us all those insights and, of course, taking out the time and speaking with us at NDTV Profit. All right, so that's the management of Superjeet Engineering. The stock has seen good gains in trade today. Cooled off a tad bit from its day's high point, but still up by about 3% odd. Moving on from a positive stock reaction to a negative stock reaction for second day in a row, transformers and rectifiers. Let's try to pull that chart up. It's down by about 10%, still 10% down. So it's not
down 30 almost percent.
Yeah, 30 almost percent in the past two days on the back of course, the numbers plus World Bank putting allegations of
and companies' clarification came, but still.
Post that also we've seen that kind of downtick in the trade. In fact, we also spoke to Transformers and Rectifiers Group CFO, Mr. Chanchal S. Rajora, earlier today about the World Bank allegations. Listen in to what he had to say.
We were also surprised when we got this letter on 4th of November from World Bank. Basically in 2020 we had done a project with Nigeria, right? And we were part of basically a bigger project which was funded by the World Bank, and our contribution was around $24 million, right? And we had supplied all the transformers and we have received the payment also, right? And we were actually taken aback with this, why this has come up into to us, right? There were some issues with this order on a border level, and then World Bank has last wrote us in 2023 that there are certain changes we wanted to see that is happening in the company or not regarding the corporate practice and us, and we told them anytime you are welcome if you want to see anything. Well, they did it this as per our information, they did it with all the companies which were involved in this particular project, and after that we never heard anything about from them. So suddenly this has come up, so we are taking up with the World Bank very strongly that why this has come up to us.
No, but the allegation is alleged corruption and fraud. So corporate governance is a different thing. It's not about issues with the order. The allegation of corruption and fraud, where do you think that would have come from?
No, we don't know, because we were not at all involved in any kind of these things, and we are very, very clear from corporate practices in our side that we don't tolerate these kind of things if anything
What
comes
is
up.
the mechanism you have to challenge this?
We have already mechanisms in place, and we are taking it up on that, and at every level there are the controls in our companies in place. Look, understand, if the processes and the governance is not in the company, we cannot be the first company in this country to declare the results in 8 days time, which takes a great amount of energy and great amount of work involved into that.
But specifically on this Nigeria project, you said that it's from 2020. When was it completed?
Look, this project was completed in 2022.
Okay.
Right, we got the 90% payments of the entire transactions in 2022, and last 3 transformers which we sent them, they were toppled in the port. So we have to basically make the new transformers and send them, which we did in 2023-24, right? And the payment of the balance 10% we received in this year in April itself. So, understand one thing, had anything was there related to us or our practices or ethics, World Bank would have not released this payment to us.
That's a clarification coming in from the management, speaking exclusively to NDTV Profit. But a major development in Maharashtra has been there. This may have implications for some of India's oldest and most influential charitable bodies. The state government has passed an ordinance that changes how public trusts are structured, and this could directly affect the Tata trusts. Let's go across to my colleague Nisha Poddar for exclusive details. Nisha, what are you gathering?
Right. What we have gathered is an ordinance which was passed by the Maharashtra government with effect from September 1st, 2025, which is on public trusts, and it's an amendment. Now, what it states is that the ordinance limits the number of life trusteeships or life trustees on the board of any public trust. That's one point. The second important point is that the renewal of trustees or any removal has to be unanimous as per this particular ordinance. Now, the implication of this could be direct on Tata trusts, which had, remember, taken some critical decisions of renewal and removal in the month of October, because any changes made post 1st of September 2025, from which date the ordinance is going to be effective, all the changes made and all the considerations will have to be reconsidered. Now, it also puts in spotlight the resolution by Tata Trust, which was passed in October 2024, which says that all the trustees would be renewed at the time of renewal, will also be renewed as life trustees. Now, remember that this particular ordinance makes a rule that only 1/4 of the Tata Trusts or any public trust can be life trusteeship. So therefore, the resolution could be under consideration. We'll have to really go back for rethinking, and maybe changes will have to be made as per the new rules and new ordinance that has been passed by the government. So it has huge implications on 2 important decisions that have been taken by Tata Trust. One was Venu Srinivasan's renewal, not just as a trustee, but as a life trustee in October. And the second, even removal of Meli Mistry, and you will remember that Meli Mistry had reached out to the Charity Commissioner to state his point of view before it is sanctioned, his removal from Tata Trust is sanctioned, and whether or not this ordinance really makes its way and makes his removal also legally re-questioned.
Yeah, thank you Nisha for bringing us that exclusive. But it's time for a quick break. Stay tuned to NDTV Profit.
Namaste India. As you all know, I've been traveling around the world with my music. But this one is truly special. Something that's India. from where it all began, the first city of the world, where the Ganga flows. I'm coming to Varanasi to perform at the Namo Ghat. My first Raga-based band, Jala, will also perform there. So book your tickets from District app and let's create harmony by the Ganga. See you, Varanasi.
The NDTV Profit has come a long ways.
You are the new schools and colleges which people are getting access to education from.
नहीं बढ़िया आपका काम किया आपके तो नाम में प्रॉफिट लगा हुआ भाई.
In the world of money and markets, the real currency is clarity.
So you guys have democratized information, and I think first you seeded the market, now the market is seeding you back out there.
Decisive, discerning, distinct. NDTV Profit isn't just business news.
We are like visiting faculty occasionally who come and get a chance to share what we can, but I think it's a great service.
It's the new language of markets, and the voices that move markets know it. Understand markets, decode money through the masters who shape them.
I think we are trying to get knowledge to smaller cities and towns, making it simple for retail investors. I think what you are doing is also contributing to the Indian capital markets and Indian economy.
When leaders speak of markets, they speak to NDTV Profit.
We unveil NDTV Golf Pro-Am, India's #1 Golf Pro-Am, the course of champions, the conversation of leaders.
What a stellar lineup we have here on the stage of the NDTV World Summit to announce the launch of the NDTV Pro-Am. Arguably India's greatest cricketer, one of India's most distinguished bureaucrats, a top international golfer and also a top Indian pro at the moment, one administrator who is doing more to lift the profile of Indian golf than anyone has in the recent years.
All the top champions, the Tiger Woods, will all come from India in future.
It's great to be here. Golf is growing across the globe and here in India as well.
Whereas now the opportunities are increasing a lot.
Welcome back. You're watching India Market Close. I'm Alex Matthew, that's Sharad Dubey, and this is Mahima Vachajani. Hi guys.
Hi.
So let's talk about mutual fund data at the start, right? Because it's interesting data if you think about it. The question is, do you want to look at it from the positive lens first or the negative lens first?
I think markets are giving a good recovery, so positive.
Positive lens first. Okay, so positive lens is that if you look at the overall composite number, you have inflows of over 2.1 lakh crore rupees. And this is really par for the course because at the start of a quarter, you will normally see significant inflows into fixed income mutual fund schemes. In September, you saw outflows of about 40,000 crore rupees on the composite level. And that's because you saw 1 point something lakh crore rupees of exits or outflows from fixed income mutual fund schemes.
So these are treasury adjustments.
Yeah, absolutely. There's a lot of institutional flows into fixed income mutual fund schemes. The other positive is that SIP flows are at an all-time high once again. 29,500 odd crore rupees. Remember that this is the gross number. The net number will be considerably lower. In the past, it has been about 40%, but I won't be surprised if it's only about 35%. But still, it means that durable money continues to come through in the mutual fund space. That's the positive. Negative?
Yes. Yeah.
You have to talk about the negative.
Yes.
The negative is that the inflows into actively managed equity mutual fund schemes have not been very substantial in the month of October. If you remove the new fund offers and the flows through those schemes, then it comes to about 20,000 crore rupees. And you compare that with about 29,000 crore rupees in the month of September. And a large part of those inflows, and this includes NFOs as well, have come through in flexi cap funds, which is close to 9,000 crore rupees, which is a good sign because people are moving away from your sectoral thematic and into your more diversified schemes, which is always a good idea.
But for NFOs, you were just mentioning, right? There were 4 NFOs in the thematic and sectoral and 2 flexi caps. So any idea about that bifurcation of flows? Because NFO has seen quite a significant jump from last month.
Yeah, absolutely. So there were 6 in total.
6 in total.
The flexi cap schemes have gotten, the new schemes have gotten inflows of about 1,700 crore rupees. And there were 4 sectoral thematic schemes that were launched, close to 2,500 crore rupees. So all told about 4,173 crore rupees. The other factor, guys, is that gold ETFs have continued to get inflows. But it's 7,800 crore rupees compared with about 8,200 odd crore.
And this trend has been going, on a longer basis for months. But Alex, the street is a bit spooked because of that equity inflow stuff.
Yeah.
So what is it? Is there...
So we were speaking to somebody from the industry, Sharad, and really the suggestion is, and it's a pretty logical thing to think of, right, is that it was festive season. There are a lot of expenses that come through on account of it being festive season. And so the natural activity, the natural reaction to something like that is to pause a lump sum that you might otherwise have put into the market.
Makes sense.
They expect that the signs that you've seen in the first 10, 11 days of November are positive, and that SIP number is critical to watch, of course. If that stays durable, in fact, think about it. Your gross flows through SIPs are more than the total flows into actively managed equity schemes, which is quite
that's
significant.
a good number.
So, and that shows that Indian investors are disciplined, right? Because despite of the festive sense that spends that you were talking about, SIP inflows have remained intact.
Absolutely. So that's the long and short of the mutual fund data. What did you make of it? Let us know in the comment section. But we have to move on to other stocks that are reacting. By the way, Vodafone Idea is up and about, and it's one to track right now, 7.7%. There's a conference call that is either underway or we will go to. It's probably underway. You will see some updates coming through at the bottom of your screen. So I'd encourage you to keep one eye on that. The other you can look at Sharad and Mahima. But having said that, let's talk about one more stock that is reacting, Jupiter Wagons. On the back of earnings, right? Just pull up the intraday chart and you will see a very sharp drop. And that's because the earnings have come through not really very great set of numbers. 25-26% downtick in EBITDA, and the revenue is also reduced by about 22%, as a result of which you have the PAT number that's down close to 50%. And that's not really something that the street likes very much. Kush Bora of kushbora.com and Pankaj Pandey of ICICI Direct with us this afternoon. Gentlemen, good afternoon to the both of you. Pankaj, if you have looked at Jupiter Wagons at all, and the numbers came through just a short while back, but it's not just Jupiter Wagons. It's a lot of these railway plays. You're not really seeing the money come through in a substantial manner in the second quarter. Does that improve in the second half? Would you use opportunities to buy in, anticipating that some of that capital flow will come through?
Yeah, hi, good afternoon. Thanks for having me. I think, see, up till now, this entire year, largely it is the consumption pack which is sort of done well. Largely, most of the news flows have been around that. I think CapEx, whether it is road, railways, or other, has sort of taken a backseat, at least from the price performance or from the news flow perspective. But our sense is that CapEx intensity is expected to be maintained at 3% of the GDP, and as we are sort of approaching budget, this will be a slightly better theme to sort of look at. So Jupiter Wagons specifically, you don't have a coverage, but we would want to sort of look at CapEx plays from here on. Largely because, see, structurally we carry a young population. You can't really do much without not doing CapEx. So CapEx is expected to remain a central theme, and I think most of the conditions are in place for CapEx to sort of pick up, except for the trade deal. So I think as and when that happens, even the private sector CapEx is expected to sort of at least become better.
Okay, all right. So that's the view with regards to where Jupiter Wagons is concerned. But the other counter, that we were just talking about is Bharat Forge. If you can try to pull that chart up, on the back of its numbers yet again, has seen a good uptick in trade today, up 5% and at its day's high point as we speak. Kush, anything on the charts that you're observing, maybe a buying point right now?
Oh yeah, there's a very clear breakout, and the stock was languishing around the 1300 mark for some time now. Today, with this kind of a move, it's given a very clear breakout around the bottom formation above that 1300, 1350 zone. I think now it enters a new territory where on the upside you could well have a move towards 1460 once that is taken out, 1540 as well. I think this is a good move, a healthy one, comes after a bit of correction and consolidation as well. So yes, if you have, you should continue to hold. If not, for levels of 1540, you could take a fresh entry, fresh positional bet here as well. Keep your stop losses near the 1300 mark. So yeah, this is a good record volume back, could continue on higher levels.
Okay. The other counter, Kush, that's been, on traders' radar is probably Eternal. I mean, it's just very difficult to understand as to what's happening with that counter, but it's crossed that 300 level now, 300 mark now. 305 is where it's trading at, up 1.4% almost. What are the charts indicating?
Yeah, so for me, about Eternal, it's a matter of when to buy and not if to buy. So yes, the stock had a very sharp up move and is now starting to consolidate. In fact, if you look at the recent rally that it had somewhere mid-July, the retracement, 61.8% retracement for that comes at precisely at 300. The stock has tested that level for the last 3 sessions and continues to find support there. So maybe it could turn around from here on as well. But I would take a staggered manner, staggered buying kind of an approach towards Eternal. There is a gap at the 280 mark as well. If it gets filled, then the confidence on the stock becomes even higher. But even around these levels, it's not a bad idea to start nibbling into the stock. So I remain constructive on Eternal from a medium-term perspective. This dip should be taken as a buying opportunity, albeit in a staggered manner.
That's pretty interesting view coming in for Eternal, but some stocks are buzzing on trade of both positive earnings impact as well as negative earnings impact. Jasmeet will be coming and giving us a positive coverage on it and why these stocks are going up in the positive side. And interestingly, Jasmeet is wearing a green shirt also, while
I
Vansh,
think it's yellow.
It's yellow, but it's a shade of green, yes.
Close enough.
And Vansh is also joining us with the negative earnings impact as well. Jasmeet, let's start with you. What are the stocks you're tracking here?
Well, starting off with the ESAB Limited, ESAB India, we look at the numbers, we see a strong set of numbers coming in from the company. And on the other hand, the other incomes are nearly up 86%, which is adding up to the profit, which is nearly up on 83%. If you look at the margins, they have improved on the back of cost efficiency, which we see in this particular quarter. While in terms of the other items, this exceptional item, which is adding up to roughly 30 crore in this quarter. That's why the net profit's up nearly 83% in this particular quarter. In terms of the other earnings, I have Aether Energies. We see revenue is up over 50% for the company, while the losses have narrowed in this particular quarter. That's why the positive buzz in the trade. While the margins have improved on the back of, again, cost efficiency, they have improved the cost in this particular quarter. While in terms of commencement of the operations, they yet to see a new operational center in Mumbai. While lastly, I have KC International. If we look at the overall key highlights, the margins have expanded in this particular quarter, while profits are sharply up. In terms of revenue from the T&D, the major source of revenue for the company is nearly up 44%, which contributes almost half of the revenue. In terms of the other segments, we see slight pressure coming in from oil and gas pipelines, while the transportation and civil also degrew in this particular quarter. If you look at the order book, company recorded the highest ever order book with L1 as well as the order book roughly standing at 44,000 crore in this particular quarter. In terms of the other details, we see debt has increased in this particular quarter, but it's still lower to compare to the percentage of the revenue, and they expect it will normalize going forward. So all in all, these are the positive stocks that are buzzing in trade today.
Yes, we had one side of the coin. The other side of the coin, the negative stocks. Vansh will get us that list. Vansh, which are the stocks in your radar?
Well, thank you for that. So firstly, let me start off with Sula Vineyards. Again, a muted set of numbers coming in from Sula. If we look at the own brand performance, it has been impacted by the disruptions in Telangana. Also, if we look at the states like Haryana, UP and Rajasthan, they have recorded a double-digit growth out there. And the sales through the CSD, that is a canteen stores department channel, has more than in fact doubled. If we look at the earnings, the EBITDA was down by 24% and the net profit was down by 58% at 6 crores versus 14.5 crores on a YY basis. The second on the list is Balaji Mines. Again, a muted set of numbers. We saw the EBIT from the mine segment was down by 9.3%, and the hotel division EBIT was also down by 38% as well. If we look at the earnings, the net profit was down by 15% as well. The third on the list is C Infosystem, interesting stock. If we look at the numbers, they have reported the lowest ever profit, at least in the last 12 quarters. Also, if we look at the map-led business, it has continued to deliver steady performance for the company. And the Internet of Things business, that is a segment, has showed strong revenue growth, and it has been impacted by one-off cost acquisition by the company. The acquisition was for a 96% stake in a subsidiary as well. If we look at the numbers, the net profit was down by 59% at 18 crores versus 46 odd crores. So clearly a negative set of numbers coming in from CE Infosystems as well.
Got it. All right. So that's a wrap of the stocks that are buzzing on account of positive and negative earnings. But one eye Dalal Street is keeping on what is occurring in Bihar. And this is really important because you have today the fate of the elections that will be decided, the second and final round of the polling. Tamanna joining in to talk about the key developments today. Tamanna, the first round of polling, one of the big takeaways was that turnout.
Yeah.
Is that the same thing that you're seeing today as well?
It is. It is. So the data that we have till 1 o'clock shows another day of bumper voter turnout. Now the question is, what does it mean? So Bihar elections and why it matters to the street, if at all. So number one, if all things remain the same, it doesn't really matter to that extent. But if you recall, after the first phase, there was a bit of stress in the markets, and this was because of the bumper voter turnout. Now, in first phase, you had a 65% voter turnout, which was historical. The last time Bihar had that kind of a voter turnout was in 1997 or 1998. In phase 2, the data which has come at least till 1 p.m. shows a 47.6% voter turnout. This was around 42-43% in the last election. So you're looking at the possibility of record turnout in Bihar this time. Now, there are two parts to this, right? What does this mean? Now, a high voter turnout is sometimes seen as a vote for change. That is what election and political strategy sometimes says. Though I must hasten to add that there are enough examples of high voter turnout where people have come out to vote for the incumbent government and there hasn't been a change. This time that question also gets raised because there is a new player in Bihar. You have the erstwhile political analyst Prashant Kishore, who has launched this Jan Swaraj party. They're fighting in pretty much all seats, and the question is whether this is going to make an impact or not. So watch out for that high voter turnout and the impact it has. Remember, exit polls will be out this evening. This is also something that the street will watch very carefully. We will be live on it on NDTV Profit. Now, the other part is why the high voter turnout. One factor to look at is that there is an exercise called SIR, which has taken place in Bihar, where all of the duplicate voter IDs have been deleted. People who have been dead and still on the voter turnout list have been deleted. That means the number of voters in total is less. As a percentage, this is why perhaps optically the voter turnout is looking higher, because the denominator has shrunk because of SIR. So keep that in mind as well. Having said that, the 2 or 3 things that the street will look out for, amongst others, is the size of the voter turnout, what the exit polls say. If it looks like there is continuity, and you see that on 14th November, that might be a reason for the street to cheer.
Absolutely. All right. So quite a bit to take from that description of what is occurring in Bihar and what the street is looking for. Thanks so much, Tamanna, for laying that context for us. By the way, equity markets recovered quite smartly from the low point of the day, particularly the benchmark Nifty 50 up about 0.9% from the low point, and you can see that very clearly in that graph. Mid-cap index also quite considerably off the low point of the day and currently trading with gains of about 0.4%, similar to the benchmark Nifty 50. But the small cap index once again languishing today, still in the red. The recovery there is not as substantial, just about 0.4% for the small cap index. Let's also pull up the advanced decline ratio just to look at whether the breadth has shifted at all over the course of the session, and it has indeed narrowed quite considerably. I wonder in the last half an hour or so of trade whether that edges toward even Stevens or even a possibility of the greens edging higher. Interesting move so far.
The defense pack has really been doing wonderful, and Mahima and all, we are discussing yesterday's trading session as well. Now there is an angle of India-US trade deal to have a completion, and last week there was a 10-year defense agreement signed between India and US. Maybe the street is cheering that because no large domestic flows have been announced over the last 1 week or so. You can just pull up the Nifty defense, or you could just pull up the defense related stocks. GRSC,
it is in fact the largest sectoral gainer, about 2.3% higher at this point. And you can pull up the internals. You have something like an MTAR Tech, you have Data Patterns, Garden Reach Shipbuilders. By the way, they spoke with NDTV Profit earlier today, and they spoke about their earnings, a bumper set of numbers, not least of which through the revenue uptick. If we have those numbers, we should pull them up on the screen. And you had a margin expansion during the quarter. But more importantly, you have the management that has said that a 25 to 30% top line growth is likely to be the run rate, at least for the next 2 years as well. listen in to a slice of that conversation, and then we'll go to our analysts to figure out whether this is something that you should bet on.
Our shipbuilding capacity initially was 20, which we increased to 24 during 2023-24. Currently, our shipbuilding capacity is for concurrent construction of 28 platforms. With the ongoing modernization, we intend increasing this capacity to 32 ships by 2026. But still, this will not be enough. So we are going for brownfield expansion as well as greenfield expansion. Brownfield expansion within West Bengal at 3 locations. The DPR is already ready, and we are moving ahead in a fashion so that the capacity gets augmented to 40 ships in the next 4 years. In addition to the brownfield expansion, we are also looking at a greenfield facility in the West Coast. So all put together, we have been systematically increasing our capacity, and we will be ready in another 4 years to take on platforms which currently we are not able to take on. That means platforms above 300 meters length.
So that was the management, the Commodore talking about the capacity and whether or not they're going to be capable of taking on the projects that are currently coming their way. Remember, shipbuilding is something that the government is focused on very, very closely. And there's also a new order that will come through from the Navy in the form of those corvettes. These are now weaponized ships and large ships at that. The expectation is that that order will come over the next few months, and that will kick in 2 years from now. So Pankaj, question to you. What the management told us is that because of the vintage of some of the orders that they're currently executing, over the next 2 years, they expect that the run rate will remain stable at 25 to 30%. Does that, is that good news according to you, and would you buy at even these levels?
So on Garden ship, overall Garden Reach, our rating is hold largely because, see, while yes, they're sitting on an order book of about 21,000 or 22,000 odd crores. See, bulk of this order book will get executed over the next 2 years, and which is why we would expect, say, top line growth of somewhere about 34-35 odd %. The challenge is what lies after that. For that, they need to sort of win new orders, which is where our sense is that probably FY27 onwards, the order or the revenue growth might sort of taper down, and which is why we have a hold. I think Cochin Shipyard within the shipbuilding space looks structurally a lot more positive to us. Garden Reach, I think, like a reason highlighted, I don't think we would be recommending this as a buy, though the numbers for next 2 years are looking or would look quite good from a growth perspective.
Kush, any of these counters where you think charts are constructive enough? Any defense counters that you're looking at right now?
Mahima, in fact, if you see the defense pack has been doing well for the last 3 sessions today included, but just as the case is with the Nifty India Defense Index, same is the case with a lot of components as well, which is a lot of these stocks after the run-up have come very close to those resistance levels individually as well. So BDL has near-term resistance at 1550. BEL has resistance at 430 odd levels. Even GRSC, for that matter, is now trading close to the recent swing highs of about 2800. Point being that since the stocks are already close to those resistance levels, you might want to wait upon fresh purchases. If you do have them from slightly lower levels, you might book profits now and perhaps reconsider either on breakout or on declines. But right now might not be the best time to enter, at least from a very near-term perspective.
Okay. All right. So that's with regards to where the defense pack is concerned. But, it's that time of the show where we bring in my colleague Soumit Sarkar, who joins us with all the chatter that he is hearing from the dealing room. Soumit, what are you hearing today?
The market has been moving into gains and losses throughout the day. In fact, from the day's lowest point, if you see, a market has managed to gain close to 200 points on an intraday basis. But what dealers are indicating is that sustaining above the 25,600 is very crucial for the Nifty for some more upside going forward. So 25,600 is the level that we need to watch out for when it comes to the Nifty index. And apart from that, sectoral Nifty IT is seeing strong buying interest in trade today. But stock-specific action, firstly, trend. Now, yesterday, it was one of the top losers among the FNO stocks, and one of the major reasons behind this was that there was heavy selling that we had seen on mutual fund desk, is what dealers are indicating. In fact, one of the mutual funds who was a holder in the company has completely sold out its stake, and dealers are indicating that Motilal Oswal, mutual fund might be the seller who has completely moved out of trend, and given the fact that the selling is now over, we are seeing some up move in the share prices in trade today. When it comes to Voltas, there are sell flows seen on our trade today, and this is largely an anticipation of a potential weak second quarter numbers that the street is expecting. So on the back of weak numbers, we are seeing this kind of a downtick when it comes to Voltas. When it comes to Oberoi Realty, there are buy flows on institutional desk. Both foreign and domestic institutions have been buying this counter in trade today, and dealers are expecting or indicating that the delivery volumes could be on the higher side for this counter. And lastly, Biocon, we did speak about Biocon yesterday as well. Results are today, and what dealers are indicating is that some potential corporate development might be announced related to biologics, and this could either be a demerger or merging biologics with Biocon itself, so that the holding company discount moves out. So keep an eye out for Biocon earnings. Some announcement or some corporate development related to biologics, which is its subsidiary, could be announced today.
All right, Swami, thank you so much for bringing us those details. One counter that's zooming in trade right now as we speak is Yatra Online. Let's try to pull that chart up and see as to how that chart is fared. And that's on account of its Q2 numbers that are flashing on your screen right now. EBITDA at 23 odd crores versus that of 14 odd crores. Look at that chart. I mean, look at that spike coming in. The margins have also significantly improved. Net profit up 94.5% at that 14.2 crore versus 7.3 crore. Overall, the numbers look really positive. I remember last quarter also, when they came out with their numbers, we had seen a similar reaction in the stock. And this is majorly because the company is now shifting more towards the B2B travel segment, that is their corporate segment, and shifting away from the consumer business, which means for them, the growth is going to be better in terms of volumes, margins are going to be better, and overall, if you take a look at the MICE segment, that is the meetings and initiative segment, that is also going to grow for them. Look at that stock. I mean, 18% in, that
seconds.
Significant
spike coming in.
I know. I
but
mean,
it's just the business model, right? There's a significant change happening. But is this happening just for one quarter, or will we see this positive effect in the next coming quarters?
It's been happening for them for the past 2 or 3 odd quarters, and that has now, I think, started to fructify, and that's been seen in the numbers as well.
Oh, that's
so I
pretty
think
interesting.
That's one of the reasons as to why the stock is doing so well. I think I'll quickly take Pankaj's view also on this one. Pankaj, any view on something like a Yatra Online or anything in this space that you're probably looking at and liking?
So except for hotels, we don't have coverage on any of these names, so I won't be able to comment.
Your view quickly on the charts. I mean, this is of course a one-off spike that we're seeing, but it's a beautiful chart to look at, right?
Yeah, indeed it is. My suggestion would be to book partially, about 50%. But given the kind of momentum that the stock is witnessing, we should continue to hold the rest with a trailing stop loss at 161.
Okay, all right. So that's the view with regards to where charts are concerned for Yatra Online. But with that, Kush and Pankaj, thank you so much for taking out the time and giving us all those insights throughout the show. It's time to slip into a very short break, viewers, but we'll be right back getting you BTST for tomorrow's trade. Stay tuned.
Namaste India. As you all know, I've been traveling around the world with my music. But this one is truly special. Something that's India. From where it all began. The first city of the world, where the Ganga flows. I'm coming to Varanasi to perform at the Namo Ghat. My first raga-based band, Jala, will also perform there. So book your tickets from District app and let's create harmony by the Ganga. See you, Varanasi.
The NDTV Profit has come a long ways.
You are the new schools and colleges which people are getting access to education from.
ने बढ़िया आपका काम किया, आपके तो नाम में प्रॉफिट लगा हुआ भाई.
In the world of money and markets, the real currency is clarity.
So you guys have democratized information, and I think first you seeded the market, now the market is seeding you back out there.
Decisive, discerning, distinct. NDTV Profit isn't just business news.
We are like visiting faculty occasionally who come and get a chance to share what we can, but I think it's a great service.
It's the new language of markets, and the voices that move markets know it. Understand markets, decode money through the masters who shape them.
I think you're trying to get knowledge to smaller citizen towns, making it simple for retail investors. I think what you're doing is also contributing to the Indian capital markets and Indian economy.
When leaders speak of markets, they speak to NDTV Profit.
We unveil NDTV Golf Pro-Am, India's #1 Golf Pro-Am, the course of champions, the conversation of leaders.
And what a stellar lineup we have here on the stage of the NDTV World Summit to announce the launch of the NDTV Pro-Am. Arguably India's greatest cricketer, one of India's most distinguished bureaucrats, a top international golfer and also a top Indian pro at the moment, one administrator.
The stock in focus needs no introduction. That's Bajaj Finance. Stock has tanked after its Q2 earnings, but has the street punished the stock a lot more? So we have given a bulls versus bear case for the stock of Bajaj Finance. The stock is down almost 8% in the day's trade. Has it taken a big beating, or will this continue going ahead? That's the question. But let's put in how this situation has panned out. Our bull cases, firstly, the Q2 numbers we see, they have been largely in line. But if you go into the details, that's where the devil lies. Higher credit costs, that has impacted the overall numbers, and street also has been spooked because of that. Let's get into much more details in the Q2 numbers, the bull case numbers. Healthy growth coming for the gold loan and the car loan segment, but overall, if you flip the coin, they have cut the AUM growth guidance up to 22 to 23%. Earlier, this number was on the higher side. Now they're expecting to add 1.7 crore new customers in FY26 as well. But on the other hand, if you see the two-wheeler and the MSME segment, that has weighed in on the asset quality, and that has given a stress to other NBFCs as well, which we'll come to these points as well. But let's look at the numbers, what the Bloomberg numbers say. The 12-month return potential after this fall has gone up, and it's 30%. But NBFCs, they have cracked today in the day's trade, and after the MSMEs commentary which has come in, who have an MSME exposures. So shorts are developing in NBFCs and certain banking names as well. Overall, bull case, Bob Capital maintains buy rating, a highest target price that comes in at 1,329 rupees. But on the other side, the bear case, that's Bernstein, they have maintained a sell rating with the lowest target that comes in at 640 rupees. So there is a bear case as well as a bull case coming for Bajaj Finance. And overall in the day's trade, markets have punished Bajaj Finance, of course, on the higher valuations. And that's why we are seeing significant revisions as well. But certain brokerages say that this might be a tactical buy as well. That also, we'll get you that research as well. And this is the entire bull and bear case scenario. So this is the overall development coming in this space.
Absolutely. Thank you so much, Sharad, for getting us those details. In fact, as Sharad mentioned, first, valuations, of course, being a concern. I think 7 times price to book is not cheap for something like a Bajaj Finance. And secondly, I think the FY26 guidance cut in terms of where the AUM stands is something that the street is not liked, and that's been reflected in the way the counter has reacted today. Let's also get in views from our guest with regards to Bajaj Finance. We're joined by Aditya Agrawala of Invest4Edu and Sundeep Bandyopadhyay, who's from IndiTrade Capital, joining us now. Sudeep, I'll come to you on this one first. What's the view like where Bajaj Finance is concerned? And of course, there's a ripple effect of that on Bajaj Finserv as well.
Well, I think, at that kind of valuation, the margin of error is absolutely not there. Now, they have two challenges. One is, of course, they have lowered their guidance on the growth. And second, the asset quality is not as per, what was expected. So under these circumstances, the market is not liking the numbers and not liking the commentary. So there has been a significant correction. And you remember that, this is still trading at a significantly higher valuation in terms of multiple to the book. Whereas if you compare with State Bank of India, even a bank, the largest bank in the country, that's trading at about 1.1 time book. And Bajaj trades at 5.7 time book. So, under these circumstances, the way the asset quality is expected to pan out on the MSME and the small loan segment where Bajaj Finance definitely has a large chunk of its assets deployed, I think I'll be cautious, and I will rather go and buy some of the larger banks which have a less exposure to these MSME and unsecured loan.
Okay, all right. So that's the view with regards to where Bajaj Finance is concerned. But sticking with the BFSI space, talking about Karnataka Bank, let's try to pull up the counter and see as to how that's doing in trade today. Overall, if you take a look at the numbers, asset quality has improved. NIMs have inched up slightly on a QOQ basis, but cost of funds have also improved on a QOQ basis. To take a look as to how the quarter has gone by and how things are shaping up, we're joined by Raghvendra S. Bhatt, MD and CEO of Karnataka Bank, joining us now. Raghvendra, hi. Thank you so much for taking out the time and speaking with us at NDTV Profit. Mahima this side. My first question to you is that asset quality has shown a steady improvement this quarter. Just want to get a sense, and this is of course on account of both, gross NPAs as well as both gross and net NPAs improving, right? Is this on account of better recoveries, lower slippages, or is it more towards the prudent underwriting that has taken place? And do you see this further improving in second half of FY26?
Yeah, good evening. Yes, as you rightly mentioned, with regard to the improvement in the asset quality, that has reflected in our results also. It has improved from 3.46 to 3.43 for 3.30 rather GNPA. Even NNPA also has shown an improvement. This is mainly because of the good recovery as well as the tight recovery action initiated by the bank with full concentration, because we have zero tolerance for slippage also. With that collective efforts, it has shown improvement.
That's pretty interesting. The Sharad here. Mr. Bhatt, the question remains is the NIMS outlook. There has been a 10 bips jump on a year-on-year basis in your current NIMS number. But most of the peers have stated that there might be some kind of green shoots coming in NIMS also in the coming 2 quarters. Do you also feel the same? What's your NIMS outlook going ahead for Karnataka Bank?
Yeah, it was rather better, and it is now moderated because of the EBLR. Since last 1 year, there was almost 1% drop. Because of that, our EBLR linked advance rate is around 77%. It has immediately affected our asset portfolio as far as earning is concerned. Likewise, on the liability side, it happens only on the due date. The reduction in the cost is not in proportion to the asset side. Therefore, NIM has affected a bit. But whatever has, I feel worst is over now. It has to improve only. And coupled with the asset quality improvement and our focus on CASA, NIM has to improve further.
Mr. Bhatt, with regards to where provisions are concerned, they've dropped sharply this quarter. Do you think that this is the sign where we consider this as normalization, or there's a one-off that's been played out this quarter?
Yeah, as I mentioned earlier, the focus is on recovery and slippage towards the NPA. It has to further improve only. And given that, yes, our recovery actions also support, and including our the mechanism for recovery from head office level also, in the regional office level also, it has to further improve.
Pretty interesting on that. There are diverging thoughts coming in the banking space as well. But the stress, that's the concern. Recently we did Bajaj Finance numbers also, where they had spoken about the SME segment stress. Now, your books also, has the stress come this time, or will that stress continue in the third quarter as well? We need your views of this MFI segment.
It was with regard to MSME. On the one side, there is a focus for improvement in business in MSME. MSME consists of both manufacturing and service sector. No doubt that is the industry is moving like that. Growth has to happen in MSME. Simultaneously, when the growth is happening, there is bound to be some amount of stress also. So we are also not an exception to it. But having that, compared to Q1, the improvement has shown in the stress level of MSME also. Our focus is on MSME. While it is there, we are geared up to control the stress level also.
Pretty interesting on that front. Last question I have is in the gold loan segment. What's the outlook looking like? The prices were on the higher side, and now we're seeing a kind of a cooling off in gold prices, but still at stable levels. So how is your outlook looking like for the gold loan segment now? Because now the wedding season is also be coming in some days.
Yes, last year compared to year on year, there is an increase in the gold loan to the extent of around 30%. Last year, full financial year, the growth has come mainly from gold loan. Around 4,000 crores of gold loan in the books, it has come in the books. This year also, in the initial stages, first 6 months, the growth has not come adequately from the gold loan, based on various factors. However, having said that, it has grown negative in the first 6 months. The growth has started coming because of our focused attention to increase the gold loan portfolio also, because that is one area that adds to the improvement of the NIM. Therefore, focus is still on gold loan. Therefore, I am quite confident that growth has started coming from September onwards, and in October it is still better. Focus will continue to towards the gold loan, and we are quite confident that gold loan portfolio will improve further, like last year.
Bullish commentary coming in from the management of Karnataka Bank. Thank you very much, Mr. Bhatt, joining us and taking out time at NDTV Profit. Aditya, the question is for in the banking space. We discussed a lot, but we will be focusing on that, and that's the number coming in for BLS International also. That's down almost 3%. But
right. So
Vodafone Idea is there on the screen. It's up 7% and we are cutting into the con call now.
Order is pretty clear, and government being a 49% equity holder, and the government making it also amply clear that in the Indian context, 3 private players are required. We are looking at the solution, which we believe will be best and with a long-term view from the government. And our sense is that since the Supreme Court order has come recently, might be there would be a little bit of a dependency of that with the banks when they are looking at a long-term funding. But we are engaged with them and we are kind of working pretty closely, and as and when we get to here, we'll come back to you. Yes, on the question on the credit.
Sure. So, Saurabh, the current credit rating, as you know, is BBB minus. So that stays where it is. Maybe if you can elaborate your question.
Oh, sorry, no. What I meant was you had spoken about raising credit from non-banking sources, I guess private credit.
Oh,
so, yeah. So I just wanted,
so
can that be something which can be advanced ahead of, say, funding from banks?
Yeah, so Saurabh, I think we are, as we said, we are talking to many banks and the NBFCs both. And as and when we get closer to the deal, we'll come back to you. As we speak, we are engaged with multiple partners at this point in time.
Okay, sure. And just a second question. Could you just remind us of the total quantum of AGR debt which is outstanding as of September? And within this, how much would be the principal portion?
The principal and the interest we can't share like that, but as of September 25 September, it's around 78,500 crores of total amount on the AGR.
Okay, that's perfect. Thank you.
Yeah, thank you, Saurabh.
Thank you. Next question comes from the line of Sumangal Nevatia with Kotak Securities. Please go ahead.
Good.
That's the con call coming in, and we are tracking Vodafone Idea's developments as well. Sorry to keep you waiting, Aditya. I just wanted to take your views on 2 counters. Of course, Vodafone Idea would be there at times. We are not very comfortable with this counter, but In case if somebody is holding some gains in this stock, Vodafone Idea, say suppose somebody entered between 7 to 8 with a rally which is coming in, is the right time to take some profits back home? And then of course we'll ask your view on the banking space as well.
I think one should continue to hold because there is some kind of a volume activity that is building up in Vodafone Idea of late. And if you've already taken a position in Vodafone Idea at lower levels, not a bad idea to maybe trail your stop losses to 9 rupees and continue to hold on to them, because if there is any positive development, it will be after a multi-month that the stock, or maybe multi-year, that the stock will break out of this hurdle of 11 rupees. Once it breaks out of 11, then there is room all the way till 13, 14 rupees on the upside. So my sense is, Sharad, one should continue to hold. If you're already long on the stock, place a stop loss somewhere on 9 rupees. If you bought lower, trail your stop losses. And once stock breaks out of 11 bucks, maybe 13, 14 is something that is on cards.
Interesting. Target price of 13 to 14 for Vodafone Idea, but keep your strict stop losses in these type of counters. There is volatility always there. So that's a disclosure I'm giving you. But Aditya, one more question I have. Just let's pull up the Nifty Bank chart first to give you the sense, how recovery has happened in the Nifty Bank. Let's show the intraday chart. That's near its day's high levels, 200 points up, trading comfortably above the 58,150 levels. And now we are seeing some strength coming in the private banking space also. Now, private banks or PSU banks, where do you think the risk reward ratio is good? And it can be a positional call also. Aditya, could you shed some light on that?
Definitely, Shah. In fact, I think a matter of time before Bank Nifty hits a new all-time high, and we should be breaching 59,000 mark on the Bank Nifty. If that has to happen, definitely private sector banks have to chip in and perform, and especially your large cap private sector banks, which have been little laggard so far. So my sense is I would definitely look at some of these large cap banks, names like ICICI Bank, Axis Bank, HDFC Bank. All of them look interesting to me, and especially in that pecking order, I think ICICI Bank is something which has underperformed big time and now has enough room on the upside to test levels of 1450 to 1500 with a good support on the downside at 1300. Axis Bank is also something which looks quite interesting to me and can be looked at current levels, and on the upside you can see levels of 1320 back again. If you have to take an exposure to PSU banks, definitely SBI is something that is at the top of the recommendation list. Post number stock did see some bit of an up move, and then I think some bit of a consolidation is going on. If the stock corrects close to about 930, 920 odd levels, it will be a good idea to look at SBI as well. But as of now, I think these private sector banks, and especially the large cap ones, are ones that I would pick and add them in my portfolio and look for a breakout in these stocks, because for me, Bank Nifty could test beyond 59,000 in the coming times.
Okay, all right. So that's the view with regards to where the Bank Nifty is concerned. But moving on and speaking about small cap buzzers, Anushi joins us with what's buzzing in the small cap space. Anushi?
Quite a couple of small cap stocks in radar today, and of course the main peg remains the second quarter results is what we are seeing. Now for all of these counters, if we just pull up the volume data, CMEC and Bliss GVS Pharma stand out about 34 times to 13 times is the kind of volumes that we are looking at compared to its 30-day average. In fact, Go Fashion is another stock which is in focus on the back of its second quarter results as well, wherein the stocks are about a 6-7% of a revenue growth, while EBITDA saw about a 5% of an uptick and PAT saw about a 7% of a growth. In terms of the key operational metrics also, if we just look at the average selling price, that stood at about 792. This is for the first half that we are looking at. Coming to CMEC now, a muted set of numbers is what we are seeing. Revenue impacted due to dry dock and CMEC and forex loss as well. EBITDA also dragged due to increase in manpower costs, so some bit of an impact there as well. In fact, margins, if we see, there's an anomaly that we are seeing. A huge contraction is what we are looking at in terms of where CMEX numbers are concerned. So that's another stock on our radar. Apart from that, BIS GVS Pharma, here the volumes were around 30 times compared to its 13 times compared to its 30-day average. Here, if you look at the numbers, 12% is the kind of growth that we saw in terms of revenue, while margins contracted to 13% versus 19%. Other income, however, aided profit, hence we are looking at a 12% of an uptick in terms of net profit despite the contraction in margins. However, margins contracted due to increase in other expenses. So these are the three stocks in the small cap space that are buzzing in trade today.
Thank you so much for bringing us those details. Aditya, quickly on the charts, any of these counters looking attractive to you? You have Go Fashion, CMEC as well as BIS GVS Pharma.
So for as far as co-fashion is concerned, I would give it a pass because it's early days for the stock. Stock has constantly been on the corrective phase. Bliss GVS is something which looks interesting to me and can stand out. So at current levels, maybe I'll be a buyer here, but one needs to be a little cautious here because stock is usually volatile. On the downside, 140 is a good support area. On the upside, can test levels of 180 to about 200. So buy a positional trade here and look for a target of 180 to 200 with a stop loss on the downside, close to about 145, 140.
Right. Aditya, what would be your BTST trades?
So Sharad, I've got a BDST buy recommendation on Dabur. Looks quite an interesting chart setup for me. At current levels, I'll be a buyer here for a target of 540 on the upside, and on the downside, look for a target of stop loss of 510 and a target of 540. Looks like a good trade to take within the FMCG space.
Okay, all right. So that's the view with regards to where the BTSC trades are concerned. But let's turn focus to the lending space. Today on Profit Intelligence, we put the spotlight on Bajaj Finance, and their latest commentary has put the spotlight on MSME exposure. With the company signaling a cautious stance, what could this mean for banks and NBFCs with higher SME lending portfolios? Let's bring in Vansh to give us all that analysis.
Thank you for that, Mahima. In fact, if we look at the Bajaj Finance commentary, we saw they revised their guidance of AUM from that 24 to 25% mark to that 22 to 23% AUM growth. Now, this was on the back of the slowdown coming in from the Bajaj housing book as well. But what's interesting was the MSME, the outlook on the MSME segment. Now, they have reduced their exposure on the MSME segment by 25%, and they have guided for a modest 10 to 12% growth in the MSME segment for FY26 as well. Now, this leads to a caution across the SME and MSME lending space as well. If you look at the MSME now, there has been indications of potential slowdown in the higher risk credit portfolios as well. If we look at the implications for NBFCs and banks with higher SME exposure, we have banks which can see rising delinquencies across the NBFC pack. In fact, if you look at the preference now, preference for NBFCs with MSME exposure can be reduced going forward, and the higher risk SME lenders may see temporary valuation corrections as well. If you look at some of the names with high MSME exposure, we have Bandhan Bank contributing 16% of AUM as of Q2 FY26 from the MSME segment. We have Capri Global 21% of the AUM, and lastly we have City Union Bank, where 40% of advances come from MSME segment as of Q2 FY26 as well. So this is how the overall picture is panning out for the entire NBFC pack.
Thank you very much for that, Vansh. The entire NBFC space is buzzing, but it's a negative impact. So Deep sir, I want to get you on board on this. This SME exposure that has spooked the street as well. Bandhan Bank, City Union Bank also has a sizable exposure. What's your view in this space? Is the NBFC space still out of the woods, or only certain segments like the CV segment as showing some green shoots? So what are your views overall in the NBFC space, especially on the stress part?
Well, I think, how things started, the entire unsecured book of the lenders was a question mark. Things started getting from bad to worse as far as microfinance exposure is concerned. And that started about a year plus back. And that has been, a continuous story. Quarter on quarter, we've been seeing huge write-offs from the microfinance lenders, as well as the banks having microfinance exposure, whether it's the IDFC Bank or it's a IndusInd Bank or even RBL, Bandhan Bank. All of them have been taken a huge hit on the microfinance book. Now, this challenge on the microfinance, which is unsecured lending, also has spilled over into MSME book, which is unsecured. And that is creating this concern, which is now emerging. And, entities like Bajaj Finance have that exposure. So does Bandhan, and so does some of the other lenders. Now, the whole issue is there has been a credit squeeze as well on the unsecured loan book from a overall system point of view, and fresh lending to this segment has reduced significantly. Now, this has led to a vicious cycle whereby this entire unsecured loan book is getting squeezed from all the sides, and there is a problem today. I'm not saying this problem will continue for eternity, but as things stand today, there is a challenge, and it's better to be careful.
Okay, all right. The other counter that's remained in focus for second day in a row is Indigo Paints. Let's try to pull that up. 6% of an uptick is what we're seeing in trade today, and has significantly gained from its day's low point as well. Look at that chart. Yesterday also it was doing very well in trade. Aditya, I'll come to you on this one. Anything that's indicative on the charts right now? Because it's not like this counter has done very well in the past. It's the past 2 days that it's seen a significant rally.
So, Mahima, if you take a look at the chart, definitely stock has been in a corrective phase. It's just last these 2-3 days when the stock has actually seen some kind of an uptake on the back of good volumes. And at current levels, maybe I'll give it a pass, wait for the stock to actually sustain above 1230, 1240. Once it manages to sustain above 1240, then maybe I would look to go long on the stock, because we've already seen a rally from 1000 odd levels to 1250 now. Once it crosses 1250 now, as a fresh long position, I would look at for a target of 1450. Otherwise, I would look at a Berger Pain, which is a better looking chart setup and offers a better risk to reward as well.
Sudeep, any view on Britannia per se? I mean, today, of course, the stock has tanked, of course, recovered from its day's low point. And this is on account of the management change that we've been talking about. Varun Berry exiting suddenly after, indicating in his last con call saying that, he will be felicitating a smooth transition once Rakshit Hargave takes over. But overall, your view with regards to how this is developed, because in the past 9 odd months, we've seen a lot of changes, not just 9 months, almost a year now, we've seen a lot of changes happening in this FMCG space.
No, you're absolutely right. I think today's reaction is on the back of, unexpected sudden exit of Mr. Varun Berry. The exit was known, but the way in which the exit happened was little unprecedented, and the market didn't take it nicely. And that's why the correction which we saw today. But overall, I think the entire FMCG space has been under significant pressure for a very long time. Of course, the green shoots are visible now, and we believe that, probably Q3 and Q4, we will see much better performance from the overall, the entire FMCG sector, including players like Britannia and HUL and Dabur. So I think, companies having significant rural exposure and significant exposure to the lower segment of consumption population will do well in Q3 and Q4, because, disposable income is going up, and a little bit of benefit will percolate down for the GST rationalization as well.
Thank you very much, Sudeep and Aditya, for giving your both technical and fundamental perspectives. But moving on to the closing, it's a very strong closing for the markets coming in. The markets have actually sustained their recovery, and the number which I'm looking at is 25,700. If it has a strong closing above that, we can expect further up moves. So that's what technical analysts say. Nifty Bank also supported positively by both the private banks, aiding ICICI Bank as well as HDFC Bank. Let's pull up the overall heat map for the Nifty index, and we see a sea of green happening in the closing session. Only the Bajaj twins have been on the downtick, but you see right from Interglobe Aviation, M&M, most of the stocks have given a strong recovery. That's why we are seeing the wall, mostly it is in the green. Let's see which sectors have done well. And largely today we have seen most of the sectoral indices in the green, especially the Nifty India Defence Index. Very strong up move coming in. IT is showing strength for the last 2 trading sessions. And over here also, not much changes, a little bit of profit booking in the PSU counters, but that's okay, not much of a technical moves or up moves coming in. But the advanced decline ratio, earlier Mahima was also talking about it, and now you see how it has turned and it has narrowed down right from the beginning of the session. So largely even Stevens when we talk about the bulls versus bears. But now let's pull out how the Nifty Midcap Index has performed. This index itself, the Nifty Midcap Index, that has done well. It's up 0.5%, and it has also augured well with how the Sensex and the Nifty indices were recovering. But small cap index for the second straight day has not participated in the recovery, and it is still down. That means we are waiting for flows to come in these counters as well. Moving on, let's see the BSE contribution, how things have actually panned out. And largely you see the mid-cap names. This includes Vodafone Idea, strong commentary after the earnings. Bharat Forge, a flip in the earnings, it's out 6% up. Even Hind Copper, we can see a strong impact in the earnings coming. In the losers side, we are having Bajaj Twins, as earlier we had stated, Balaji Mines, not much happening in the chemical counters. And also, Restaurants Brands Asia also breaking into the list, where we saw the list of losers being prevalent. But the focus still remains is on the earnings season. What to watch out for post earnings. And tomorrow is the Fed bar speech in the US markets, and Street is of course expecting that the US government shutdown overhang also goes away, and the interim dividend announcement, that's something which the street will be looking out for, these counters. And lastly, the demerger for all cargo logistics, that is also pretty important. But earnings post market hours, looking at RVNL and National Fertilizers, and also Tata Power, that is something which we'll be looking out for in that Mundra related commentary. Also Ashok Leland, Asian Paints and Cochin Shipyard, larger earnings to track, where we will see the action in the markets taking place. HAL and Tata Steel also is something where commentary and the growth outlook is something which we will be tracking. So these are the entire earnings setup also for tomorrow. And lastly, the IPO opening, that is Telecom Clean Air India. So primary market action is also filled, and the listing of Grow, Billion Brains Garage Ventures is the company's name. So this would show that a primary market action is also strong. So a lot of news flow would be there, and that's it for India market close at NDTV Profit. And up next, Himangshi brings you Market Express.
Namaste India. As you all know, I've been traveling around the world with my music. But this one is truly special. Something that's India. From where it all began. The first city of the world, where the Ganga flows. I'm coming to Varanasi to perform at the Namo Ghat. My first raga-based band, Jala, will also perform there. So book your tickets from District app and let's create harmony by the Ganga. See you, Varanasi.
The NDTV Profit has come a long way.
You are the new schools and colleges which people are getting access to education from.
नहीं बढ़िया आपका काम किया आपके तो नाम में प्रॉफिट लगा हुआ भाई.
In the world of money and markets, the real currency is clarity.
So you guys democratize information, and I think first you seeded the market, now the market is seeding you back out there.
Decisive, discerning, distinct. NDTV Profit isn't just business news.
We are like visiting faculty occasionally who come and get a chance to share what we can, but I think it's a great service.
It's the new language of markets, and the voices that move markets know it. Understand markets, decode money through the masters who shape them.
I think you're trying to get knowledge to smaller cities and towns, making it simple for retail investors. I think what you're doing is also contributing to the Indian capital markets and Indian economy.
When leaders speak of markets, they speak to NDTV Profit.
We unveil NDTV Golf Pro-Am, India's #1 Golf Pro-Am, the course of champions, the conversation of leaders.
What a stellar lineup we have here on the stage of the NDTV World Summit to announce the launch of the NDTV Pro-Am. Arguably India's greatest cricketer, one of India's most distinguished bureaucrats, a top international golfer and also a top Indian pro at the moment. One administrator who is doing more to lift the profile of Indian golf than anyone has in the recent years.
All the top champions, the Tiger Woods, will all come from India in future.
It's great to be here. Golf is growing across the globe and here in India as well.
Whereas now the opportunities are increasing a lot.
Thank you very much for starting golf. We want to thank
Well, that's very sweet of you. Thank you.
I think that's very, very important.
The NDTV Profit has come a long way.
You are the new schools and colleges which people are getting access to education from.
नहीं बढ़िया आपका काम किया आपके तो नाम में प्रॉफिट लगा हुआ भाई.
In the world of money and markets, the real currency is clarity.
So you guys democratize information, and I think first you seeded the market, now the market is seeding you back out there.
Decisive, discerning, distinct. NDTV Profit isn't just business news.
We are like visiting faculty occasionally who come and get a chance to share what we can, but I think it's a great service.
It's the new language of markets, and the voices that move markets know it. Understand markets, decode money through the masters who shape them.
I think you're trying to get knowledge to smaller cities and towns, making it simple for retail investors. I think what you're doing is also contributing to the Indian capital markets and Indian economy.
When leaders speak of markets, they speak to NDTV Profit.
Hello and welcome. You're watching Market Express and I'm your host Himakshi Bahogna, and let's get straight into the show. But first up, let's see how the markets have fared today. So, benchmarks have ended the day off day's lowest points, with Nifty managing to shut shop above 25,700 levels. Sensex has also jumped more than 300 points. The advanced decline ratio was tilted in favor of the declines. Now looking at the sectors, so most of the sectors have ended the day in green. Defense, IT and auto were the top gainers. Meanwhile, PSU, bank, realty and finance were on the back foot. Let's look at some earnings now. So Vodafone Idea second quarter results have come in line with the expectations. The telco's net debt rises slightly up, to about 1.96 lakh crore rupees from 1.94 lakh crore rupees in the previous quarter, while its subscriber base continues to fall. ARPU also edges higher, helped by an additional day in the quarter. The company remains in the red for the 31st straight quarter, with cumulative losses now crossing 2.15 lakh crore rupees. Looking at more earnings, Syrma SGS reports a sharp jump in revenue after 2 straight quarters of decline, and margins have expanded to 10% now, both year-on-year and sequentially. So while the net profit surges 78% to 64 crore rupees, Syrma SGS announces the acquisition of a 60% stake in Telecom Integrated for about 235 crore rupees, with the remaining stake to be picked up in phases over the next 3 years. The move marks its entry into the defense and maritime electronic space. In fact, Morgan Stanley maintains an equal weight rating on Syrma SGS with a target price of 712 rupees. So the brokerage says that the company's second quarter performance is a strong beat, and this is led by improved margins. Adjusted profit after tax comes in 17% above the estimates, and this is driven by better revenue, stronger EBITDA margins and also lower interest costs. Sula Vineyards delivers muted performance this quarter. The company's own brand segment takes a hit due to disruptions in Telangana through Haryana, Uttar Pradesh and Rajasthan, seeing strong double-digit growth. So sales through the canteen stores department, which caters to defense personnel, more than double in the quarter, offering some support to the overall numbers. Sula remains focused on expanding premium wine sales across the key markets. Balaji Ameen posts a muted performance this quarter. Revenue and profit sees a slight decline while margins remain largely steady. The Ameen segment posts lower earnings, and also the hotel division faces a sharp fall. The company continues to grapple with margin pressures amid soft demand, keeping overall growth subdued. Subros faces a slowdown this quarter, with growth hurt by weak industry demand and also higher costs. The passenger vehicle segment sees mixed trends, though September sales show a modest recovery there. Margins are under pressure due to rising commodity prices. And on the positive side, Subros receives incentives from Gujarat and sees growth in the hybrid car components, strengthening its position as a leading manufacturer. The company also expects its trucks business to grow in the coming year, adding to the overall momentum. Staying with the earnings, electric scooter major Aether Energy showing clear signs of accelerating towards profitability. The company has posted a significant improvement in its financial health for the second quarter. So let's talk about the revenue first. That has jumped sharply by 54% year over year. Now, the bottom line is, looking much healthier with the company successfully managing to narrow its net loss. So this financial improvement is largely driven by better cost efficiency and also improved margins, which is a great sign for operational stability. Also, Aether is looking at future growth, having commenced commercial operations at its new manufacturing plant in Maharashtra. Discount fashion retail Bazaar Style is reporting a stellar Q2 turnaround, posting massive growth across the board on the back of aggressive expansion and also tight operational control. The company has announced a powerful 71% surge in revenue, but the biggest story is the profitability. So Bazaar Style has flipped its net results, moving from a loss last year to a net profit of 51.5 crore rupees in the second quarter. So this dramatic shift was powered by efficiency, with EBITDA margins nearly doubling to 13%. The growth engines are firing. The retailer expanded its physical presence, increasing its store count by 36% to 250 outlets, and also drove robust organic demand. And this is reporting 10% same-store sales growth as well. FMCG player Bajaj Consumer is posting robust Q2 numbers, with net profit climbing nearly 33% on the back of impressive cost management. So the company's bottom line has gotten a strong boost from easing commodity prices. So this is leading to a significant gross margin expansion of 690 basis points, which is huge. And in fact, raw material costs were down over 3% year on year. Top line growth was also healthy, with revenue rising 13.4%. So this was driven by the domestic business, which saw double-digit value growth. Operational efficiency was key. Bajaj's EBITDA has surged by over 46%, and this is pushing the operating margin up from 14% to 18%. Sugar and pharmaceutical giant Aether is reporting a surprisingly sweet second quarter, delivering substantial growth across its financials. So the company has seen a near 39% jump in its net profit and climbing to 424 crore rupees compared to 306 crore in the same period last year. So this stellar bottom line performance was backed by strong demand, with consolidated revenue surging by nearly 25% to cross the 11,600 crore mark. And operationally, if we talk about, so Aether remained highly efficient. EBITDA has grown over 23% to settle at almost 1,200 crore rupees. And crucially, the operating margin held steady at around 10.3%. And this is demonstrating the company's ability to manage its cost structure while rapidly, scaling up the sales. Next up, we have wine major Sula Vineyards, which has reported surprisingly muted second quarter, with its bottom line being severely strained. So the company has seen its consolidated net profit plunge by almost 58%, settling at just 6 crore rupees for this quarter. So this came as operational efficiency took a hit, with EBITDA margin shrinking from over 25% down to 19.4%. Revenue has remained largely flat at 131 crore rupees. Management attributes the substantial drop primarily to a regulatory disruption impacting the performance of its own brands in Telangana. However, there were silver linings. Sula reported strong regional momentum, with states like Haryana, Uttar Pradesh and Rajasthan recording double-digit growth. Also, the sales through the CST channel, which caters to defense personnel, impressively more than doubled during this quarter. Next up, we have specialty chemicals maker Balaji Amines, which is reporting muted financial numbers for this quarter, reflecting a difficult environment for the chemical sector. The company's performance was virtually flat, with consolidated revenue seeing a marginal dip of about 1.8% to settle at 341 crore rupees. Operating profit has also seen a little movement there, with EBITDA slightly declining by just over 1%. So this overall sluggishness has significantly impacted the bottom line. Net profit has declined by nearly 16% year on year, coming in at 34.6 crore rupees, which is nearly 35 crore rupees. And digging into the segments, the core amines division saw its EBITDA. And now let's also look at the auto giants Mahindra and Mahindra. and Ashok Leyland. Both have hit record highs, rallying up to 58% from their April lows. The surge comes on the back of strong demand across commercial and passenger vehicle segments, and this is supported by improving margins and also steady volume growth. Analysts say that the momentum in both the stocks could actually continue, driven by a robust order pipeline and festive season tailwinds, underscoring renewed investor confidence in India's auto space. Next up, we have SoftBank Group, which has reported a net profit of around 1.3 lakh crore rupees for the September quarter, and this has more than doubled, last year's earnings. So the jump was fueled by strong valuation gains from its OpenAI investment, as the Vision Fund booked gains of about 18 lakh crore rupees, with 11 lakh crore coming from the OpenAI alone. So analysts had expected profits of roughly 1 lakh crore rupees, making the beat substantial. Now, the results highlight that the boom in the AI-driven valuations, even as experts caution about the possible AI bubble. Meanwhile, since we are talking about SoftBank, so SoftBank Group has also sold its entire stake in Nvidia Corporation, raising around $5.8 billion in a surprise move aimed at freeing up funds for its artificial intelligence push. So the Tokyo-based investment giant also announced a 4-for-1 stock split effective January 1st. Now, the sale signals SoftBank's intent to reallocate the capital towards major AI bets like OpenAI and other tech ventures. So market reaction was muted, but analysts say that the deal shows SoftBank's strategic pivot as it scales into a new technology frontiers. Sony has raised its operating profit forecast for the year ending March 2026 by 8% to 1.43 trillion yen, citing a smaller than expected impact from the US tariffs and also strength of its entertainment and chips businesses. Now, operating profit in the July-September quarter has climbed 10% to 429 billion yen after its music unit, which includes anime and chips businesses, recorded higher sales. Now, Sony has cited that the success of animated movie Demon Slayer. So what stands out this quarter, put simply, is the Japanese conglomerate that was once best known for household electronics, but has become an entertainment powerhouse and is also banking on the growth of anime. US Adani Group has announced a massive 1,126 megawatt battery energy storage system at the Khavda site in Gujarat, scheduled for commissioning by March 2026. So the project is set to host over 700 containerized BESS units, where this will provide about 3 hours of storage capacity to enhance the grid stability, manage peak demand, and also reduce renewable energy curtailment. Now, this move marks a bold step into the large-scale energy storage, supporting India's clean energy transition and positioning Khavda as a global-scale renewable and storage hub. Now, looking at the precious metals, so there has been a focus in the gold prices extending gains to their highest in nearly 3 weeks, supported by expectations of a potential US government reopening, could actually restart the flow of US economic data ahead of an expected Federal Reserve rate cut next month. Next up, we have PhysicsWallah, the rapidly growing Indian edtech company, which has reached a valuation of around 31,000 crore rupees following its latest funding round. The firm began with a modest seed investment of just 30,000 and has scaled sharply through affordable, high-quality online and offline coaching for students. Now, this is backed by major venture capital firms. PhysicsWallah continues building out its offline centers while expanding into new exam segments. So the valuation surge reflects strong investor confidence in India's education technology boom. On to some national news now. Maharashtra government's new ordinance, the Maharashtra Public Trust, changes how public trust and operate in the state. So it limits the number of live trustees to 1/4 of any board and requires fixed-term trustees to step down unless unanimously reappointed. Now, this may force Tata Trust to review the recent lifetime appointments made after September 2025. So trusts that acted on such appointments might now have to revisit those decisions amid ongoing internal governance tensions. Viewers, the nation is reacting with profound shock and sadness to the horrific incident that rocked Delhi last night, and now we have firm response from the highest level. Prime Minister Modi today addressed the tragedy, stating that he was in constant contact with investigating agencies throughout the night. So, in a strong message, the Prime Minister has assured the affected families that the entire nation stands with them in their grief. Most significantly, the Prime Minister has vowed a full, unsparing investigation. He has declared that agencies will get to the bottom of this conspiracy and that those behind this will not be spared. So PM Modi's final promise is clear. All those responsible will be brought to justice. Now, we will continue to track the latest developments as the investigation unfolds. And reports suggest that the probe into the blast near Delhi's Red Fort has been handed over to the National Investigation Agency. Union Home Minister Amit Shah has chaired a high-level security review meeting in the wake of the blast. So Mr. Shah had earlier said that all the possibilities are being explored, and through an investigation, will be conducted taking all the options into account. Let's look at Bihar's phase 2. So voter enthusiasm has continued, the mark of the second and final phase of Bihar Assembly elections. Electoral fortunes of 1,302 candidates, including over half a dozen ministers in the Nitish Kumar government, will be sealed today, with 3.7 crore voters eligible to exercise their franchise across 122 assembly segments. Now, over half of the electorate is aged between 30 and 60 years. So voter turnout has neared the halfway mark by 1 p.m. Meanwhile, state's police have intensified security measures by sealing the nearly 700-kilometer international border with Nepal for 72 hours. With the GRAP 3 restrictions coming into effect amid rising pollution levels, Delhi schools have reintroduced the hybrid mode of learning for students up to class 5. Authorities have directed schools to conduct online and offline classes alternately to ensure safety. So this move aims to minimize young children's exposure to poor air quality as pollution levels continue to remain in the severe category across the capital. Let's look at some global news now. The US Senate has passed a crucial funding bill that could actually bring the longest government shutdown in history to an end within days. So the bill has passed in a 60-40 vote late on Monday, with nearly all the Republicans joining 8 Democrats who splintered from the party to approve it. The deal funds the government until the end of January. Now, the House of Representatives will now have to pass the bill before President Donald Trump can sign into the effect. Now, Trump has signaled that he would be willing to do so earlier. Now, a car explosion outside a district court in Islamabad has left at least 5 people dead and several others injured. The blast triggered panic in the area. Security forces and emergency teams rushed to the scene. Authorities have cordoned off the site and launched an investigation into what caused the explosion. So the incident has raised fresh concerns over security in Pakistan's capital. Viewers, Canadian-Hungarian-British writer David Soloy has won the Booker Prize for Fiction for his acclaimed novel Flesh. So the book, praised for its powerful storytelling and emotional depth, stood out among a strong shortlist. So this marks a major milestone in Soloy's literary career, earning him one of the most prestigious honors in global literature. On to some sports news now. Football icon Lionel Messi has sent out a heartfelt message after making a surprise visit to Barcelona's Camp Nou. Now, returning to the stadium where his legendary career began, Messi has shared his emotions on social media, thanking fans for their endless love and support. So the visit has stirred nostalgia among Barcelona faithful, who continue to celebrate Messi as one of the club's greatest ever players. Drama for Spain and Barcelona. Lamine Yamal was briefly recalled to the national squad, only for the call-up to be withdrawn after Barca reported a fresh injury concern. The teenager had just returned to training, but medical tests confirmed that he wasn't fully fit. Spain's coaching staff decided not to risk him, prioritizing his recovery as Barcelona monitor his progress closely. Team India batter Shreyas Iyer remains doubtful for the upcoming ODI series against South Africa as he continues to recover from a freak injury. Now, medical staff are monitoring his progress closely and a final call on his availability will be taken soon. The team management is keen not to rush his return, prioritizing his full fitness ahead of a busy international schedule. With that, viewers, it's a wrap on this edition of Market Express, but please don't go anywhere and stay tuned to NDTV Profit.
Namaste India. As you all know, I've been traveling around the world with my music. But this one is truly special. Something that's India. From where it all began. The first city of the world, where the Ganga flows. I'm coming to Varanasi to perform at the Namo Ghat. My first raga-based band, Jala, will also perform there. So book your tickets from District app and let's create harmony by the Ganga. See you, Varanasi.
The NDTV Profit has come a long way.
You are the new schools and colleges which people are getting access to education from.
ने बढ़िया आपका काम किया, आपके तो नाम में प्रॉफिट लगा हुआ भाई.
In the world of money and markets, the real currency is clarity.
So you guys democratize information, and I think first you seeded the market, now the market is seeding you back out there.
Decisive, discerning, distinct. NDTV Profit isn't just business news.
We are like visiting faculty occasionally who come and get a chance to share what we can, but I think it's a great service.
It's the new language of markets, and the voices that move markets know it. Understand markets, decode money through the masters who shape them.
I think you're trying to get knowledge to smaller cities and towns, making it simple for retail investors. I think what you're doing is also contributing to the Indian capital markets and Indian economy.
When leaders speak of markets, they speak to NDTV Profit.
We unveil NDTV Golf Pro-Am, India's #1 golf Pro-Am, the course of champions, the conversation of leaders.
What a stellar lineup we have here on the stage of the NDTV World Summit to announce the launch of the NDTV Pro-Am. Arguably India's greatest cricketer, one of India's most distinguished bureaucrats, a top international golfer and also a top Indian pro at the moment. One administrator who is doing more to lift the profile of Indian golf than anyone has in the recent years.
All the top champions, the Tiger Woods, will all come from India in future.
It's great to be here. Golf is growing across the globe and here in India as well.
Whereas now the opportunities are increasing a lot.
Thank you very much. You're starting golf. We want to thank you.
That's very sweet of you. Thank you.
I think that's very, very important.
The NDTV Profit has come a long way.
You are the new schools and colleges which people are getting access to education from.
ने बढ़िया आपका
Benchmarks end in the green for the second consecutive session as the market remains in recovery mode. Nifty finishes close to 25,700 and Sensex gains more than 330 points. Most sectors end higher with IT as a top gainer. Maharashtra government passes Maharashtra Public Trust Amendment Ordinance 2025. Sources say the ordinance will have direct implication on Tata Trust Board structure and impact the resolution passed post the 1st of September. Physics Wala IPO subscribed 6% so far on the first day of subscription. MB Photos issue sees 7% subscription, while Pine Labs IPO subscribed 2.44 times on its final day. Equity mutual fund inflows declined by 19% in October amid high festive spending. SIPs though see rise to record inflow of over 29,520 crore rupees. National Investigation Agency takes over probe into Delhi blast. Investigators find additional 50 to 60 kilograms of explosives in Faridabad. Arrest 2 more suspects. Bihar votes in the second phase of assembly elections, records voter turnout of 60.4% till 3 p.m. with polling being held in more than 45,000 centres. West Champaran, East Champaran, Sitamarhi, Madhubani are the key constituencies. Grab 3 imposed in Delhi. The AQI breaches the 400 mark, falling into severe category, putting a ban non-essential construction and demolition activities. Schools up to class 5 to remain closed and classes are shifted online. Hello and welcome. A very good evening. This is Profit 360 on NDTV Profit and I'm your host Mallika Mishra. Along the next half an hour, we'll bring you the latest on markets as well as national and international news. Let's begin with checking how the markets fared today first. Benchmark indices ended higher with Nifty closing near 25,700 mark. Meanwhile, Sensex gained over 0.4%, ending close to 83,900 levels. Sectorally speaking, Nifty Pharma, Media and PSU Bank and consumer durables dragged the markets lower, whereas on the other hand, IT, FMCG, metal and oil and gas closed in the green, making it a mixed day for the broader market. But let's now go across to my colleague Anushi Vakharia for a detailed market roundup of the day.
Well, markets ended in green today. This is with Nifty near the levels of 25,650 is what we are looking at now. That's an important mark that we are seeing. Of course, gains in the Nifty 50 if we are seeing were led by Interglobe Aviation as well as M&M. In terms of where the Nifty mid-cap indices are headed, we are looking at an uptick of around 0.5% by the end of the session. Gains in the Nifty mid-cap were led by Vodafone Idea, more focused in terms of where the con call was concerned in the last half hour of trade, along with Bharat Forge also, which was buzzing on the back of its results. Coming to the small cap 250, that ended in red, however, with Balaji Mines and Electra Green Tech falling the most. Talking about the sectoral picture, it was a mixed picture that we are looking at. While defense, we saw about a 2% of an uptick. A lot of these counters were buzzing. Nifty IT also emerged as one of the top sectoral gainers. Persistent Systems and Coforge gained the most in the pack that we are seeing. Coming to Nifty Oil and Gas, they also continued to gain for a third consecutive session as well. But what was not working out so well is Nifty Realty, which fell for a fifth consecutive session. So some bit of pressure over there. In terms of Nifty Auto, we saw it gaining for a fourth day in a row, while Nifty Bank and Metal gained for a third day in a row as well. But what's leading or continues to remain under pressure is Nifty FMCG. 7 day of losing streak is what we are looking at. In fact, even Nifty Media, we are looking at about a 5 day of fall. So this is the overall picture that we are seeing in terms of where the broader market, benchmark indices and the sectoral indices have performed in trade today.
Thanks for that summary, Anushi. But moving on, viewers, MK Global CEO of Institutional Equities, Nirav Seth, believes that while oil and gas and consumer discretionary stocks have performed well, the market currently lacks momentum in large sectors like banks and the information technology space. And that's where the challenge actually lies. He points out that earnings growth in key sectors remains in single digits, which has limited broad-based market performance. Listen in.
I think consumer discretionary has done well, oil and gas has done well, and those are sectors that have done well, right? But you clearly don't have the kind of momentum that you need either for banks or for IT And these are big sectors. I'm talking about Nifty, and that's the problem, right? So if your earnings for the key sectors are growing at about single digit or high single digit, there is only so much momentum that you can have in the narrow market, right? But I still feel constructive on the broader market. So I've got a different view over there, and I've been holding that view for some time. That India is largely a story of diversification away from this large cap concentration. Till the time that you've got new companies coming in, you had Lenskart and platform companies, eventually they'll become big enough and be a part of the Nifty and take the earnings momentum forward.
While that was Nirav Seth's comment on the markets, a major development in Maharashtra may have implications for some of India's oldest and most influential charitable bodies. The state government has passed an ordinance that changes how public trusts are structured, and this could directly affect the Tata Trust. To understand the story in greater detail, let's go across to my colleague Nisha Podar. She's the executive editor of corporate stories at NDTV Profit.
Thanks so much for that. Yes, this has come as a twist in the tail in the Tata Trust saga, which we thought after Meli Mistry walking away is over. Now, what has happened is, dated September 1st, effective from September 1st, the Maharashtra government has passed an ordinance amending the Maharashtra Public Trusts Ordinance, and that has made two important changes that could have an implication on the Tata Trust's board structure, composition, and also whatever decisions have been taken in the recent past after September 1st. So the first change is that the ordinance limits the number of trustees to 1/4 who can be life trustees on the board of any public trust, which means the Tata Trusts, which had earlier passed a resolution in October of 2024 saying that all the trustees at the time of renewal will become life trustees, that stands to probably go through a rethink to comply with this particular legal ordinance, which comes into effect from September 1st. And in accordance with that resolution of Tata Trusts, they had gone ahead with renewal. So in the month of October, there was Venu Srinivasan who was renewed and given life trusteeship, and Meli Mistry was ousted from Tata Trust. Now the second ordinance impact and the change is that the renewal of trustees or appointments will have to be unanimous as per this particular ordinance. That also means that while after 1st September, any changes made to Tata Trust board composition, if it comes for reconsideration, will have to comply with the changes of September 1st. So here the big question is whether or not Venu Srinivasan's renewal will put again for voting. And second important aspect is that Meli Mistry, who had filed a caveat with the Charity Commissioner to get a hearing before his renewal, his removal from Tata Trust is really sanctioned by Charity Commissioner, whether or not that will be seen in light of this particular ordinance. I have with me Supreme Court lawyer H.P. Ranina joining in to give us some opinion and details on how to read this particular legality. Mr. Ranina, always a pleasure to have you on NDTV Profit. Now, my first question, what sets to change when it comes to Tata Trusts at the present moment because of this particular ordinance?
Nisha, thank you for having me on the show. But I think this is a path-breaking amendment which has been made by the Maharashtra government, and it has been made with effect from 1st September 2025. It has come into effect immediately on that day. Now, obviously, many of us were not aware of this, but this certainly will have a tremendous impact on what has happened in recent weeks and days in the Tata Trust. What it says is that when a trustee who was for a particular tenure or who was appointed for life, he retires, then he ceases to be a trustee immediately unless and until he is reappointed. And that reappointment has to be done unanimously. Now, normally what happens is in a trust that a trustee has three options. One is to approve the resolution reappointing him. Second is to vote against the resolution. and third is to abstain from voting. But a person is reappointed under this particular ordinance only if all the trustees unanimously agree. And therefore, what has happened, you mentioned about one Mr. Venu Srinivasan who retired on, I think, in the last week of October this year, 2025, before Melanie Mistri's appointment came up. When he retired, he was reappointed for life under the earlier resolution that had passed in 2024, 17 October 2024, if I remember correctly. So that resolution now has no meaning. That 17 October 2024 resolution has no meaning in view of this ordinance. Now the law is very clear. Ordinance is the law of the land. Of course, it will have to be approved by the Legislative Assembly. But until that is done, it is the law of the land. And therefore, under this law, the resolution appointing Mr. Venu Srinivasan for life is null and void. And now they will have to bring a meeting and have a meeting whereby all the trustees, including Mr. Melanie Mistry, because this resolution was due on that particular date when Melanie Mistry was still the trustee and not removed. Therefore, a new resolution will have to be passed. And if all the trustees, including Mr. Melanie Mistry, unanimously agree to reappoint Mr. Venu Srinivasan, then he can be appointed for a period of 5 years.
All right, so 5 years is very critical here to note, because the October 2024 resolution says that you, on your renewal, you will be life trustee. And this particular ordinance says only 1/4 of the entire board can have perennial trusteeship.
Provided earlier they had that clause for perpetual trusteeship. They were earlier trustee, had that clause. So I don't know whether Tata Trust had that clause for perpetual trusteeship, but assuming they did not have that clause.
All right.
It will only be for 5 years at a time.
All right, Mr. Ranina. So that this fight looks like it's not over. There is a twist in this Tata Trust saga. Thank you so much for joining us right here. And I hand it back to my colleague Malika.
Right, Nisha, thanks for that. And as HP Ranina said, this could be a path-breaking development that has come into place. And of course, all eyes will be on what changes at the board of Tata Trust after this ordinance. But moving on, Transformers and Rectifiers has responded to the World Bank's allegations, saying the company was surprised to receive the communication. Speaking exclusively to NDTV Profit, Group CFO Chanchal S. Rajora said the company was part of a larger $24 million project and was taken aback by the allegations, which he described as linked to border-level order issues. Rajora added that the company is reviewing the World Bank's mechanism to challenge the charges and will present its position in due course. Listen in.
We were also surprised when we got this letter on 4th of November from World Bank. Basically, in 2020, we had done a project with Nigeria, right? And we were part of basically a bigger project which was funded by the World Bank, and our contribution was around $24 million, right? And we had supplied all the transformers, and we have received the payment also, right? And we were actually taken aback with this, why this has come up into to us, right? There were some issues with this order on a border level. And then World Bank has last wrote us in 2023 that there are certain changes we wanted to see that is happening in the company or not regarding the corporate practice and us. And we told them anytime you are welcome if you want to see anything. Well, they did it this as per our information, they did it with all the companies which were involved in this particular project. And after that we never heard anything about from them. So, suddenly this has come up. So, we are taking up with the World Bank very strongly that why this has come up to us.
No, but the allegation is alleged corruption and fraud. So, corporate governance is a different thing. It's not about issues with the order. The allegation of corruption and fraud. Where do you think that would have come from?
No, we don't know, because we were not at all involved in any kind of these things, and we are very, very clear from corporate practices in our side that we don't tolerate these kind of things if anything comes up.
What is the mechanism you have to challenge this?
So, you know, we have already mechanisms in place, and we are taking it up on that, and at every level there are the controls in our companies in place. Look, understand, if the processes and the governance independence is not in the company, we cannot be the first company in this country to declare the results in 8 days time, which takes a great amount of energy and great amount of work involved into that.
But specifically on this Nigeria project, you said that it's from 2020. When was it completed?
Look, this project was completed in 2022.
Okay.
Right, we got the 90% payments of the entire transactions in 2022, and last 3 transformers which we sent them, they were toppled in the port. So we have to basically make the new transformers and send them, which we did in 2023-24, right? And the payment of the balance 10% we received in this year in April itself. So, understand one thing, had anything was there related to us or our practices or ethics, World Bank would have not released this payment to us.
And let's put the spotlight on Britannia Industries, as this stock slipped sharply in trade today, ending lower by over 4% after the company saw a significant leadership change. The FMCG major announced that CEO Varun Berry has handed over charge to Natarajan Venkataraman, who will serve as the interim managing director and CEO till December 15th, 2025. From that date, Rakshit Hargave will take over as Britannia's full-time MD and CEO. Hargave, whose appointment was confirmed last week, was earlier the CEO of Birla Opus, the Aditya Birla Group's paint venture, and has held leadership roles at Hindustan Unilever, Jubilant Foodworks, Nestle India, and Tata Motors in the past. Varun Berry, who has been associated with Britannia for over 12 years now, was elevated to the top role earlier this year, steps down as part of this transition now. The leadership change comes as Britannia's board lays out its next phase of growth, aiming to evolve into a global total foods company, as outlined in its note following the November 5th board meeting. And the Adani Group is making a big move into battery energy storage to power India's green future. The group announced a massive 1,126 megawatt project with 3,530 megawatt hours of storage. Now, this will use over 700 battery containers and could potentially become India's largest setup and one of the world's biggest at a single site. And this is all happening at Khavda, their huge renewable energy park. To know more details on this project, let's go across to my colleague Varsha.
Adani Group has announced its entry into battery energy storage system, which is currently the high growth sector where every company is going into. The project will have power capacity of 1,126 megawatt and energy capacity of 3,530 megawatt hour. This will be one of the world's largest single location best deployments, and the commissioning is expected by March 2026. This will strengthen India's energy security, and the project will ease peak load, reduce transmission consumption and improve grid reliability, and this will mark a major leap when it comes to India's energy independence. Onto the scaling up of ambitions, if I were to talk about, the group targets 15 gigawatt hour of BESS capacity by FY27. And the long-term plan is to reach 50 gigawatt hour within next 5 years. And this position Adani Group as a global leader in large energy storage system, and which will support India's net zero goal. So overall, group is actually entering into a high growth segment, that is BESS.
Thanks for that, Varsha. And let's now take a look at the latest data from the Association of Mutual Fund of India. October 2024 saw a dip in investments into active equity mutual funds, with net inflows dropping 19% to 24,690 crore from 30,422 crore in the month of September. But on a brighter note, SIP inflows hit a record high of 29,529 crore rupees. But for more details on each of these categories, let's go across to my colleague Alex.
The headline numbers first. On a composite level, the mutual fund industry has seen inflows of over 2.15 lakh crore rupees. And that seems like a very large number, but it's really par for the course, especially when you saw outflows of about 1 lakh crore rupees in the previous month. This is what normally happens at the start and end of a quarter, respectively. October was the start of the quarter, and so you saw substantial inflows in the way of fixed income mutual fund schemes. Outflows is what you saw at the end of the quarter in September. What is more interesting is the SIP flows data, where there is a fresh record high, once again 29,500 crore or thereabouts, and that is robust inflows into the mutual fund space as a whole. What else do you want to pay attention to? In fact, in the month of October, you saw lower inflows into actively managed equity mutual fund schemes pretty much across the board. So if you remove the new fund offers from both October as well as the month of September, then in October you had inflows of close to about 20,000 crore rupees, and that compares with 29,000 crore rupees in the previous month. A large part of those inflows in the month of October have come through in the form of flexi cap funds, which got inflows of close to 9,000 crore rupees, and that is a good sign because people are gravitating towards the more diversified mutual fund schemes. Both mid cap as well as small cap mutual fund schemes actually got pretty robust inflows, but they were lower than what you saw in the previous month. Hybrid mutual fund category as a whole has gotten more inflows than it got in the month of September, and there have continued to be sizable inflows into gold ETFs. In fact, close to 7,800 or 7,740 crore rupees into gold ETFs. It is lower than what you saw in September, but still, that's a very large number. And even the other ETF category has gotten inflows of about 6,200 crore rupees. And this subcategory contains equity as well as silver and certain other ETFs. So that's something to bear in mind. But all told, your takeaway should be that in a wobbly, uncertain environment, there have been inflows. And remember that it was also the festive period. So people put a pause to their investments quite often on account of the higher spends that they might have during the festive season. So really, this is par for the course.
Thanks for that, Alex. And moving on, viewers, voter enthusiasm remained high in the second and final phase of the Bihar Assembly elections, with a strong 60.4% voter turnout recorded by 3 p.m. Polling began at 7 a.m. across 122 key constituencies in 20 districts and will continue till 5 p.m. Meanwhile, in a bid to ensure peaceful and fair polling, security has been stepped up across the state. The Bihar police have sealed the 700-kilometer international border with Nepal for 72 hours as 7 districts voting today share that frontier. Bihar DGP Vinay Kumar confirmed the move, calling it a precautionary measure to prevent cross-border movement and maintain heightened security, especially following the blast incident in New Delhi. My colleague Prabhakar now joins us from NDTV for more details on Bihar elections. Prabhakar, what are you picking up?
So it's a very, very crucial phase, I would say. 122 assembly constituencies going to poll, and this entire region is the Simanchal area, basically the bordering districts of Bihar, which borders not only West Bengal but also Uttar Pradesh and Jharkhand. So all the districts which borders various other states are actually going to pay. These are the peripheral districts, I would say, and this is the phase where the MY combination would be put to test. MY stands for the Muslim and the Yadav combined, which is seen as a conventional vote bank of Mahagathbandhan of RJD in particular. So this particular phase would test, and this will also test the X factor in the play. X factor is with OSC, AIM, which has fielded around 45 candidates, and they have been doing well in these Muslim-dominated seats. So that would also be put to test whether OSC is able to dent into that Muslim vote bank. So politically speaking, a very important phase, very crucial phase, and a very interesting phase, I would say. Also, Prashant Kishore, his Jansuraj is contesting on all the 243 assembly constituencies of Bihar. So how they score here, whether they have been able to make a dent into either NDA or for that matter India Alliance vote bank, it is something which the result on the 14th would actually reflect.
Thanks for that, Prabhakar. And moving on, viewers, let's now turn our attention to the blast case in Delhi that took place last night. Firstly, anti-terror agency NIA has taken over the case in which 9 people have been killed and 20 injured. Umar Mohammed, the key suspect and suicide bomber in this case, is a member of a radical doctors group that coordinated on Telegram and has links to the Jaish-e-Mohammed, a Pakistan-based terror group. Remember, viewers, this group was also responsible for the Pulwama attack. 2 other names have also emerged. One is of Dr. Shaheen Shahid. She was arrested in connection with a massive explosives haul in Faridabad near Delhi. This woman was apparently tasked with setting up Jaish-e-Mohammed's women wing in India. The other suspect is Tariq Ahmad Malik, a 44-year-old man tasked with ensuring the security and safety of a bank in Jammu and Kashmir. He is now accused of being involved in a security breach in the national capital. Meanwhile, investigators have also recovered additional 50 to 60 kilograms of explosives in Faridabad and arrested 2 more suspects. And viewers, on that note, it's the end of this edition of Profit 360. But do stay tuned to this channel as we continue to give you a lot more news and updates. This is Malika Mishra.
Namaste India. As you all know, I've been traveling around the world with my music. But this one is truly special. Something that's India. From where it all began. The first city of the world, where the Ganga flows. I'm coming to Varanasi to perform at the Namo Ghat. My first raga-based band, Jala, will also perform there. So book your tickets from District app and let's create harmony by the Ganga. See you, Varanasi.
The NDTV Profit has come a long way.
You are the new schools and colleges which people are getting access to education from.
ने बढ़िया आपका काम किया, आपके तो नाम में ही प्रॉफिट लगा हुआ भाई.
In the world of money and markets, the real currency is clarity.
So you guys democratize information, and I think first you seeded the market, now the market is seeding you back out there.
Decisive, discerning, distinct. NDTV Profit isn't just business news.
We are like visiting faculty occasionally who come and get a chance to share what we can, but I think it's a great service.
It's the new language of markets, and the voices that move markets know it. Understand markets, decode money through the masters who shape them.
I think we are trying to get knowledge to smaller cities and towns, making it simple for retail investors. I think what you are doing is also contributing to the Indian capital markets and Indian economy.
When leaders speak of markets, they speak to NDTV Profit.
We unveil NDTV Golf Pro-Am, India's #1 golf Pro-Am, the course of champions, the conversation of leaders.
What a stellar lineup we have here. Hello and welcome to KYC. I am Sharad Dubey and you are watching KYC at NDTV Profit, and today the company which would be in focus would be Protean Egov, and likely to actually give you a heads up about this company, why we have actually got this company in our special segment, and there are certain questions which we need to ask. The first one being is,
will this depressed margins which we are seeing, there will be a turnaround in the coming quarters, or the pressure will still remain there? The second question would be, is the diversification very important going ahead for the company, and will AI help the public stack overall, the digital infra stack which the company claims it is it going to help in the long run? What would be the opportunities for the digital transformation going ahead, especially in emerging economies? When I speak about emerging economies, it's the Asian markets or the African markets, and even the more expansions and acquisitions, since they have a high cash reserve as well. So this is the important questions which we'll be asking. But just to give you a flavor about the company, the overall details. First of all, the company was incorporated in December 1995, an old company, IT-enabled solution companies and e-governance related solutions which the company was offering. Also, let's see what the company actually does. It's the largest issuer of identity, the digital tax identity we call PAN. Interestingly, they have developed citizen-centric e-governance numbers, the solutions coming in, and 21 nationally critical e-governance stacks are there. So we keep on getting newer stacks. Main categories, of course, let's pull up the foundational identity, tax systems and pension systems is something which the company operates in. Digital identity, e-KYC is very important, followed by digital authentication and the e-signature. This is where the company focuses on. But if you look at the PAN business, that is giving the majority of its revenue, you see the company issues fresh PAN cards, also reissues them, and also runs tax information network as well. So you see it's a flywheel coming in the taxation space, and overall they have a market share of 64%. And look at the numbers, that is something to look at, the PAN card numbers, the online PAN verifications, and interestingly they issue 7 to 8 crore PAN card in a year. Let's just see the tax services revenue, how that has panned out, and you see the numbers are humongous for the company's size. It has been on the higher tick, and of course these are the H1 numbers which you are looking at, the slight numbers coming down as well. But let's look at the PAN issuance, how they have panned out. Overall, if you see, that has been on a rising trend, and now you see some kind of a slight degrowth coming in from FY24 to FY25. But the pension services, that is also something to look at. The revenues are been doing well. The social security and the welfare numbers, that has also been on the stronger side. It's a leading market share of almost 97% coming in. Interestingly, if you look at the identity service, overall we had already discussed, it's basically coming on the online PAN segment. And see this, these are the 4 important services coming in. And lastly, the revenue stream wise, where does the company actually get its revenue from? Most importantly, tax services, followed by pension services, lower names coming in this space. But let's go back to the show. There are important rating parameters which we give for our segment, and based on that we give the overall rating. It includes income statement, balance sheet, cash flow, return ratios, and also shareholding, street trade valuation and street coverage. And the first, we could say the first parameter I have picked up is the income statement. Company is also in focus because of its quarterly earnings in the month of September. Those numbers were kind of a decent, kind of a mixed, but let's look at the overall numbers, how they have panned out. They have been doing well. For FY24-25, the growth did stagnate, and the margins, there was a dip coming in each year itself. So that of course raised concerns in my analysis, and the margin trajectory on the lower side. But the Q2 numbers, at least the revenue front has been decent. So I have given a neutral rating going ahead for Protean Egov. The second parameter is balance sheet. It's very important to track this parameters, and if you see the cash and bank balance, that is something which I have been watching out for. It has been decent. Not so much of deployment has happened. 130 odd crore of balance is still there, and it's a stable balance sheet. Largely it's a debt free company also. From my side, this will be again a neutral. Nothing very great to see in this balance sheet, but important is the cash flow segment. Cash flow also has 2-3 important components which we track, and this is an asset light business. We could say a tech business. The operating cash flows have been on the upper side. If you compare the FY25 numbers, if you could just show the cash flow numbers, the PAT numbers, that itself has also done well. That's around roughly 93 odd crore rupees. It's stable, but there's a margin which we generally analysts have, that is called a cash flow conversion to PAT, and that is back on the higher side. That's almost 209 odd percent. So net I would give a thumbs up when it comes to the cash flows. The fourth trigger is the return ratios. Return ratios is a cause of concern for me. FY29 to FY22, we saw a significant jump in ROC, which is called return on capital employed. But after that, it has been a downhill for the stock. FY23, the number was 13%, then came to 11%, and now currently it has come down, you could say, almost below the 10% mark. So that becomes a concern for our analysis, and same thing goes for the ROE numbers also, which is called the return on equity numbers. There was a jump till FY20, but after that it has been on the downtick. So it will be a thumbs down for Protean Egov when it comes to the return ratios when we calculate both ROCE and ROE. Shareholding is very important to track this. Shareholding, if you see the FIs and DIs, they have been actually on a reduction spree. FIs, they held at most 10% stake in March 24, but then see September 25, the recent exchange filing, it's down 8 to below 8% mark, and DIs, that's also significant downtick, almost 20% of the DI holding has been sold out as well. So the institutions are not giving a thumbs up, and the public shareholders, that has actually increased a lot. It's almost 70% float is held by the public, that is the retail audience. And after that, what happens is the stock, a lot of distribution happens in these stocks if larger hands are not holding these counters, and because of that we of course saw a downtick coming in the stock prices as well. So from shareholding pattern point of view also, I am giving a thumbs down. Street cred, not much to happen, because we see large hands are leaving the counter, and you could say retail hand is taking in a 1 month performance, not much, 3% down, 6 month 32% downtick, and there's a massive share underperformance coming in because of a huge loss of contracts which was earlier announced by the company. So that is something which the street was spooked by. 5-year performance is also nothing much has happened. If you are holding this stock right now also, most likely you are in loss. So it will be very important to actually understand what's the long-term view coming in, and because of that in our show later on we will be talking to the management as well as where does this company stand, what happens to the investors or the shareholders or even our viewers going ahead for this counter. So for the street cred segment, I will be giving a big thumbs down in this segment also. Valuations are 7th parameter. So once the prices fall down, valuations do become attractive, provided a company has a good growth trajectory going ahead, and this is something which is a rule of thumb we follow as analysts here. And the EPS numbers, look at that, that's well below the 30 times in FY26, the P also 31 times, 27 times. So largely earlier these trades were between 40 to 45 multiple they used to trade with. Now that significant correction has happened, it is, you could say, in line with some large IT companies as well, but we cannot call this company an IT company. It is somewhat like a platform company, but it has a digital public infra angle to it. So that is something which is important. But yes, the government exposure is on a very high basis as well. So for valuations front, since they have become attractive on stock fall, I will give a thumbs up. Let's give the street coverage. Not much coverage, just 5 analysts are there, but none of them surprisingly have a sell rating. I checked the numbers, the buy, there are 4 calls coming in from analysts, while hold, it's only 1 analyst giving that call. So net, there is an average upside, and the Bloomberg average which we took is 36% for the next 12 odd months. That means there is a good chance that the stock might bounce back. That's what the analyst community is feeling. But from my side also, it will be a strong thumbs up. But before going into the entire setup of Protean Egov, let's ask the management also how things pan out. Let's just revise with you the KYC ratings, how things have panned out for Protean Egov. Their numbers had come, of course, a week ago, and we see largely nothing happening in terms of income statement. The Q2 numbers were decent, but on the bottom line there was some kind of mix. We've given a neutral to it. Same thing follows for balance sheet, but cash flow, that conversion ratio was good. So I've given a thumbs up for it. But then again, the return ratios, that's the main culprit here. Over the last 4 odd years, you're seeing it's continuously falling. ROCs, ROEs getting impacted. So these are the important ratings which we had given. But the same thing goes for shareholding. Institutional participation is down in this counter. Street cred, nothing much returns coming for the shareholders. So the patience is being tested for this counter. That's why this makes the valuations attractive. and even analysts are bullish because of this. So we have given you the entire criteria how this move has happened, and KYC rating, the final rating, not much to offer right now. Company still needs to prove itself to the markets. 4 out of 10 I have given, 4 out of 8 I have given for the KYC segment. Now, of course, there are some positive points, there are some negative points, but we would like to know directly from the horse's mouth, from the management, where does the company stand and how things move ahead. Of course, the first question we will be wondering, we will be actually joined by the MD and CEO, Mr. Suresh Sethi for Protean Egov. And sir, a strong growth has been seen in the revenue sequentially. What led to this, and what would be the growth guidance for the tax services and central record keeping services going ahead?
So it has been a good quarter for us. We've shown good growth. So there has been a 19% growth quarter on quarter and a 14% growth year on year sequentially. What has really contributed to this has been, strong performance across some of our businesses. CRA clearly again is showing growth. We have a 12% year-on-year growth clocking in that business. There have been a lot of underlying, tailwinds also with the pension regulator taking up a lot of initiatives and reforms to open up the ecosystem for better pension penetration. In spite of a healthy growth, we still have a huge headroom in that business. What has been especially strong for us also is the fact that our new businesses, for the first time this quarter, have contributed 12% to our overall top line. And this is the first time we've hit a double digit over there, and we expect this to continue, a long time focus of the company to diversify into new areas. The new areas have been strongly led by our, investment into building multiple digital public infrastructure rails across different sectors of the economy, be it insurance and be it other areas like health, agriculture, digital commerce, and that has contributed. Happy to share that we almost have now an order book of 1600 CR, which is almost double our annual revenue top line. And that is contributing well. And there has been good contribution again this quarter from our new businesses.
That's pretty interesting. Suresh mentioned these points, but there are some concerns also which the street has regarding your company. The first question is, of course, the margins. However, they have seen a dip and now in higher teens. What led to this margin pressure, and what would we be looking going ahead?
So see, margin pressures are coming, one from the fact that there has been a slight change in the revenue mix for this quarter because of the project-led businesses kicking in, which naturally have more project-related margins as compared to the other core businesses. Naturally, we've also set up a subsidiary this last quarter in Dubai. So there have been some expenses to that extent. So there has been a little bit of impact of margin because of these couple of events. But otherwise, we will see better margins as some of the products and SaaS-related revenues also start picking in, which is basically the app layer in which we were, contributing and building above the digital layer. To just give the background, as we move into unlocking multiple sectors of the economy, the idea is to again see what can be done in the app layer, where you are talking about consumer and enterprise consumption of those services. And the company has again put investments behind people, teams, technology in building the app layer.
Interesting. Suresh mentioned about the margin growth levers, and this also includes your product and SaaS segments, you could say consumption as well. But company still has sufficient cash balance of around 800 odd crore rupees. Suresh, any kind of deployment or acquisition plans on the anvil?
The share works both ways. One, naturally, it gives us the strength to participate in large projects. And even as I called out the order book earlier, part of the cash gets deployed into funding for these projects, because when you're working in project-led business, there's always a mismatch between investment and return. The other area clearly we've been calling out is looking out at interesting emerging tech opportunities, any businesses which give us either tech edge or they give us market access So we are looking always on the lookout for those inorganic growth opportunities, and that is where the balance sheet gets used. And last but not the least also is the fact that we've clearly shown intent and have got a few wins in the international markets, which again are largely turnkey projects and which again consume some of these funds. So that's where we are putting the money to good use. And the company continues to remain debt-free with a strong, cash balance with us.
Well, we spoke about international order wins also, but there's a landmark mandate you have won in the domestic markets also. That is the UIDAI landmark mandate coming in, and that's worth 1,370 crore rupees. Now, give us some details, give us the flavor. What are the suggested timelines going ahead, and will there be incremental revenue contribution coming from this segment? Please quantify that.
So that's an amazing deal because first of all it gives us or places us in a position where Protean becomes the only company today to provide two foundational IDs, be it PAN and now it is Aadhaar. So we are really contributing at the foundational level in building our digital nation. And this mandate again is something we've already started working on. We should start seeing our quarterly revenues coming in the third quarter of this year. But clearly on complete deployment, we see a revenue of 200 crores per annum coming annually in a recurring manner once we have completely deployed across the mandate we've got for deploying in 188 districts.
That's pretty interesting. The third quarter is something which you'll be looking out for. The bump up will happen from the UIDA order. That's a 1,370 crore order win. And to put in perspective, 1,600 crore is the order book of the company and the revenue is just half of it. So these are the three numbers you should know when you are hearing what the management is stating. But of course, apart from that, speaking of diversification, what's the growth outlook looking like for the new business? What kind of revenue contribution we can expect from this segment going into the future, Suresh?
So definitely, Share, it's a good trajectory for us, and we see this consistently growing because as we go beyond our core of PAN, pension, and digital identity at the foundational level, we clearly see our diversification into multiple DPIs, playing out. And these are either largely project-led revenues which come in. As we are unlocking this value, we are also building a very strong suite of BFSI products, which are be it on the API marketplace front, could be products like enabling CKYC filing for financial institutions, and there are other areas which come in as you unlock value across multiple sectors. And other than that, clearly international remains a focus, and our investment in also powering enterprises with infra using our sovereign Protean cloud, be it for our own large scale projects or to enable the industry, are the other areas we see coming in and starting to contribute. So we see this consistent growth and diversification coming through. And we are clearly very glad with the double-digit contribution which has come from these businesses in this quarter itself.
That's pretty interesting. Suresh, AIs have also been the talk of the town, especially with a company which is your digital public stack, as you say. So how will this company benefit from this? Will we see some incremental gains coming in the financials going ahead?
So definitely the answer is yes. If you look at AI, I would say it's become pretty embedded in a lot of our, businesses now. So there is an external, sort of application of AI because as we look at the various projects we are working on today, one is in building the core tech itself, whether we take our, Sarsai, CKYC revamp, we are looking at Bima Sugam of building the insurance DPI. All these areas today have some element of AI coming in, be it from a deduplication perspective, from a fraud risk management perspective. So these technologies are, AI today is a pretty ambient sort of, technology getting embedded into various workflows and streams. Clearly, the other application of AI is naturally making ourselves more efficient, because as we even, whether it is managing large scale projects, managing CRM, doing internal digitization of services and driving efficiency over there. So AI for us naturally means that we have to make ourselves digital first internally, and we also have to leverage it for the various businesses that we are bidding for. And otherwise, if we look at the application layer, clearly AI does bring the differentiation factor into a lot of the build we do over there.
Interesting, Suresh. AI is the future, but the present is also there, which is important, especially for the global expansion front. So what are the plans for this segment? Any kind of strategic outlook coming in?
So global markets, Aisha, the focus has always been to look at our core, strength and competence in building digital public infrastructure. So we are clearly looking at economies and countries where the digital rails are at various stage of early evolution. And even if we see the the Government of India and PM's push for supporting the digital infrastructure for the global south, the focus has been clearly looking at Africa, Southeast Asia, Middle East as of now. We have multiple engagements going. I would like to also share that out of all the exposure and experience we've had in building digital public infrastructure, we are also taking a DPI in a box approach, which technically means that you are looking at a modular playbook of various digital public goods. And to just explain it further, you're looking at identity as a DPG, you're looking at payments as a DPG, you're looking at verifiable credentials. When you bring all these together, you are able to put together a workflow or a stream where you are able to create enablement for an entire ecosystem, be it from a discovery perspective, fulfillment perspective. And we are actually using this playbook to create faster implementation, which moves into months rather than years, and you can do quick POCs and you can show value on the ground at a very early stage. Currently, as we reported earlier, we've had 2 wins. So in Morocco, we set up an education DPI. We've had a engagement again working in Ethiopia, and we are currently involved in multiple countries at this stage. And in some cases, there are advanced discussions for getting the mandates.
Interesting, Suresh, but my last question would be on the order book front. You had mentioned earlier 1600 crores is the number, but I want to dig deep into that. Which sectors, this demand is coming in from, and how the inquiry is coming?
So see, when we look at the entire bouquet of services, we see the focus still coming very closely on identity and BFSI-led infrastructure, which is getting generated. So when we look at our, clearly the large components of this order book, there is the CERSAI KYC, which is again a KYC initiative to make the KYC processes more efficient, and therefore again power the entire BFSI sector using that, be it the capital markets or the regulated entities in the financial services sector. The other area is clearly building the insurance DPI. Insurance, I think if we look at it, the 4 verticals of financial services, insurance, capital markets, pension, and banking. So that is going to be a great initiative because it will connect the insurance sector in a very meaningful way and create efficiencies and unlock value by bringing all intermediaries and the customer at the heart of it. And lastly, Aadhaar again is a project which is a very foundational in nature. So a lot of identity and BFSI-led expansion is happening as we see it.
Well, that's pretty interesting, a BFSI-led expansion coming in. But thank you very much, Suresh, for taking out your time and sharing the growth plans for Protean Egov. And interestingly, it's a KYC-related business and coming to a show which is known as KYC. But if you're tuning in, to give you the entire gist of the conversation over the last half an hour, the 3 important management takeaways we have taken. The new business revenue, that contribution is expected to go up. It's already jumped from 4% to 12%. Going ahead, the margins might be on the higher side, especially with the product and the SaaS segments. These segments, when they get their launch in, a higher margin accretion might take place as well. And lastly, the 1370 crore order coming from UIDAI. Now this revenue accretion, that will start kicking in from the 3rd quarter as well, and that's pretty much very much important if we look at the company's growth trajectory, as the stock is already beaten down as well. But that's enough for our show at KYC. Stay tuned to NDTV Profit.
Presented by Canara Bank. Together we can.
Namaste India. As you all know, I've been traveling around the world with my music. But this one is truly special. Something that's India. From where it all began. The first city of the world, where the Ganga flows. I'm coming to Varanasi to perform at the Namo Ghat. My first raga-based band, Jala, will also perform there. So book your tickets from District app and let's create harmony by the Ganga. See you, Varanasi.
The NDTV Profit has come a long ways.
You are the new schools and colleges which people are getting access to education from.
नहीं बढ़िया आपका काम किया आपके तो नाम में प्रॉफिट लगा हुआ भाई.
In the world of money and markets, the real currency is clarity.
So you guys have democratized information, and I think first you seeded the market, now the market is seeding you back out there.
Decisive, discerning, distinct. NDTV Profit isn't just business news.
We are like visiting faculty occasionally who come and get a chance to share what we can, but I think it's a great service.
It's the new language of markets, and the voices that move markets know it. Understand markets, decode money through the masters who shape them.
I think you're trying to get knowledge to smaller cities and towns, making it simple for retail investors. I think what you're doing is also contributing to the Indian capital markets and Indian economy.
When leaders speak of markets, they speak to NDTV Profit.
We unveil NDTV Golf Pro-Am, India's #1 golf Pro-Am, the course of champions, the conversation of leaders.
What a stellar lineup we have here on the stage of the NDTV World Summit to announce the launch of the NDTV Pro-Am. Arguably India's greatest cricketer, one of India's most distinguished bureaucrats, a top international golfer and also a top Indian pro at the moment. One administrator who is doing more to lift the profile of Indian golf than anyone has in the recent years.
All the top champions, the Tiger Woods, will all come from India in future.
It's great to be here. Golf is growing across the globe and here in India as well.
Whereas now the opportunities are increasing a lot.
Thank you very much for starting golf. We want to thank
Well, that's very sweet of you. Thank you.
I think that's very, very important.
The NDTV Profit has come a long ways.
You are the new schools and colleges which people are getting access to education from.
नहीं बढ़िया आपका काम किया आपके तो नाम में प्रॉफिट लगा हुआ भाई.
In the world of money and markets, the real currency is clarity.
So you guys have democratized information, and I think first you seeded the market, now the market is seeding you back out there.
Decisive, discerning, distinct. NDTV Profit isn't just business news.
We are like visiting faculty occasionally who come and get a chance to share what we can, but I think it's a great service.
It's the new language of markets, and the voices that move markets know it. Understand markets, decode money through the masters who shape them.
I think you're trying to get knowledge to smaller cities and towns, making it simple for retail investors. I think what you're doing is also contributing to the Indian capital markets and Indian economy.
When leaders speak of markets, they speak to NDTV Profit.
NDTV Good Times.
Agarwal Packers and Movers Limited. Man with the cap. Not 300, 300, 300.
Hi, we're talking about Your Money Matters on NDTV Profit, and my name is Alex Matthew. This show gets you actionable insight on everything personal finance, and that sometimes relates to investments, it sometimes relates to expenses, and other times it talks about philosophy or it talks about tax. Today we're going to talk about two mutual fund schemes at the start, and this is from the actively managed mid-cap category. It's a pretty popular segment of the mutual fund industry, and what we've chosen is the top two schemes by assets under management. It's a simple comparison, but not necessarily a simple one to discuss. Joining me to talk about these two schemes is Santosh Joseph, the founder of Germinate Investor Services. Santosh, there's actually quite a large gulf in terms of assets under management between the top scheme, which is HDFC mid-cap, and Kotak, which is the second. Nearly 30,000 crore rupees. You can fit a whole lot of schemes in that gulf between the two, but these are the top two. What is the standout feature of both of these schemes in your opinion?
Well, to begin with, you will soon realize that in most AMCs today, the mid-cap and the small-cap funds have gone on to become the largest for the diversified equity category. It's no longer, the large cap traditionally or the flexi cap. Today, you have the emergence of a diversified equity fund being so large, but in the mid cap category. So that's a good thing. And another good thing that we have to, commend ourselves for talking today is that it's great to be talking about mid-cap funds when there's strong performance behind it. But today, in the last 1 year, when we have very little to talk about mid-cap, it's great that we are actually analyzing these two mid-caps and the top in the category. In fact, you rightly said so that there's a 30,000 crore difference between the two, and there's so much of the industry that can fit into the two. The first one being almost at 85,000 crores, the second one at 58,000 crores. These are not small numbers by any standard.
Yeah, good point. So therefore, how do you distinguish between the two? HDFC, for example, is going to have both of these will have a pretty long track record. What are the various metrics at the start that you would look at when you would compare these two, and then we'll delve into the details of each one of them?
Yes, both have a long track record. In fact, both have almost 15 plus years of inception if you just look at by the date of the fund. But I'm taking for today's conversation data which is 5 years and less, simply because you remember 5-6 years ago, we went through the SEBI recategorization and the reorganization of the schemes. So based on that data, when we look at the funds, both of them are not only in size, but also in performance and also in terms of number of stocks. At some level, there's very healthy competition. And towards our conversation coming to an end, I'd like to tell you what this healthy competition does to an investor. But to begin with, what is good about this is you got a very wide, diversified set of stocks that these two actually present. Now, the question is, which one do you choose and why do you choose? And we can quickly look at the numbers. HDFC's got over 75 stocks, whereas Kotak has got over 65 stocks. HDFC seems to be slightly more diversified. Whereas when you look at the top 10 holdings, you'll notice that there is a difference even in the top 10 holdings between the two large mid-cap funds. In fact, when I was looking at these numbers, you can see it on the screen also. When you put the top 10 holdings out, there are just two stocks in the top 10 holding which are common. Now, this doesn't usually happen in a flexi cap or even in a large cap, because there you'll see a lot more common names. But when it comes to mid cap, this is where the fund manager actually has got room for active selection and active weights. Therefore, you see just two stocks common, 8 stocks unique in both their portfolios.
What would you say about the size of the schemes in terms of number of holdings? You have 75 that HDFC mid-cap holds and 65 that Kotak holds. And sometimes you would question how much of this is truly mid-cap. Would you agree?
You're right, but I'll just add another point over here. When you look at both the funds, the top 10 holdings, they're near 30%. In fact, HDFC is at 32%, Kotak is shy of 30%. So they're not very far off in the top 10 sector weight. Now, the rest, there's a long tail. Both of them have a long tail. HDFC's got a little more longer tail, maybe about 10 odd stocks more than that. It also tells you that there is depth in the mid-cap space for the portfolio manager to actually buy into so many stocks. And sometimes it's about conviction, which will be figured in the top stocks. And sometimes you're about participation, where you have a longer tail of stocks.
Okay, let's talk about that sector weightage, right? Because that's another factor to talk about. Would you say that they're more or less comparable between the two, or is there a significant difference?
Well, as you can see on the screen, you have both the sectors. The difference in one is that between HDFC and Kotak, the common part is that both of them have banking and financials as the heaviest weight. But after that, you'll start seeing a difference between IT, between pharma, between miscellaneous, and even some bit of exposure to commodities and energy. Now, this is actually what drives the uniqueness of both the portfolios. Now, if you notice, very similar structure in terms of the number of stocks, but when it comes to sector weights and it comes to stock weight, the portfolios start to diverge between each other.
Yeah, it's interesting because a lot of these fund managers very clearly stipulate, Santosh, that they don't really have a sector preference. They have a bottom-up approach to stock picking, and any sector allocation is incidental, but it will still indicate where they are placing their bets, where they are putting the money. So it's important to take note of as well. Would you also look, and you kind of already alluded to this, but portfolio overlap. There's very little between the two, isn't there?
So the portfolio overlap in terms of percentage is 26. In terms of actual stocks, without taking the weights into consideration, there are 19 common stocks between both. Now, let me remind you again, HDFC's got about 10 stocks more than what Kotak has got. But assuming you got 65 stocks and 75 stocks, that means you got a universe of 125, 130 stocks. You have only 19 stocks that are common, which means there is a broad based. Now, when I was talking about the top 10 stocks, there are two common top 10 stocks between the both, which is Fortis and Ipca Laboratories. Now, if you notice that both of them happen to be from the same sector, therefore, if you notice that if I remove that one sector out, 8 of the top 10 stocks are unique.
8 of the top 10 stocks are unique. That's interesting. What is that meant for their relative performance? First, comparing just these two and how they relate to the average performance and the best and the worst performance of the sector, of the scheme category.
Okay, so let's break this down in 3 ways. Number one, we'll talk about the standard deviation. What is the risk it carries? Thanks to HDFC having a slightly broader framework of stocks, they carry a slightly lower standard deviation. Maybe the beta is also marginally lower than Kotak. On the other hand, when you look at performance, when you look at over 1 year, 3 year, 5 year, and even on an SIP basis, clearly in a tough game, HDFC seems to be winning this game by a marginal outperformance compared to Kotak. Now, when it comes to 10-year, this is where I want to give some good news to the investors. Having these two together, or maybe let's say put it in tandem, where you didn't have the obvious choice of choosing, but you went with both of them, the returns are converging. So when I look at the 10-year trailing return, let's say HDFC would be at maybe 15 odd, even Kotak is at 15 odd. The difference is just 0.2, 0.3. So what does it tell you? You have the luxury of choosing unique portfolios, at least unique in terms of the way they're structured and they're working. 1 year, 3 year, 5 years, there will be difference in performance. But when you stretch this, if you're in the right space with the right set of people managing your funds on a 10-year basis, you're going to be a winner. Now, you're going to be a winner not by concentrating, but diversifying. Let me remind again, 130 stocks in the mid-cap is a great set of universe to be in. and unique stocks being high and less commonality in the top 10 is a beautiful picture for a portfolio to be constructed with two guys fighting for top spot.
Okay, just to reinforce some points, you mentioned standard deviation, and we've actually discussed this on the show many times, but it bears repeating. How do you describe this? And you can perhaps look at it with an example that you've already quoted. And second, you also mentioned beta. Why is that important to look at?
Okay, first let's go with beta and then let's go to standard deviation. Beta is the extent of sensitivity of the portfolio to the market in general. Now, for example, over the last year or so, largely your mid cap has been flattish to maybe bottoming out. Now, in a scenario like this, if the beta is higher, you will notice that the drawdown on the fund will be more. And if the market does well, it will also capture a higher upside. Now, in HDFC, the beta is marginally lower. Therefore, in a flat to negative market, your HDFC will preserve your capital to that extent if beta is lower. If beta is higher, you will fall a lot more. Therefore, you will lose a lot of your capital. That is beta. Now, standard deviation actually measures the difference of the variability of return over a period of time in simple sense. So therefore, when you are in a fund with lower standard deviation, you are going to experience lesser volatility. Higher standard deviation is a higher volatility, which means the propensity to go up when it's going up and go deeper when it's going down. HDFC and Kotak both have actually very good standard deviation. But here HDFC seems to be doing slightly better, both in terms of beta and standard deviation. Now, the beauty of this exercise is when you take standard deviation and beta, that's when returns become relevant. HDFC experiencing low beta, low standard deviation, higher number of stocks has been able to edge out Kotak to deliver superior performance, which means that is the winning point for an investor. Lower beta, lower standard deviation, yet better performance.
You know, about 6 years back, and this is a last point that I want to raise with you, Santosh. 6 or 7 years back, the argument was made very vociferously to go towards passive for large cap. And I think that a lot of people have benefited purely from the cost perspective, because largely, while active fund managers over the last 18 months might have been able to beat the benchmark in the large cap space, the degree of beating the benchmark is not covered for that cost differential between passive and active. Is that argument getting stronger in the mid cap space as well? And would these two feature in the top list for you if you were to advise people to buy a mid cap fund?
I think you make a very interesting point. What is happening in the mid cap space, considering that number one, we're constrained in what the definition of mid cap is and the long list of stocks. You notice that across the industry, mid caps tend to have a larger number of stocks, which actually is because the universe itself is much larger. Now, most of the guys are not wanting to miss out on the performance of some of the smaller weights. That's why the list of stocks increase. And all of us have this opportunity to participate both in the passive and the active equally. Therefore, the portfolio manager also is aware of that he's fighting against the index and the passives. So therefore, he's also trying to keep his fund as aligned to passive as possible, because the first goal is to beat the index. The second goal is to outperform the index, because you know there is a slightly expensive TER for an active fund versus passive. Now, I think clearly the data is out in the mid cap space that there is space and there is value that the active fund manager or even the active cost of the extra expense that you pay is now justified. This has happened even in bouts, even in large cap. There are points where the passives outperform the large cap. There have been large amounts of time where even in large cap, an active fund manager has been able to not only outperform the index, but also justify the extra expense the investor pays.
And would you say that these two feature in your top list? Quick answer.
Absolutely, yes. And I think for an investor, if you chose either of them, you're great. But if you chose both of them, it's a beautiful win-win. So we're not debating on which is good or which is bad. I think both are great for the portfolio. If you chose any one of them, you're a winner. If you chose both of them, also you're a double winner.
Great. Santosh, thanks so much for taking the time. Pleasure speaking
with you.
Thanks, Alex. Today you also had the Association of Mutual Funds in India that declared the flows data for the month of October, and this is interesting data that came through. So let me take you through some of the headline numbers. On an overall basis, you saw inflows into the mutual funds sector or industry to the extent of 2.15 lakh crore rupees. Now that is a large number, particularly when you put it against the 1 lakh crore approximately of outflows in the month of September. But this is normal because you have inflows at the start of a quarter, in October in this instance, on account of the fixed income mutual fund space, and outflows at the end of the quarter, which is what you saw in the last month as well, in the month of September. What is more interesting is that you had inflows into actively managed equity mutual fund schemes fall off just a tad bit. It came in at about 20,000 crore rupees net of those new fund offers, and that compares with about 29,000 crore rupees in the previous month. In September, there weren't too many new fund offers in September. What has stood out is that the flexi cap category has gotten robust inflows in the month of October to the extent of about 8,900 crore rupees. That's quite stellar. Now, beyond this, you had significant inflows into gold ETFs. That continues, but it's lower than the last month, still about 7,500 plus crore rupees into that category, and also robust into other ETFs, which also include silver ETFs. Why has the inflow fallen off just a tad bit into equity? Well, it could be a very simple reason, which is that the festive season came about in the month of October, and a lot of times you see that people tend to put a pause on their investments during these festivities because of various expenses that kick in. At least that's what industry participants anticipate has happened. The last point is the SIP flows, and that once again is at a record high of over 29,500 crore rupees, and I think that is a good sign as well, because that means that durable money is continuing to come through into the mutual fund industry. This has to do with inheritance from the lens of the woman. It's an important conversation to have, and I'm joined today by Tanya Apachu Kaul, who is lawyer and legal influencer. Tanya, thanks so much for taking the time, and appreciate that you've taken the time to speak to me about this. Do you think
Thank you so much for having me.
My pleasure. It's my pleasure entirely. Do you think that there's a lack of enough awareness about this? And specifically, from a legal perspective, is it important to understand the distinction between male inheritance and female inheritance?
Yes, absolutely. A lot of people are not aware that a male succession happens differently than female succession. And, usually in our culture, families don't really take the trouble to inform their daughters or make their daughters aware of what the law is. But the sons are proactively more aware of things. So I think there's a huge gap in awareness and education for women, especially when it comes to succession, because there is a lot of difference in the way daughters succeed.
Talk about this, because by my understanding it would depend on which law you would fall under, and that, as things stand right now, because there is no uniform civil code, depends on your religion. Is that correct?
Yes. Absolutely. So succession depends on which religion you're from. Hindus have a codified law, which is the Hindu Succession Act. Muslims have their own personal laws. So Shias and Sunnis will inherit differently, slightly differently. Christians also have their own laws because they have the Indian Succession Act, but some parts like Daman and Diu, Goa, some Tamil Christians and Protestants, they inherit differently. They have their own laws. So it's a broad framework of laws, and it depends entirely on which religion you belong to.
Okay, let's primarily deal with the Hindu Succession Act as well as the the Broad Succession Act, the Indian Succession Act. So let's first talk about the Hindu Succession Act. It would depend, by my understanding, Tanya, please correct me if I'm wrong, on whether or not you have an HUF, which is a Hindu undivided family, or not, right? And there are different rules that apply. Can you take us through the salient points?
So HUF is a different entity. Not every family has a HUF. It depends on whether they've created a HUF for their own family. And then we have the concept of ancestral property, which is very unique to Hindus, which is not there in any other law. So ancestral property is any property which is in the fourth generation. So it's come to you from the fourth generation. It has been undivided in your family, and all the family members are jointly enjoying it. There's no partition on paper. So that property is your ancestral property. So I think the biggest confusion, the biggest problem everybody has is they think that maybe their parents or their grandparents' property is their ancestral property, which is absolutely wrong. So that is specific. The HUF is specific, and ancestral property is very specific to Hindus. Also, the most important differentiating factor between the other laws and Hindu Succession Act is the fact that since 2005, daughters inherit as equally as a son. So you have, as a daughter, right to your parents' property, right to your ancestral property equally, just like a son. So I think this is the biggest differentiating factor.
And so that is how it stands right now. From a legal standpoint, therefore, and is that the same for the Indian Succession Act?
No, it's not.
So how does that work? And then we'll get into the nitty-gritties.
So for Christians, the law is such that the wife gets half the property of the husband and the other half goes to the legal heir. So it can be to the children. So here the wife has an upper hand because she gets half the property.
Understood. And how does that work from the Hindu Succession Act standpoint?
So the Hindu Succession Act, the wife, the children and the mother are the legal heirs, the class 1 legal heirs of the husband, of the father. So they inherit equally.
Okay, so in the Hindu Succession Act, when it comes to a woman that is the owner of the property and there is a succession that needs to follow through, does her husband have access or rights to her property?
Yes, absolutely. So if she has passed away without leaving a will, then the Succession Act will apply, and the husband and her children get equal rights over the property. If she doesn't have children, it will all go to her husband. If her husband is deceased too, predeceased, and she doesn't have children, then it will go to any lineal descendants of her husband, which is important to note. And if there are no lineal descendants like a brother, sibling, or parents of the husband, it can go to any members of her husband's family. So there is no property which will go back to her parents or her siblings unless she writes a will. So if she has inherited any ancestral property from her parents, that will go back to her parents' side of the family. Anything that she has acquired on her own will go to her husband's side of the family.
Okay.
So it's important that a woman leaves a will if she wants her property to go to anybody else.
It's important for everybody to leave a will, Tanya, because the question that I have for you is that all of the rules we've discussed so far is in the assumption that there is no will. If there is a will, it supersedes all of this, doesn't it?
Absolutely. The will is the most important document that you can make for your estate planning. It supersedes every other law in the country. Your wishes go into the will, and if it is a proper, valid, registered legal will, it will supersede everything else.
Any pointers that you would have in the writing of the will to ensure that it is foolproof, because this is something that you hear often as well. It can be questioned, and if it gets mired in that legal whirlpool, then it's not going anywhere. You can have decades where it just gets stuck in court.
So the whole idea of a will is you can actually write it yourself on a piece of paper, and you can sign it with 3 witnesses and add a doctor's certificate that you are of sound mind while writing the will. But as a lawyer, I would always suggest people to go meet a lawyer and get it drafted through a lawyer so that it is foolproof as much as it can be, so that it is not contested. And also register your will, because then the copy of the will be with the sub-registrar's office, and it is very hard to challenge a will once it's registered. So these are 2 steps that you should definitely take if you're seriously making a will. So,
okay. Now, in your legal expertise and in your experiences, is there one common mistake that you see women making when it comes to their inheritance that you wish was not the case?
I think the common mistake is they're not even aware that they have access to their parents' property. They have certain rights, and the most common mistake is people just give it up because that's how the society judges a woman if she's asking for property of her parents. And most women are not aware that they get parents' property. So there is this whole contradiction that you're told that you're not going to get your parents' property, it's going to go to the son. And then you're told that you're going to get your husband's property because he's everything to you after marriage. And then the contradiction is that it's the other way around. You actually have legal right over your parents' property and you don't have legal right over your husband's property while he's alive. So, there is that contradiction which a lot of women don't know. And I think culturally they're told that they cannot ask for property. It makes them sound greedy. It makes them sound like bad daughters. I think that is the biggest mistake. We're not even going to the point where they are actively trying to get property from their parents.
Yeah.
So, the issue is stopping right here at even trying to get or trying to make a will. So even now you speak to women, nobody is making a will. Very, very rarely is a woman making a will. And very rarely do women even know that if they don't make a will, all their property might go to the husband's side of the family.
Yeah.
And this is an issue we saw during COVID, right? Because there were couples passing away together. There were families which unfortunately passed away together, and property went on to some random relatives in the husband's side of the family who are not even close to the girl, close to the woman. So it's very important that these things be kept in mind and you actually take care of estate planning, which currently nobody does. Very rarely. Yeah.
Hopefully, we're going to cause a few people to have a conversation about it, Tanya, and that's the objective of this program as well. Thank you so much for taking the time. Pleasure speaking with you. Important topic to talk about.
Thank you so much. Thank you so much. It's a pleasure.
All right, well, that brings us to the end of this edition of Your Money Matters. Tell us about what you would like us to talk about. We're happy to talk about it. Let us know in the comment section and stay tuned. This is NDTV Profit.
Namaste India. As you all know, I've been traveling around the world with my music. But this one is truly special. Something that's India. From where it all began. The first city of the world, where the Ganga flows. I'm coming to Varanasi to perform at the Namo Ghat. My first raga-based band, Jala, will also perform there. So book your tickets from District app and let's create harmony by the Ganga. See you, Varanasi.
The NDTV Profit has come a long way.
You are the new schools and colleges which people are getting access to education from.
ने बढ़िया आपका काम किया, आपके तो नाम में ही प्रॉफिट लगा हुआ भाई.
In the world of money and markets, the real currency is clarity.
So you guys democratize information, and I think first you seeded the market, now the market is seeding you back out there.
Decisive, discerning, distinct. NDTV Profit isn't just business news.
We are like visiting faculty occasionally who come and get a chance to share what we can, but I think it's a great service.
It's the new language of markets, and the voices that move markets know it. Understand markets, decode money through the masters who shape them.
I think we are trying to get knowledge to smaller cities and towns, making it simple for retail investors. I think what you are doing is also contributing to the Indian capital markets and Indian economy.
When leaders speak of markets, they speak to NDTV Profit.
we unveil NDTV Golf Pro-Am, India's #1 golf Pro-Am, the course of champions, the conversation of leaders.
What a stellar lineup we have here on the stage of the NDTV World Summit to announce the launch of the NDTV Pro-Am. Arguably India's greatest cricketer, one of India's most distinguished bureaucrats, a top international golfer and also a top Indian pro at the moment. One administrator who is doing more to lift the profile of Indian golf than anyone has in the recent years.
All the top champions, the Tiger Woods, will all come from India in future.
It's great to be here. Golf is growing across the globe and here in India as well.
Whereas now the opportunities are increasing a lot.
Thank you very much. You're starting golf. We want to thank you.
That's very sweet of you. Thank you.
I think that's very, very important.
The NDTV Profit has come a long way.
You are the new schools and colleges which people are getting access to education from.
ने बढ़िया आपका काम किया, आपके तो नाम में ही प्रॉफिट लगा हुआ भाई.
In the world of money and markets, the real currency is clarity.
So you guys democratize information, and I think first you see to the
Agarwal Packers and Movers Limited. Man with the cap. Not 300, 300, 300.
We have with us exclusively in our studios today the management who is going to be talking to us, Mr. Chanchal S. Rajora, the Group CFO and Advisor at Transform and Rectifiers.
And Director of Finance now.
And Director of Finance. Congratulations, sir. Thank you so much for coming in. Really appreciate you coming in and talking to us about what's happening, because I think it's important to address what the street's concerns are. So let me get straight to the point. The World Bank debarment. What has happened? We saw your exchange filing yesterday, but if you can tell us in detail what the allegations were, what the issue is.
Tamanna, actually this, we were also surprised when we got this letter on 4th of November from World Bank. Basically in 2020, we had done a project with Nigeria, right? And we were part of basically a bigger project which was funded by the World Bank, and our contribution was around $24 million, right? And we had supplied all the transformers and we have received the payment also, right? And we were actually taken aback with this, why this has come up into to us, right? There were some issues with this order on a border level, and then World Bank has last wrote us in 2023 that there are certain changes we wanted to see that is happening in the company or not regarding the corporate practice and us, and we told them anytime you are welcome if you want to see anything. So they did it this as per our information, they did it with all the companies which were involved in this particular project, and after that we never heard anything about from them. So suddenly this has come up, so we are taking up with the World Bank very strongly that why this has come up to us.
No, but the allegation is alleged corruption and fraud. So corporate governance is a different thing. It's not about issues with the order. The allegation is of corruption and fraud. Where do you think that would have come from?
No, we don't know, because we were not at all involved in any kind of these things, and we are very, very clear from corporate practices in our side that we don't tolerate these kind of things if anything
What
comes
is the
up.
mechanism you have to challenge this?
So, we have already mechanisms in place and we are taking it up on that, and at every level there are the controls in our companies in place. Look, understand, if the processes and the governance is not in the company, we cannot be the first company in this country to declare the results in 8 days time, which takes a great amount of energy and great amount of work involved into that.
But specifically on this Nigeria project, you said that it's from 2020.
When was it completed?
Look, this project was completed in 2022.
Okay.
Right, we got the 90% payments of the entire transactions in 2022, and last 3 transformers which we sent them, they were toppled in the port. So we have to basically make the new transformers and send them, which we did in 2023-24, right? And the payment of the balance 10% we received in this year in April itself. So, understand one thing, had anything was there related to us or our practices or ethics, World Bank would have not released this payment to us, right?
Okay.
So,
sorry, please finish your point.
Yeah.
So, okay, what I'm asking is, until this matter gets resolved, you would have, by the way, would love to know how long do you think a matter like this takes to resolve if it gets resolved? And until it gets resolved, are there some current or future projects in that 18,000 crore order book or 18,000 crore order pipeline that you're targeting that you cannot apply for?
Neeraj, and I have an order book of 5,500 crore rupees as on that. None of them is funded by the World Bank.
Okay.
None of bank is related to any of the government entities of the third world countries where the World Bank funds. Right.
Okay.
My 18,000 plus crore inquiry does not contain any such inquiries for us. Right. So financially there is no impact on us.
What about international versus domestic, sir, at this point?
Sir, say around out of this 18,000 inquiries, around 10% is the international inquiries, which is again from the private entities, not with any government entities. And fundamentally, you must have heard to me whenever I came or in my conversation also that we have also stopped quoting to the projects where we have to supply the transformer at the company's site and do the FOR things. We stop that. We are only pursuing for the export orders also, which are either on the ex-works basis or on the FOB basis.
Okay.
We don't do that those kind of things.
Okay, but just one more question on that. How long does it take for a matter like this to get resolved? You would have some consultant or some lawyer for this?
Yes, we are working with some consultants on that, and it may take 6 months to a year to sort out these issues.
What is the impact on new business that you see from this World Bank department? Is that going to be a parameter for new orders at all? Anyone who's coming to you will look at this. Do you see that hampering in that way, or you see no material impact at all?
No, Tamanna, it's not going to give any material impact on us, right? New business is going to be as it is, right? Here, the quality of the product is there, my practices are there, and people have been seen me doing the business since ages. It is not that I just came yesterday and doing the business, right? So the people knows that what kind of the deliveries of this company is this, right? And we are working with all the government entities here also. They also know that what kind of the company work is doing.
So there have been no conversations or calls since this came out yesterday from any government entities or current clients on what does this mean?
No, not that. The people understand this, okay? The investors are has got digitary on this. We have been clarifying this to everybody since yesterday when came. And if you heard, your team was there in our con call yesterday. And before anybody asked the question, we clarify this issue to everybody. Because we are the company, always come up when there is a problem, we always come up that yes, we are here to give the confidence to the people that we are doing the right things.
The Nigeria project, was it a government tender?
Yes, it was a TC, Nigeria Electricity Board supply. Right. Look, all these third world countries where they don't have the money are either funded by World Bank or funded by the ABD or funded by the Exim Bank of India. These are the products like that where there is a policy written by these banks and they have to do the procurement accordingly.
Are you doing a lot? You said that you're changing the kind of projects that you're bidding for, that you're getting into. You're not doing a lot of these anymore.
We don't have anyone.
We don't have any. Okay.
We don't have anyone, and neither we intend to do that.
And was there any? I'm just wondering, what's the genesis of this? Was this some complaint done by the Nigerian government?
Yeah. Not by Nigerian government. Basically, it was a complaint done by some private persons.
Okay, fine.
Yes, on that basis, World Bank took a cognizance. Maybe there are some internal competitors of the local contractors are there, and because ultimately the major work was done by the local contractors.
So you're saying you may have gotten caught up in internal Nigerian politics?
Yes, that's the point.
Okay. So that's a good way. Let me come to the second part of it, sir, which is also your numbers. Since we have you here with us, we'll talk about Q2. And Q2 also looked like a bit of a tough quarter. Can you take us through what the whole scenario was there? Is it because of the lumpiness of the business, seasonal issues, or why did you see, for example, margin sliding?
Tamanna, when you are on a long journey, sometimes bumps comes. And it is good to come the bumps, because if the journey is so smooth, we don't realize the importance of journey. We don't realize that what we are doing and how we are doing.
So it was a bumpy quarter.
Yes, it was a bumpy quarter. There were the couple of issues related to the raw material supplies. The government sometimes comes up with the new policies which creates a problem to us. I'll give you very small very small things that suddenly they come up that since India has got enough copper, you should have the BIS approval if you want to import the copper, right? And it is related to the copper rods what the country is importing, right? We do agree it is there. But you know, we are importing the copper conductors from the different countries to meet out the power grids requirement of the reactors and transformers, because India cannot give the supplies which we are looking for or we want, right? My consignment comes to the port and the custom says that no, you need the BIS clearance for that. It took us 2 to 3 weeks to make them understand. Look, sir, this doesn't come under that preview.
So that happened this quarter.
That happened in the product related to this quarter. So that my considerable amount of jobs got delayed into that. And this particular quarter rains were very heavy.
Can there be a spillover, Mr. Rajara? I think the question is this, right? At the end of the August quarter, on the con call, you had said that margins levels are sustainable. You expect EBITDA margins in the 17 to 18% range.
Right.
They've come in way lower.
Yeah.
Do they revert back to normalcy in Q3 itself, or is it difficult to say that right now?
Q3 will be in the line of the Q1 results.
Q1 results.
Yes, that's right. Okay. And you know, we will have the spillovers around 100 crore or 100 odd crore of the finished goods is already there, which we could not able to deliver because of the rains and all. It is getting spillover in this quarter immediately.
So both revenue and margins stabilize, you saying, in Q3?
Yes.
I want to understand about order book though. There was a 40+% decline year on year in the order book, or not order book, but orders received. Why is that?
I don't think it is. If you see that if you compare to year basis, my order book is almost at the same levels, right? And you know, we have been telling you that fundamentally we are basically working on the orders which are related to our delivery times and our margins. We have been telling from day one now, and we are on those direction completely. We got around 600 crore rupees order of this quarter also, and as we have been guiding that by the end this year we will be having around 8,000 crore rupees of order book in hand. And that's what is our target, and we are working on that. You know, if I keep taking the order and I don't deliver, what will happen? One fine day I'll end up paying the delivery charges, which we don't want to do that. The purpose is that we want to have a sustainable business where we can grow our revenue as well as we can grow our bottom line.
So is it right to say that because you saw these delays on account of raw materials, various other factors, you delayed taking orders that you might otherwise have?
Yes, sir. Yeah. And also, you know, we are more focused on the orders now, which will give me the more margins. Rather than here and there and havoc manner, I keep taking the orders, which I don't want to do that.
So therefore, very quickly, Mr. Rajara, out of time, but net debt-free company in the next 18 to 24 months, the guidance stays. $1 billion revenue target, 3 years, the guidance stays. And margins at 17-18%, the guidance stays.
Yes, all
26, 7 to 18% average margin stays.
Yes, that will be there.
Okay,
will be there. And you know, one point also I would like to mention it here, which is a positive point, which in this quarter has come up. If you see my console books, my subsidiaries are contributing a very good amount of profit to us, which is basically strengthening our view of going on the backward integration and expanding on the transformer components, right?
Are you coming back to 15% margins by second half?
He's saying 18%.
18%, okay. Great.
Not the second half. In coming quarter.
Okay, excellent. There you have it. All right, thank you so much, sir, for coming in. Great to see you take all questions. A lot of time management don't like to take questions from journalists. We appreciate that you're coming in, you're facing our questions which we're asking on behalf of
we are always there, and any time is there. You know, it's our duty to satisfy the investors and the stakeholders, right? And the tough time, if we don't do it, then no point. Right?
No, that's the. I think that's the right thinking that a lot of management should have.
Yes.
So really,
thank you. Thanks a lot, and thank you for having me here.
Let's go across to Mr. Gujral. Mr. Gujral, great having you. Thank you so much for taking the time out and being with us. And congratulations on what looked like a very strong quarter. It beat estimates as well. What led to this?
See, we had a weak quarter in the first quarter because of the negative growth in turnover. This time the turnover has rebounded to 37% growth quarter on quarter. My exports have done very well. All my high margin verticals have shown a very robust growth of 20 to 30%. The railways and all that small base, they have grown even much higher. So overall, the strategy which we had started out to implement last year has paid off. And there has been a good increase in EBITDA margin, overall EBITDA, growth in PAT, PBT. So all numbers are good. And we are very confident that going forward, this will be sustained in the remaining half of the year also.
That's very good to hear, Mr. Gujral. So therefore, double-digit margins possible in the second half. Am I interpreting that right?
No, we had guided 8.5 to 9.
Yeah.
We sort of revisit our guidance to above 9.
Yeah.
Whether it is 9.4, 9.5. First half is 10%.
Yeah.
So typically the second half is better.
Yeah.
But I think we should be able to give north of 9% positively. So whether it's 9.4 or 9.5 or whatever, I think that we can wait for the next 6 months.
Oh, that's excellent, because the street will certainly take cognizance of the fact that you've come in considerably higher than the consensus estimates as well. 8.8% was what was projected for the second quarter. You've managed 10%. I do want to ask, and I'm pretty sure that we'll ask more about the operations, but I want to ask about this acquisition. You've made an acquisition of 60% stake in a company in the defense space. And 230 crore rupees is what you're going to spend now, and you're going to acquire the remainder of the 40% later. Our understanding is that this is only the tip of the iceberg. The opportunity that it provides is quite considerable. Can you give us some color on that? What is the revenue recognition like? What is the revenue potential?
See, as we had already shared, we were looking for inorganic growth in the defense sector because that sector was not in our portfolio. And Telecom is a very sort of reputed company, almost a 5-decade-old company, was set up in 1978, and gives a cross-section of solutions cutting across surveillance, communication, telecom, and other verticals to the armed forces and paramilitary forces. It has a top line of about 200 crores last year. We expect it to grow marginally this year. But going forward in the next 2-3 years, I think with the Telecom management being with us and we being there is a potential of growing this portfolio by the base is small 200 crores. So by about 50-60% in the coming 2-3 years.
Sir, Tamanna here, and fantastic quarter. I see IT and railways as a segment has really fired. Is this a bump or sort of an anomaly, or are you seeing this continuing? What has happened with this particular segment? If you can just throw some light on that, because that obviously has boosted the numbers overall.
See, railways had a small base to a 50% growth, a marginal increase leads to a 50% growth. But we are very focused on railways, and with that sort of objective in mind, we have entered into a joint venture with Elimaster of Italy. So I think in the coming year, and this joint venture will go on stream next year, Q1 of FY27. So I think next year I should see even a better performance in terms of absolute numbers in railways, which this year should be about 80 or 80 odd crores. Next year there is a potential of it going up to 170 to 200 crores or even more, including the joint venture company.
No, so what are the synergies that Elimaster brings on board in terms of, and how do you look at that railway segment pipeline because of this joint venture?
The Elimaster is very strong in railway, high reliability electronics across Europe and other parts of the world.
Right.
And we would be manufacturing for them for the Indian market. And once we are servicing the Indian market, the confidence between the two partners goes up, and it opens doors for us to service the export market in years to come. I don't say it maybe in the year 26, 27, but further down the line, I get integrated to the supply chain of Master to service its global clients. So we have all the railway certifications. So it's an ideal fit that we give them cost-effective solutions in India for the Indian market and also make India as a base for servicing their global demand in the years to come.
Got it. Mr. Gujral, you've made several acquisitions slash partnerships in the recent past, and you've talked about the revenue potential of all of them. You've also got that ECMS update that you've talked about already. 3,800 crore rupees was FY25 revenue. If you put all of these things together, and you're saying that over the next 2 to 3 financial years, you'll see quite a bit evolving, where do you see FY28 or FY29 revenue?
I think FY28, we should be closer to $1 billion. FY28-29, we should be closer to $1 billion.
You stick to 30-35% growth, which means about 5,000 crores of revenue in FY26, right, sir?
FY26, we stick to about 30% of growth. But the orders which we have in hand, we have tied up some onboarded major global customers, which have a potential of giving us $100 million of revenue next year. There are 8 major customers, cutting across verticals, industrial, automotive, communication, power management. We have also signed what you call framework contracts with a couple of our existing global customers.
Got it, sir.
Which have a potential of giving 250 million revenue over the next 2 to 3 years.
Lovely.
So based on this, we are very confident next year would be much better than this year in terms of all the parameters.
Wishing you all the best for that, Mr. Gujral, and looking forward to talk to you again very, very soon. Thank you so much for joining in. In conversation with the management of KPIT Technologies, I'm Neeraj Shah, of course, and we're talking to Mr. Kishore Patil. Mr. Patil, great having you. Thanks for taking the time out and speaking to us. If there is any complaint that anybody could have at the current point of time with KPIT after the Q2 numbers, and they seem to be largely in line, and I'll come to KPIT, the quarter 2 numbers as well, but the complaint can only be that after spoiling investors and shareholders for between 15 to 20% growth every year for the last so many, it seems that FY26 is turning out to be a consolidation year. Would that be a fair way to term FY26?
Yeah, I mean, naturally, the way we have done in last 4 or 5 years, this year, our growth has been below, that lofty numbers, if I have to say, or even our expectations. And everybody knows the reasons, and we have been coming out. So absolutely, but at the same time, I think if the things I can see for them to cheer is 2-3 things. One is the pipeline building and winning has been consistent. Secondly, this quarter, we have also announced a significant large deal, which probably help us to really build revenue momentum going into the fourth quarter or especially in the next year. And as we have said that our discussions with the client, there is a positivity, there is a more clarity about tariffs, and we do believe that there is a positive sentiment, but more importantly, we believe that there are tangible opportunities for us to work on next year.
Now, you've done some interesting things, and a lot of people write to us, tell us about a lot of things that KPIT are doing in their own mind, which could be meaningful. Now, one of the things that came up, actually just the macro question before that, and the macro question is that while you do what you're doing in order to improve or remodel KPIT, if you will, for the future, would there be a string of pearls, inorganic strategy that will continue to add layers and verticals and modules of growth to the existing offerings of KPIT?
Thank you for asking that question. It gives me an opportunity to explain exactly what the growth strategy is and how things will turn out. As you have seen this year, we have invested into 3-4 major areas. One is the CareSoft, which is largely to cost reduction. Also in terms of improving the efficiency of manufacturing. Second, we have invested into NDREAM, which is to improve the consumer experience for clients. which is a main reason for them to compete with the likes of Chinese and new age OEMs. Then we have invested into Helm, which is basically getting some more lead into AI and more into autonomous. So the whole idea for us is moving from services to solutions to, as far as possible, take a larger part of the work, and not only what we bring to the table, but also the ecosystem, and put it together a full solution. And the other part is also out of this, focus on certain products which will help us to build some solutions. So I think this is the basically change we are doing. And if you look at the solution part, last year we have more than doubled the revenues from the solutions. So it is now 18% plus revenues come from solution. So we do believe that this is how we will move forward, and it will improve certainly a value to the client, and of course we'll capture that value, and also we'll do a more share of the work with the client, while with the productivity of AI and the solutions and the products we have, there will be certain cannibalization of revenue. So this is how we are putting the strategy together. Okay. Now the other part is there are other areas, other adjacencies in mobility, whether it is micro mobility, whether it is off-highway commercial, whether you look at defense, some of these areas, some of the work which we are doing, or some of the clients we are working, they are getting into these areas. That's where we can leverage this solution, and that's where we can expand the market. That's how we are looking at it.
So green hydrogen, sodium ion, etc., all of them for part of opportunity for listed KPIT, or would that be under a separate vertical? For example, somebody is talking about Trentar, right, and saying that Trentar, when it starts, could actually add meaningfully to top line as well. Are there some timelines that you're working with these technologies as well?
Yeah, I think to your point, there are multiple scenarios, and we do continue to invest into technologies. The timing of some of the technologies could be very different. In my opinion, currently looking at the state of mobility and the hydrogen or some other battery chemistry will be few years down the line. But if you don't start today, that won't come, and then we will get certain revenues in terms of royalties and the other businesses in terms of integration. So we have started all the pilots and etc. But the core business and adoption will happen later. At the same time, many of the other technologies I spoke about, and I would add some areas like cybersecurity, and I'm sure you have seen that how cyber attacks have impacted some of the OEMs. And some of these things those are the areas where will give us immediate return. Not only that, I think we invested into certain specific technologies which for many OEMs who are struggling in the current programs right now to deliver, how we can really help them to reduce that time. And I think that is again will give us the opportunity. And the markets, I think I always say that China and some of the emerging markets are a meaningful part of our strategy. I think that will give the business in the meantime.
Wishing you all the best for that and more, Mr. Patil. Thank you so much for speaking to us today.
Namaste India. As you all know, I've been traveling around the world with my music. But this one is truly special. Something that's India. From where it all began. The first city of the world, where the Ganga flows. I'm coming to Varanasi to perform at the Namo Ghat. My first raga-based band, Jala, will also perform there. So book your tickets from District app and let's create harmony by the Ganga. See you, Varanasi.
The NDTV Profit has come a long way.
You are the new schools and colleges which people are getting access to education from.
ने बढ़िया आपका काम किया, आपके तो नाम में ही प्रॉफिट लगा हुआ भाई.
In the world of money and markets, the real currency is clarity.
So you guys have democratized information, and I think first you seeded the market, now the market is seeding you back out there.
Decisive, discerning, distinct. NDTV Profit isn't just business news.
We are like visiting faculty occasionally who come and get a chance to share what we can, but I think it's a great service.
It's the new language of markets, and the voices that move markets know it. Understand markets, decode money through the masters who shape them.
I think we are trying to get knowledge to smaller cities and towns, making it simple for retail investors. I think what you are doing is also contributed to the Indian capital markets and Indian economy.
When leaders speak of markets, they speak to NDTV Profit.
We unveil NDTV Golf Pro-Am, India's #1 golf Pro-Am, the course of champions, the conversation of leaders.
What a stellar lineup we have here on the stage of the NDTV World Summit to announce the launch of the NDTV Pro-Am. Arguably India's greatest cricketer, one of India's most distinguished bureaucrats, a top international golfer and also a top Indian pro at the moment. The one administrator who is doing more to lift the profile of Indian golf than anyone has in the recent years.
All the top champions, the Tiger Woods will all come from
Hello and welcome to NDTV Profit. I'm Vikram Oza and you're joining us on The Big Question. And let me begin by setting out the EdTech story in India because that's our focus. Just a few years ago, EdTech was India's most exciting story. When the pandemic shut down classrooms, millions of students, they turned to screens and Bajaj had become a household name. Growth was explosive, valuations were soaring, acquisitions multiplied and global investors were calling it India's answer to Silicon Valley's biggest disruptors. Now, online learning had gone mainstream, and the future of education was looking very digital, quite profitable, and for that matter, quite unstoppable as well. But that dream did not last. As schools reopened, the easy growth seemed to vanish. Bajaj now is, of course, drowning in debt and lawsuits as well. Another edtech major, Unacademy, it has downsized. Investor sentiment has turned sharply skeptical of edtech as a sector. So the question now in this story, can the edtech model reinvent itself? Can it revive itself? So enter artificial intelligence, AI. It's the new force that is reshaping many sectors and it includes how India is learning as well. So definitely our education sector. AI is building virtual tutors and they personalize lessons for every student, also automates test preparation. It generates content at lightning speed. Also what it's doing is it's promising what first generation edtechs could not do at that time, which is scaling with efficiency and also, very importantly in business, profitability. What it's also doing though is threatening the one thing that has made these platforms work, which is the human connection between the teacher and the learner. So today, when we're talking about the PhysicsWallah IPO, which is of course grabbing headlines, we should pause to remember that this story, the edtech story, started with free YouTube lectures. Now we're talking about a roughly 2,800 crore rupee revenue company, which is PhysicsWallah. And now with their 3,480 crore rupee IPO, it stands at the crossroads of two revolutions. One which is powered by human teachers and the next driven by AI. Artificial intelligence is now starting to become at the heart of it. Can edtech companies like PhysicsWallah balance both of these, technology and trust, which you need in education? Is that what it takes to build a sustainable edtech business model in India at the moment, which is our big question today. So yes, AI disruption in many sectors, including education, but is AI disruption a friend or foe to India's edtech sector? In fact, we've been talking about this. PhysicsWallah IPO was at the heart of it. And yes, their IPO is grabbing headlines. So when we were speaking to Prateek Maheshwari about this, the co-founder of PhysicsWallah, he explained to us how he sees it. Is it a friend or foe? We're going to debate this, and we have an excellent panel waiting on the other side. But just listen to what he said when he was discussing this at NDTV Profit Studios earlier today.
So currently it's an amazing friend. AI ने learning को hyper personalize कर दिया है. 4 करोड़ से ज़्यादा डाउट्स AI बच्चों के आज के टाइम पे हमारे प्लेटफॉर्म पे सॉल्व कर रहा है, लेकिन विद 88% एक्यूरेसी, जो कि ह्यूमन की एक्यूरेसी के नियर अबाउट आ चुका है. लेकिन एट द सेम टाइम जो ये मेगा बैचेस हम पढ़ाते थे 4,000 रुपये के अंदर, डाउट सॉल्विंग वाज द बिगेस्ट चैलेंज, जो कि AI ने बहुत हद तक सॉल्व कर दिया है. लेकिन हम सबसे ज़्यादा डेटा जनरेट करते हैं क्योंकि सबसे ज़्यादा बच्चे हमारे पास में हैं, उस डेटा से AI फर्दर एम्पावर होता है. तो वी हैव 100 पीपल team who just works on AI set of things. AI Guru, AI Grader, AI सहायक, ये couple of marquee products जो हमने AI के अंदर लॉन्च किए, जो कि बच्चे बहुत पसंद करते हैं. At the same time, your question is कि क्या कभी AI tutor आ सकता है जो टीचर को रिप्लेस कर सकता है? मेरा पर्सनल ओपिनियन है ऐसा नहीं हो पाएगा, बिकॉज अगर टीचर हमारी लाइफ से रिप्लेस होगा तो दैट विल बी अ वेरी डिफरेंट सोसाइटी. मतलब दैट इज लाइक रिप्लेसिंग पेरेंट्स फ्रॉम योर लाइफ, तो वो तो मुझे नहीं लगता कि नियर फ्यूचर में होने वाला है. पर अगर AI ट्यूटर आता है तो वी आर अ कंपनी इन राइटली पोजिशन टू सॉल्व फॉर इट, बिकॉज सबसे ज़्यादा डेटा हमारे पास में है, इंडिक लैंग्वेजेस से लेकर के स्टूडेंट के पैटर्न्स हमारे पास में है. एंड वी आर द स्ट्रॉन्गेस्ट AI टीम, नॉट जस्ट इन इंडिया बट ग्लोबली इन एजुकेशन. सो वी विल बी एबल टू क्रैक इट.
All right, so that's what we got from Prateek Maheshwari when he was speaking to us about, whether it's a challenge to tackle AI when it comes to edtech sector and how he sees it at PhysicsWallah as well. So with that kind of backdrop, let's debate this with our panel. Let's introduce you to them. For a startup investor perspective, we have Rahul Agarwala joining us, and he's managing partner at Sense AI Ventures, also director at Nimbus Online. We also have an educationist, Aditi Jain, joining us to tell us if AI can truly democratize education and learning. And there they are. Jaideep Kevalramani is also with us. And he, of course, is head of employability, business and CEO at TeamLease. And he's here to give us a larger sense of the edtech sector, where exactly it stands today. Also on our panel, we have Abir H. He's Executive Vice President for Academics, Content and Emerging Technologies at Aptech. It's great to have all of you with us. And let me begin by turning my first question to Rahul Agarwala. When we start off talking about edtech as a sector and the possibilities that AI brings to the table now, is that going to be a challenge for the sector? Because here we are talking about a sector, like many others, which can use AI for its benefit, or perhaps, sometimes you wonder whether it's going to make it redundant. Where do you stand?
Great question, and thank you for having me here. I think the key, so if you look at education didn't change for many, many years, right? I mean, if you got a teacher from the 1900s also into a modern classroom, it was still the same. There's a blackboard, chalk, and that's how teaching was done. But, edtech wave happened, some of the distance education, we're doing PhysicsWallah and so many such examples like Byju's, etc. But you see, even then, teaching it's remained one to many. I think AI offers the opportunity to go to 1:1 because people learn differently. Some students have visual learning, some people have completely different way the same problem can be taught. And also a teacher is constrained by the class size to teach to the middle of the class. So for the top students, it becomes a bit boring. And for the bottom students, they can't really still grasp what he's teaching. So, in the interview, he was talking about doubt clearing. But doubt clearing one-on-one is even better, right? And that, I think, is the future which AI promises us.
What's your sense, Jaideep, from the kind of research perhaps that you would have done in terms of increasing employability, the kind of use that AI has in the edtech sector? Does it enhance the kind of teaching that is imparted on edtech platforms? Or, in your opinion, when you're going to an employer, this kind of, sometimes you wonder what role AI has played in the entire learning that you may have done through an edtech platform like a Physics Wala or any other, because now there are so many of them?
Sure. Vikram, thank you so much for having me over here. I agree with Rahul, it's an accelerator. I mean, if you take a step back, since the core of it is around how edtechs are using AI, edtechs have done two big things for the country. I mean, there is a concept of digitization versus digitalization. Edtechs are bringing in digitalization, not just converting physical into digital. Also, we are trying to solve India's gross enrollment ratio, which is very low, and we need to incorporate that if we want a higher economic output, and also solving the employability issue. Like in the technology space, we've got vibe coding. EdTech is bringing in vibe teaching, where teachers are taking the assistance of AI to teach better, and students are taking the aid of AI to learn better. The conversation in the classroom is no longer about what have I taught and what have you learned. Let's come and discuss what has the generative AI and the large learning models thrown at us. So the quality of the conversation in the classroom is shifting from the impact of memorization to impact of application. And edtechs are playing a role of a glue and a catalyst in this entire thing. The platforms exist. We just now need to bring in the layer of AI. And very soon, next year onwards, we will see AI native platforms in the entire edtech and the higher education space.
So AI native platforms, when they come in, how does that shake up the entire system? Aditi, Jen, you're seeing an evolution over here of edtech. Is there a risk that we could see commoditization happen much more with AI? And the lines between content and teaching, those lines getting blurred, that differentiation may not stand as much.
So to this, I would refer to William Wordsworth's famous line that really touches my heart when it comes to education is nature never betrays the heart that trusts her.
Right.
As long as nature will be inspirational, we will never, ever falter in the field of education, right? Now, AI is not the destination, but the bridge in the path of learning. Right. And as I can lightly say that George Curio said that it can never replace great teachers. AI can never replace, technology can never replace great teachers. But if it is in the hands of great teachers, it can be transformational. Now, the kids of today, as we all know, they are so smart. They are so smart. And they are also at a very, very tender age when they're learning in school. So when we are there and we are using AI, these kids this dependency can actually ruin their vastness that they can reach, the magnitude of learning that they can reach. So this, if it is used as, as an assistance, it's like having an open library where it becomes so easy that you don't have to look for the book. You say it and it's right there in front of you. So when teachers use it correctly and there is no dependency, as I am reiterating, I think it can really assist well. But if we become dependent, our faculties are not going to sharpen. We can, you can never outwit nature. We have the multitude.
That point, one has to accept, Aditi, at this stage, when we're talking about uses of AI, when it comes to education in particular, that bit, Abir seems to be nodding and kind of saying he's in the teaching business as well. So tell us, Abir, from your perspective, the kind of lines that were quoted right at the outset by Aditi, that kind of knowledge does not require dependence on AI. She's quoting from what she's picked up over a period of time. And that perhaps is something we may lose if we have increased dependence on AI. Is that a real risk? And does it change the business model because of it? Because at the end of the day, consumers may make a choice depending on what you're going to be, or at least the projection is going to be of someone who's going through the learning process at the end of an AI-driven module or something that is going to be non-AI driven and more natural, like Aditi is pointing out.
Thanks, Prateek, for having me, and Vikram for having me over here in this call. See, a couple of points which my fellow colleagues has already mentioned. obviously AI will not going to replace any teacher, and it's going to be complementing a teacher, right? Whatever may be the subject. The subject may be, formal education, maybe vocational, and any stream of learning. It has to be complemented because, teachers brings empathy, right? So that cannot be, replaced by an AI model. Yes, AI can be, helping us in mass addressing students' query, because on an edtech segment, since we are, addressing that segment, more student mean more teachers for doubt solving, more operational challenges. So what we can probably look at, the AI layer will actually be used very, very efficiently by edtech, segment by converting the repetitive task into more efficient, workflow. While teacher remains the core of it, the delivery remains the core of it. But that physical essence should be there, whereas the operational, hazards, or what we call it as a repetitive task, that's where AI comes in. So
are we aiming for efficiency over here? Rahul Agarwal, AI, is it going to end up being a tool to, cut costs, boost margins? Because in that sense, we could be confusing efficiency with real education.
Yeah, so one, I think efficiency, of course, AI will deliver, right? But that's a very limited view. I think the key piece, Jaideep, I think, spoke about the gross enrollment ratio. In India, that is the government claims it is somewhere in the 30s. That means there are more students of college going age, which are outside of college than are in college. What about them? Right? They don't have access to any teacher. Our country is vast. We can't even train as many teachers as we require to get, let's say, our gross enrollment ratio to the government target of 50%. So how are we going to solve this problem? When you start looking at it at the macro level, I think AI is the only solution. And when you start thinking of an education system in which AI is embedded, then you'll come up with a different structure. Nobody's saying AI is going to replace the great teachers. But how many great teachers do we really have? I mean, if you go to every school, every college, do you think all of them have all great teachers? I mean, we've all gone through college and school. We'll have a few great teachers which we remember, but a lot of them weren't great. And so what about that?
Right.
So I think we're doing a disservice to the education system by trying to put these, we're saying like, hey, don't change too much. Give me something which you can give me from artificial intelligence, but don't change it too much. But I think we really need to change the education system to benefit everyone. And that is still not happening.
So this benefiting
and
everyone.
That's the opportunity.
This benefiting everyone, and that's where the opportunity is, according to Rahul Agarwal. Aditi, would you concede that much? That you don't have enough tutors, and AI tutors could help in deeper penetration, because still we are talking about the reach as far as good teachers is concerned is fairly limited. If you have to make education more democratized, then we perhaps need AI for quicker reach. Would you give that?
Yes, I said it's become so easy, to have an easy access to a brilliant library. I mean, AI is booted by human minds only, and they put in the database. But what I'm saying is, when we talk of fundamental education, if we need to understand that we can make a growing child, into a bonsai when he has the capacity of being a majestic tree. That's the one point I was trying to reiterate. I'm not trying to say that I'm against technology, but I'm also saying that the kind of intelligence we had while we were growing up, I really say that the kids are very smart, they are tech savvy, they can do better than teachers for all we know. But all we need to understand is this dependency can actually, amputate their growth. It can actually not let them grow to the levels that are unimaginable. Like, you see, another thing is nature never hurries, yet all her tasks are accomplished.
Right.
Right?
Fair enough.
And
so you're saying the speed may not be at the heart of this. Jaideep, speed is at the heart of employability for corporates, etc., who need tasks done in a certain way, in a certain amount of time, need the readiness in employees to be able to get there. And since there is so much of this talk about upskilling at this time and to have the tools of AI, to be able to use it to do a task more efficiently, does that work at cross purposes, and does that kind of change the business model of the edtech sector and what they need to deliver to corporates, to potential employers?
Absolutely right, Vikram. I mean, one of the bigger problems that we need to solve is that of access and affordability. I think everyone is talking about that. And if AI has the opportunity to improve access and affordability, why not? And if it comes to skill development and making sure you have the productivity gains, quality gains, and the time to market gains, it is a great thing. It boosts the employee productivity. It also boosts the overall productivity of the company. One also needs to be mindful of the fact that you need to do it in an ethical manner with respect to intellectual property. So those guardrails should definitely be in place.
Let me ask it, the kind of valuations that are correcting, investor sentiment is cautious when it comes to the edtech sector. About building slower but stronger growth for the sector, can AI actually help companies sustain that level of discipline? Abir, what's your sense on this?
I think it's a pertinent point, Vikram, what you mentioned. In fact, just to give an example, see today AI, everybody said it's used in education core, but when you talk of content development, right, one of the major area we as a company, we are also investing a lot on AI to produce content at scale, which is essentially, trying to, address the cost, because content development in education is one of the biggest costs, right? Whether it's an edtech sector or whether it's an offline player. So there are many layers where, AI is getting involved, which is bringing in, cost efficiency, which is at the end of the day addressing the question which you asked, right? And I think with all the powerful AI layers and the tools and technology which is available, I think overall in education, we will see a lot of cost benefit which is coming in, and how do we use it? See, there are multiple tools, but the use cases has to be binded with how we can run a more efficient company, because cost is something which every company, whether it's an edtech company or any other educational company, is looking at to address it, right? So that's an area where AI will really be efficiently used, and as an educator we always look at how do we utilize that technology.
So let me get the business perspective. Rahul, if you had to choose between two businesses, one that is AI driven in the edtech sector and one that is kind of perhaps using technology but is still got pedagogy at its core, which one would you pick? And you need to explain why in a very short amount of time.
So I only invest in startups that use AI and are AI first. I mean, AI is at the core of the business, and I think it's essential for education. So the answer is very clear. It would be the first one. But pedagogy is going to be part of any AI teaching business anyway. Any education learning business will have pedagogy as a part of it. And AI can adapt pedagogy to the student. Rather than having a fixed pedagogy, you can adapt completely the lesson plan, the curriculum, all the pieces in the education piece change. And to look at it from a cost perspective, today, if you want to build a profitable education business in India and serve the masses, you need to deliver education at a very, very low price.
Right.
How do you become profitable at that price and still deliver really high education, which is not one person teaching 1 lakh students? But how do you get there? So I think there is, there are different paths to the market, and people need to think very deeply about how you can utilize AI to address a lot of the access affordability issues on one side of the spectrum, but as well as quality and content issues at the higher end of the spectrum.
But ultimately, and perhaps I can take this across to Jaideep, ultimately you think AI is going to make education more inclusive and affordable, or are we going to head towards this two-tier system where perhaps only the tech-savvy would benefit? In the ultimate analysis, what's going to stand? Because here we're talking about a physics wala which has a hybrid system and all of that. What's going to stand?
So before I do that, let me add to what Rahul mentioned. You put him in a very pickle.
Yes.
But you don't have to do a trade-off between pedagogy and technology. In fact, if you see, pedagogy has evolved from theory to including case studies to being practical. This is a new evolution where you include AI and vibe teaching as a part of it. So it's evolutionary in nature, not a trade-off between one and two. But to answer your question, Vikram, affordability and accessibility is the game of edtech.
Right.
If we don't bring technology to drop the price points at which high quality higher education can be made available to every youth in this country,
yes,
then we are not solving the problem of employability and the gross enrollment ratio.
Well said. It seems like at the heart of it, education is still about trust and connection. You can't take away that, at least at this stage. I don't know if AI is going to replicate that, and perhaps the evolution of AI is going to answer that question. Should this sector now focus on using AI to enhance, not replace the human touch? And that's going to be an important piece to track and something that we are doing. It's undeniably changed the rules of the game for India's edtech players, from how content is created and delivered to how students learn and teachers, how they engage. Today's debate is showing that technology alone is not the magic formula. Profitability is going to depend on how companies, they balance innovation with inclusivity and how they balance efficiency with empathy as well. I want to thank our guests for joining us. Jaideep Kevalramani, Rahul Agarwal, Aditi Jain, Abir Edge. Thank you very much for joining us with your perspectives on this. Such a pleasure to have you and your perspectives on the big question on NDTV Profit. And of course, all the questions are going to continue. But of course, we'll have to wrap it up over here on this particular edition on the big question on NDTV Profit. I'm Vikram Oza from me and the team. Good evening.
Namaste, India. As you all know, I've been traveling around the world with my music. But this one is truly special. Something that's India. From where it all began. The first city of the world, where the Ganga flows. I'm coming to Varanasi to perform at the Namo Ghat. My first raga-based band, Jala, will also perform there. So book your tickets from District app and let's create harmony by the Ganga. See you, Varanasi.
The NDTV Profit has come a long ways.
You are the new schools and colleges which people are getting access to education from.
ने बढ़िया आपका काम किया, आपके तो नाम में ही प्रॉफिट लगा हुआ भाई.
In the world of money and markets, the real currency is clarity.
So you guys have democratized information, and I think first you seeded the market, now the market is seeding you back out there.
Decisive, discerning, distinct. NDTV Profit isn't just business news.
We are like visiting faculty occasionally who come and get a chance to share what we can, but I think it's a great service.
It's the new language of markets, and the voices that move markets know it. Understand markets, decode money through the masters who shape them.
I think we are trying to get knowledge to smaller cities and towns, making it simple for retail investors. I think what you are doing is also contributing to the Indian capital markets and Indian economy.
When leaders speak of markets, they speak to NDTV Profit.
We unveil NDTV Golf Pro-Am, India's #1 golf Pro-Am, the course of champions, the conversation of leaders.
What a stellar lineup we have here on the stage of the NDTV World Summit to announce the launch of the NDTV Pro-Am. Arguably India's greatest cricketer, one of India's most distinguished bureaucrats, a top international golfer and also a top Indian pro at the moment. One administrator who is doing more to lift the profile of Indian golf than anyone has in the recent years.
All the top champions, the Tiger Woods, will all come from India in future.
It's great to be here. Golf is growing across the globe and here in India as well.
Whereas now the opportunities are increasing a lot.
Thank you very much for starting golf. We want to thank
Well, that's very sweet of you. Thank you.
I think that's very, very important.
The NDTV Profit has come a long ways.
You are the new schools and colleges which people are getting access to education from.
ने बढ़िया आपका काम किया, आपके तो नाम में ही प्रॉफिट लगा हुआ भाई.
In the world of money and markets, the real currency is clarity.
So you guys have democratized information, and I think first you seeded the market, now the market is seeding you back out there.
Decisive, discerning, distinct. NDTV Profit isn't just business news.
We are like visiting faculty occasionally who come and get a chance to share what we can, but I think it's a great service.
It's the new language of markets and the voices that move markets.
जनता जनार्दन को प्रणाम करता हूं।
Bihar ballot locked and loaded. Who has the edge? Trends, twists and turning points. Get set for the NDTV exit poll. You're watching Battleground Bihar with Rahul Kamal.
Hello and a very warm welcome. You're watching NDTV Battleground. Over the next 2 hours, we will get you the numbers from the Bihar exit polls. We're going to be looking at 3 exit polls today, 2 polls tomorrow, and in a moment from now, I'll explain just why. We have a fabulous lineup of poll pundits in the studio who will be helping us understand the Bihar poll numbers. Let me introduce you to our guests right at the outset. I'll begin with Veer Sanghvi is coming back to television after a very long time. Veer, fantastic to have you back. Prabhu Chawla joins us. You've seen him on TV the last few days explaining the numbers, explaining the dynamics of Bihar to our viewers. We have Amitabh Tiwari. He's come back after spending a few days in Bihar. He's joining us now. We have Shubhrashra and we have Kanchan Gupta. What is striking, and that's where I want to start this broadcast, is just the sheer jump in voting numbers. Phase 2, provisional data. These aren't final numbers. Even at this moment, in some polling centers of Bihar, polling is still going on. But just take a look at the sharp spurt in voting percentages. We'll start from 9 a.m. going all the way up till about 5 p.m. for which we have data at this moment. Just take a look at the 3 lines on your screen. The blue line at the bottom is the 2020 voting percentage. The red line above that is phase 1, which in any case saw a big jump, about a 6.5% total jump between phase 1 and phase 2. And the green line above that is phase 3. So if in the 2020 assembly elections at 5 p.m. 52.4% voters in Bihar had voted, that has now skyrocketed to 67.1%. 15% more than the last elections. In just a moment, I'll start pulling out the post-poll data, but Amitabh Tiwari, a 15% jump till 5 p.m. between 2020 and 2025. Bihar hasn't voted so much since 1915, all elections going back to independence. What's going on in your home state?
Unprecedented and very, very difficult to explain numerically and statistically.
Why is it happening?
Also to incorporate the results of this high turnout in an exit poll or a post poll is going to take some time because people are still queuing up. I think Simanchal is the region wherein yesterday you were showing that the highest number of deletions have taken place. People